right, good morning. Welcome everybody to day 3 of the Traders Conference here, excuse me. We are excited for another day of education and learning. Yesterday and Monday were amazing days. Hopefully that you were able to attend those 2 days of training. Learn a little bit about the markets, what's going on. I know I have learned a lot from our presenters so far, so hopefully you have too. I am just going to go ahead and get everything checked out, make sure everything's working, and I'll be right back with you. Okay, looks like everything's looking good so far. So we are looking like we're ready to start on time this morning. We'll be starting in about 7 minutes. My name is Kelly Clement. I am your YouTube host today. I'll be here running the control room, making sure everything's running here on YouTube and Twitch, just to make sure that everything is coming through to you, the YouTube viewers, just fine. So hopefully we don't have any issues today. In about 6 minutes, we'll bring on Jeff Gibby, who is our host for the conference. And our first presenter today will be Scott Brown. I'll show you in just a minute how you can look at the overall conference schedule for the day, and we'll get started with that in just a minute. So stay tuned. Again, we'll get started in about 6 minutes. Thanks. Okay, just really quickly, I'd like to show you today's lineup, show you how you can actually go in and you can see the lineup and register for the event so you can be eligible for prizes that we'll be giving away throughout the day as well. So if you go to metastock.com, that's METASTOCK, as in the name of the channel, you will see this banner right here at the top. If you click on that banner, it will actually take you to an overview of the conference and what is coming up for today. So we're actually going to click on Wednesday, May 18th here. And our first presenter of the day will be Scott Brown. Scott is with MetaStock, and he's going to be talking about a tool inside MetaStock called the MetaStock Forecaster, which is an awesome tool for predicting future price action, which is actually one of the biggest questions we always ask as traders is, well, what happens next? So Scott's going to show you a little bit of that and how you can use that in your trading. Next, we will have Ed Downs. He'll be talking about trading the wave. This has a lot to do with Elliott wave type analysis and looking for waves in the market. So that will be a great presentation. Jeff Tompkins will be joining us along with Jerry Allison, talking about trader tax and how to best situate yourself as in with your tax status. After Jerry Allison, we'll have Peter Dalal talking about swing trading strategies. Then we'll have Jody Samuels and Ken Calhoun, who will wrap up the day for us. And then finally, Harry Kaufman. So we have a great lineup today. So what I recommend that you do is actually go to that metastock.com, click on that link that right there, that top banner, and down here at the bottom, actually register. And when you register here, you'll actually be eligible for the prize drawings that we are doing throughout the day. So make sure you go in and register. So if you register today, you're eligible for prizes today, tomorrow, the next day. You don't have to register every day, just one day. So keep that in mind. All right, let's go ahead and turn that off here. Looks like we're about 2 minutes away from getting started. I'm just going to go check with our presenters, make sure everything's set to go, and I'll be right back with you. Okay, it looks like our presenters are ready to go this morning. So in just a moment, I'll be bringing on Jeff, who will start us off with the day's intro, and then we'll bring on our first presenter, Scott Brown. Again, if you go to metastock.com, click on that homepage banner, it'll take you right to the conference link where you can actually see an overview of everything for the day, tomorrow, and the next day. And if you've missed day 1, day 2, later on, you want to stick around live so you can ask questions, but you can also go back and watch the recordings from day 1 and day 2. Let's see, we're about 40 seconds away. I'm just going to let everybody know that we're just about there, and then I'll be right back to kick us off. Thanks. Okay, let's get the ball rolling. Have a great day of learning, everybody.
Hello, everybody. Okay. Hello, everybody. Jeff Gibby over at MetaStock. Thanks for coming. Welcome to day 3 of our event for the Traders Conference. I hope you've been enjoying it. I hope you've been able to attend all of the days. Welcome. I'm very happy with the way things are going. Thank you for coming. Thank you for attending. Thank you for liking and subscribing on the video on YouTube. Welcome. All right, let's go ahead and read a legal disclaimer. We'll get to our first presenter today. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risks inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So good morning, everybody. Good evening, good afternoon, whatever it might be. Dinesh, welcome. Brett, thanks for coming. Sylvester, Sana, Bobby, Greg. As you come in, say hi. It always helps. We want to see you. We want you to be participating, and we want you to be enjoying yourself. So make sure you say hi. Tell us where you're from. Ask any questions you've got. This is an interactive event. We want you to be participating. So before we get to our first speaker today, I want to say thank you for Stocks and Commodities Magazine for supporting and sponsoring our events. They've been sponsoring them for almost a decade, and they're great sponsors. They've been published in magazines since 1982. They've got 1.3 million almost subscribers, 17,000 articles. One of the things that they also do is if you take advantage, we're going to be talking about like an extended trial for MetaStock and some of the products we offer. If you do any of our extended trials today for MetaStock, they're going to give you 5 free months of basically Stocks and Commodities Magazine. If you spend $300 or more, you're going to get 2 years. So we appreciate Stocks and Commodities. I remember we kind of talked to them a decade ago. We're like, hey, we're going to start these online events, and who knew we'd be doing them for this long. They've been great sponsors all the way. I want to also say thank you to CMT Association, the Chartered Market Technician Association, for sponsoring the events as well. We're pleased. We're proud to be associated and affiliated with CMT. Such a great organization. A lot of the actual speakers that we have coming in and doing events are CMT certified. If you're interested in looking into a CMT certification, cmtassociation.org is a great place to do that. So with all of that out of the way, let's go ahead and just talk about our first presenter today. Our first presenter is a really good friend of mine, the owner of the company, Scott Brown. He's been working here for decades as well. Really one of the nicest guys I know. Such a nice guy, great presenter. Today he's going to be talking about the forecaster. So without further ado, let me get out of the way. We'll get Scott in here. So Scott, how are you doing today?
Hey, I'm doing great. I'm doing great. Hello, everyone in the cyber world. I'm excited to be here today.
Sandra, Dinesh, thanks for coming. Okay. Scott, I just made you the presenter, so I should have popped up a, do you want to share your screen? And the one that I can see is go to webinar. And I can see.
There we go.
Perfect.
That
so this is where
you need to get out of the way.
Yeah, you know where it comes from there. All right, very good. You're up, Scott. Oh,
okay. Everyone, it is so great to be here today. First off, Jeff is not getting enough love, or Kelly Clement, who's in the background of this event. It takes so much work and energy to put an event on like this. This is so much work, and Jeff has done a great job. I mean, I guarantee all of our individuals, it's in the hundreds and thousands of individuals that are watching this, and how appreciative they are learning more and more about this. And it is amazing how the technology today is really helping us out, doing this. And as Jeff said, it's a good morning, good afternoon, and good evening, and probably middle of the night for some of you. So it's really cool. I wore my MetaStock t-shirt today, and this is pretty funny. And the reason why I wore it is last night I went to the chiropractor, and as I walk into the place where it is, there's a lady at the front desk, and I have a MetaStock t-shirt on, and she goes, "I've got to get my son one of those." And I'm like, "Oh yeah," wondering if she's a trader or what she's doing. She goes, "Yeah," she goes, "My son is so into that metaverse, And when they see the MetaStock, and I just started laughing. I'm like, well, MetaStock's been around for about 40 years. And it's really funny. As a side note, now with our Google searches, since Facebook went to Meta as the holding company, much like Google and Alphabet, MetaStock, as you can imagine, our Google searches are through the roof now because everybody wants to see what the Meta stock is doing. So it's pretty funny to see that happen. So that's why I'm wearing my loud and proud MetaStock t-shirt today. A little bit about me really quick. Scott Brown. I've been with the company for well over 20 years. I started out in just inside sales, and I became the president of the company after quite a few years. And then our former owner of our company was Thomson Reuters, and they wanted to sell us. And at the time, I was the president, and the individual I was meeting with was what used to be the head of trading at Deutsche Bank. And I met him in New York, and he basically told me he was going to sell MetaStock. And so I said, can I buy it? And he said, sure. And so believe it or not, MetaStock has been independently owned for 9 years. And that's amazing. So cool to see that occur. And it's a lot because of you, our customers, and people that are interested in the market. And it's just awesome. So thanks for making this guy's dream come true in the state of Utah. And thrilled to be here. So without that, let's get on to some things. As Jeff had his disclaimer, I also have a disclaimer that we're going to go into. And that disclaimer, obviously, this demonstration is designed to instruct you on MetaStock. And it's really the same one, the disclaimer that Jeff just wrote. So there's no guarantees in the market, right? We're not recommending it to buy or sell. And so as we go through this, you got to make sure that you're using your common sense in your approach to trading. And if you're doing that, you're going to have a lot better shot at success, right? So let me move some of this over to this screen. There we go. So let's get this party started, right? Let's talk a little bit about MetaStock. First up, we talked a little bit about technical analysis of Stocks and Commodities magazine. They do a Reader's Choice Award, and I can't believe it. We have won that 29 years in a row. Pow! How about that for you, huh? You'd think we'd be buying it if we did it that many times in a row, but we didn't. And it's pretty cool, pretty exciting that we were able to do that. Another thing, when you hear about MetaStock, you think, well, you can only trade stocks, right? Now we can trade stocks, futures, fixed income, options, cryptocurrency. We can do all the analytics on that. So in fact, in today's presentation, I'm going to be looking at the E-minis. We're going to be looking at stocks, and we're going to be pulling up Bitcoin. And me and Jeff were giggling at the beginning of this because you remember that Super Bowl commercial. I'm a millionaire. I'm not a millionaire. I'm a millionaire. I'm not a millionaire. And I'm sure a lot of you, if you had some of that cryptocurrency, you were a lot wealthier about 2-3 weeks ago than you are today, unless you got out of that. So anyway, we'll be talking about some fun things. So what does the MetaStock Forecaster do? I'm going to give you a little bit of background on it. The MetaStock Forecaster was created by a gentleman named Ken Hunt. And Ken Hunt has been with MetaStock, I want to say, about over 35 years. And from what I know, he was the first programmer in the world to actually create backtesting in software. And so if you like to do our system testing, from Kelly's great presentation yesterday when he went over the power tools, you really need to thank Ken Hunt. And Ken Hunt, a few years back when we were owned by Thomson Reuters, they wanted him to just create a chart. And he did not just want to create a chart. And so he finally came to him and said, I'm creating all these cool things. You don't care about them. I'm going to move on. And so for about every 6 months, Ken Hunt and I would go to lunch. And when I found out I was going to buy MetaStock, I gave Ken a call. And I was like, hey, Ken, we're getting the band back together. I need you to come, and I need you to come work at MetaStock again. And somehow I convinced him to do it. Probably the best sales job I ever did. And what he had been working on for about 3 or 4 years on his own was the forecaster. And so what we're going to do is we're going to show you today how this MetaStock forecaster works. And it's really an amazing piece of technology. There's things in this that we are the only ones in the world that do. And we've put a patent on it. And you're going to be really excited about it because technical analysis really analyzes the past. And the MetaStock forecaster looks into the future. Into the future. So that's the type of thing that we want to, kind of analyze as traders. We want to see where things are going. Now, let me be very, very blunt, very upfront. It's not always right, and this isn't perfect as any software is. If anybody ever tries to get your ear and say, hey, I have the perfect trading system, it's always right, you need to run, because there is no such thing, as a perfect trading system. And a lot of you out there that are trading understand that and definitely get that. So with the MetaStock forecaster, we can draw our own patterns. We can copy patterns directly to the chart. We can rank recognized events. We can choose the time frame that we're looking on. If you want to do an end of day or more of a real-time one, there's more event recognizers in there. And I'm going to get into the software, and we're really going to kind of dive into it. And you can actually rank them, the different trading systems. And one is the different rankings we have in the forecaster for those trading systems is you can rank all those trading systems based on the following. Anything from a highest profit potential, most accurate forecast cloud, pronounced current breakout, those types of things. So right now we're looking at a little bit of the forecaster, okay? And you know what? Let's dive into the software. That's going to be a lot more fun than going through a PowerPoint, right? We're going to skip a lot of this PowerPoint, and let's dive into it. So in MetaStock, I just opened MetaStock, and this is what it is. And I actually wanted to highlight this. We just released MetaStock 18 just a couple months ago. And, this will pop up to tell you what's new in MetaStock. And for all of you that have not upgraded to MetaStock 18, it's time to get with it, right? It's time to push forward, get off your Commodore 64 computer and move into the future. Because look at all the cool things that we have done in MetaStock 18. We have a whole new charting object. And look at all the things that it comes with. Are you kidding me? That should be an upgrade by itself. And then we put in standard custom indicator updates, drawing tool updates. Are you kidding me? Option scope. I feel like I'm in a infomercial. And that's not all. If you look now, we have some on our option scope. We have more in the quote center, the power console, new systems, downloader, and a lot of bug fixes. So, hey, if you're not on 18, you need to chat in right now, call in, and get your MetaStock 18. So when you're in the forecaster, the way you get to it, it's really simple. You can come in here and you can either click right here on the icon, or you can click on the power console, and it will, or you can also click on tools. So there's 3 ways to get to it. And then what you can do is you just click on the forecaster and you type in the instrument that you want to analyze. And I've already done that. I came in a little early this morning. I know, don't faint. And we're going to be looking at the first one here is Microsoft. And so this is exactly what your forecaster will look like inside of MetaStock 18. Again, if you don't have MetaStock 18, you're going to want this because we have so many great upgrades. And everything I'm looking at today is in MetaStock 18. So the recognizer library, it's this tab up here. I click on it. And as you can see, here's all this trading systems that are included with the forecaster. Okay. So I've selected all of them. And since I selected all of them, when I bring up a stock, right here is Microsoft, it will identify Microsoft. And then what it does is it will show every one of those trading systems right here. And then remember how we just talked about how we can sort all of these trading systems? Well, right under here, under processed recognizers, I can come in here and say, well, I want to look at the highest profit potential. It will now sort every trading system based on the highest profit potential. I could do long only, short only. I can do the most pronounced or most accurate current forecast. I can do the most pronounced current breakout, the most distinct forecast cloud, the most recent event, the most events, or a recognizer name. And the one that we're going to look at is the most accurate current forecast. So we can click on that and we come in here and it will show you right away the different times that it's occurred. So it says most accurate current forecast and it sorts them. And let's go ahead and look at the MACD cross up right here. Okay. With the MACD cross up is you can come in here and you can actually, the really cool part of this is we're going to look at a forecast cloud. So let's go quickly back into our PowerPoint and we're going to look at the forecast cloud or the probability map. The probability map or the heart of the forecaster is the probability map. The colors represent the tendency of prices to congregate at a specific level after, a certain amount of days have passed since an event. The more intense the color, the higher the probability that prices tend to congregate in that price zone. So what does the probability map suggest? Where are prices going? How long will it take to get there? What is the direction of price? Is it long or is it short? And what should my price targets be? So let's jump back into the software and let's pull up a probability map. Now, my probability map, I can look at a 30 bar, 90 bar, or 180 bar. And every time you see one of these yellow triangles, it means an event occurred. And so a MACD cross up occurred every single time one of these yellow triangles are on the chart. See? And so I can come in here and I can say, hey, let's look at a 30 bar one. And if I click on it, it will show a cloud. Now, the probability colors are this. If it's yellow, there's a high probability that the price will go through it. Now, if it's a darker red, it's also higher. And you can see the probability scale right here. Now, you can also do the cloud intensity right here. And you can say, well, I want it to be kind of low. I want it to be high. I like mine to be high. Okay. So right here, I can click on the map. The last one that occurred was February 25th. And it shows you that, 30 days from now, right here on February 25th, an event occurred. Now, with this yellow coloring in here, it is a high probability the price will go there. Now, think about this. If you're a trader, what type of trading would this be really helpful in? Well, one, it'd be helpful in pretty much all of them. But one that really comes to mind for me is option traders, right? If you could go out 30, 90, or 180 days and find out where that price is moving, look at that. The 30 days, it came right through the trade. So, right here, it's around 310. And if you knew it'd be 310, and when the event occurred, it would, we were trading at, let's say 290, and you thought it might go to 310. Hey, you may have made some money with an option trade, right there. Now down here, it's going to be loads of statistics. Now, when Ken created this, he used several things, so many algorithms, so many different math methods, Boolean math, and all these things that, to be frank with you, I don't even understand, obviously everything under the covers and how this is worked with every single algorithm in there. But this statistical report will tell you a lot of valuable things. Now, the interesting part of a chart, and when we're using the forecaster, we need to have at least 5 of these event markers for it to draw a chart, because it's going back and it's looking at the historical, what's occurred, and then it's viewing the price as it moves forward so that it can create an absolute cloud to show you where it's going to go. And so when you see these event markers down here, it'll say, hey, the event occurs 22 times between May 19th, 2017 and May 17th, 2022. Tells you the first event, the last event. On average, the event occurs every 50 bars. The recent frequency of the event appears to actually be decreasing with the MACD cross-up. Recently, on average, there have been 1.435 events for every 100 price bars. Then it goes in here, it says the shortest gap is 7 bars, whereas the longest gap is 164 bars. Statistically, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 1.7% higher, with a standard deviation of 0.0374. The statistical margin of error is approximately 21%. The more event markers you have, the more your margin of error will actually go down. So when I'm looking at the forecaster, I do not like to look at some of these when there's not that many events, okay? So if I click on some of these and, you're seeing some with maybe 11, 21, as you can see, 8 of them, it doesn't have the historical data that it might need to be, really accurate. And it's so funny, as I say that, look at that. I literally just clicked on one, and this is about as good as it gets. Look at this. On event 4 and 90 bars out, look at that. That's insane, right? It's at 140, and it says it's going to be yellow right here. And that's what we're looking at 2-3 months later, and it's at 160, whereas when we started this, we were at 140, so you had a 20-point gain there. Again, if you're trading options on Microsoft here, boy, what an opportunity to get after it. Boy, that's a good example. You can also look at 180 bars into the future. So when you're looking 6 months out there, it can be a little bit tougher, obviously, to pinpoint that forecast. It did say it would go up, but it went up a little bit more than what the forecast cloud said. Pretty cool stuff. Well, let's analyze something else. Let's look at another stock, right? Let's come in here. Let's look at Amazon. Let's come down here, and instead of looking at the most accurate current forecast, let's look at the most pronounced current breakout, right? And let's look at a moving average, 50 cross up, and let's look at this right here. So if we come in and we're looking at Amazon, we see it, falling off, and this could be really tough to see here, because, and this is why I'm bringing this up. One of the tough things that we're looking at here is a 30 bar. Now, this is pretty cool, because look at this. The stock historically, as we've all seen, we all order on Amazon, right? And Amazon has truly revolutionized, the marketplace and the internet and what we can buy. And I mean, But we come in here on a 30 bar and we look at this, and it's, you know, it's pretty accurate for the most part. It comes out and we can see that cloud, you know, right there as it's coming through, and it's pretty impressive. Let's look at something. Let's look at the E-minis. I guarantee I have some E-mini customers out there and individuals that are doing E-minis and looking at those. So let's take a look at the E-minis. Now remember, all of these recognizers right here in the library are being scanned every time we bring up a stock or a future, commodity, cryptocurrency. We're getting to some cryptocurrency next, guys. Don't worry. It's coming. It's coming. You better put your seatbelt on. We're getting a little crazy in here. So right here, we're looking at the E-mini. And this one, we're going to actually look at, let's look at the most recent event. So we're actually going to be looking at an event that's occurred, you know, pretty close. We're going to be looking at the, let's look at the candlestick bullish engulfing one. Let's do this. Let's get this out here a ways. And as you can see, we've had 21 times on this one. So for all those traders out there that love to trade candlestick patterns, here it is. And this is showing us that the most recent event for candlesticks bullish engulfing is right here. And you can say, hey, out of all those 80 trading systems, this is the most recent. And I want to take a look at this. I want to look at it for a 30 bar. I want to look at it for a 90 bar. I want to look at it for 180 bars. It's crunching an enormous amount of data there. And if I come back here, the cool thing about our probability cloud is we can come in here and say, hey, if back on event 7, let's take a look at what would have happened in 180 days. Now, every time I click on an event and do this, it will actually create the same cloud that would have happened at the same time on that date. So on event 9 on October 30th, 2018, it's the same cloud as I'm clicking right now. And what's really cool is look at that. You know, 5-6 months out, it actually went right through the cloud. So again, even though the cloud splits, this one has a lower probability. This has more color in it. So there's a greater probability that the price will actually move through this. Now, these images are static images. So it never changes. Now, right there, next to price, volume, and event markers is what we call the forecast cloud. And when Ken was building this, we were like, hey, this is really cool. Why don't we have the capability every time we get a new bar, the cloud evolves, right? So instead of having to wait for event markers like this, we could actually come here to the end, and instead of looking at that cloud that is always going to be the same, we can click on the forecast cloud. Every time there's a new bar that goes in, it will actually update this cloud in here. So if you're in a trade and you got in because of the forecaster, let's say candlestick bullish engulfing, every day you could come in here and look at the forecast cloud, and you could analyze where the price, you know, is going to be moving based on the forecaster. Now, again, is the forecaster always right? I've said this twice already in the presentation, but I want to be very clear to you. No, it's not always right. But, you know, it's something that, as I'm showing you, it has definitely potential and probability to show you where that stock is moving into the future. So that's what this forecast cloud does. It's very innovative. It shows you where it's moving with every new bar that actually comes into it. Now we're moving on to something even bigger. There's a lot of people in there. Like I just said before, I'm a millionaire. I'm not a millionaire. I'm a millionaire. I'm not a millionaire. We're heading to cryptocurrency, people. We're moving to Bitcoin. Bitcoin is what we're going to look at now. So here's a chart of Bitcoin in the forecaster. So first off, I'm going to give you guys a tip, right? This will probably be the best advice that you will get over the whole week of this. So we want to buy here and we want to sell right there. That's it. That's it. I probably should have done my presentation in only 10 seconds. Anyway, I'm just kidding. We all wish it was that easy, right? Right here is a chart of Bitcoin. And as you can see, it shows you back in 2019, 2020, what it's done and where it's gone and those types of things. And obviously it had that massive run during the COVID times. And now it's kind of moved up and it's done really well. It went above, 60,000. And now, it's come back down pretty hard. And what's amazing is let's talk about this for a sec. Different individual securities, they come down usually much faster than they go up. And as you can see in the chart here, that's what we're looking at here. So on Bitcoin, we're actually looking at the most events. That's what I kind of wanted to look at here. And what we're doing, as you can see in here, there's things from like a 52-week high, CCI, overbought, oversold, trend surge up, and CCI oversold here. And then there's a CCI overbought. So I want to look here at the oversold. And we're going to kind of zoom it in here. We're going to say with the most events, there were 49 times this occurred. And we're going to look at a 30 bar. And as you can see, that specific probability cloud is now, moving into the future here. Now on the bottom here, it's really cool. It'll show you how many bars and what we're looking at into the future. So right here on that line, that's 18 future daily bars that we're looking at. Let's say we wanted to look back here where, before, if it was trading out here at this one, it was at 40,000 there, over the specific time period of a 30 bar. Look at that. It really followed that cloud pretty closely. Let's try and get that a little bit bigger. Let's do a 90 bar probability cloud. As that's calculated, I'm gonna take a little drink. Wow, look at that. So right here, it goes through it, but then it says, look, it's going to go down a little bit, as that 90 bar outlook. And it was even below that, 180 bar. Wow, it just looks like kind of a straight line there. So I don't feel like I got too much out of that one there. But as you can see, we can go back here and you can say, well, back on February 8th, what was 180, days going to look like? We can click on that and it kind of will zoom that in and show you that, hey, half of it was accurate. The other half, not so accurate. So there's some things right there. Now I am going to show you something really cool inside of this. So inside of the chart here and what we're doing, how many of you are sitting there and you're saying, I love to trade patterns. And I can't tell you how many times I've done this for 20 years. And I've done hundreds of presentations of MetaStock. And I get this question, some guy will raise his hand and say, do you have this specific pattern inside of MetaStock? And a lot of times we do, but of course there's so many patterns out there. We don't have every single pattern. So I'm going to show you something so cool here. If we go into our recognizer library and we come here to draw a new pattern, I can come in here and name it. And let's name it after the one and only Jeff Gibby. This is going to be thin. Oh, I even like this better. Not just Jeff Gibby with the Y, Jeff Gibby. Come on, because he's a buyer. He's a trader. So I can take my mouse. You're going to love this. This is insane. And I can draw a pattern. So a double top, right? Look at that. I just created a double top inside our price pattern editor. I can take any of these specific circles and I can manipulate those. Okay. I can also invert it. I can reverse it, you know, however I want to do that. So I can come in here and say, wow, I'm going to go with that double top. We're going to name it Jeff Gibby. That's your new nickname, Jeff. I love it. Let's go. So then we're going to save it here. And you can draw this and change it. You can manipulate it. In here, I can say approximate bars. It's going to look at 15 bars. Maybe let's close that down to 10 bars. Price match sensitivity, that means it has to be within about 75% of that pattern match. The detailed focus, how about we look at, I can choose 90, 30, or 180. I'm going to choose 30 bars. So now let's unselect all the bars, and we're going to come down here. We're going to go find the Jeff Gibby awesome system, and we're going to rescan the selected analysis right here. And we're looking at the E-mini on this one. And guess what? It says, hey, Scott, you're an idiot, and your specific pattern didn't get anything, which is fine. It just means, hey, you know, there's nothing on my pattern on the E-mini. Okay, so now I got something just as cool for all of you out there in the internet world. So right here, we're going to zoom in. How many times have you said to yourself, hey, these 5 bars here, it's my setup, right? And if I could look at those 5 bars and create a system on those 5 bars, look how easy it is for me to create a system. We're going to select maybe these 5 bars right there. I select those. It says, great. Do you want to capture the chart pattern? I pre-selected user-defined pattern select. I say yes. And what it's saying here is I'm going to create this pattern for you. Well, since we've already have the Jeff Gibby, we're going to have the Kelly Selment system, right? Kelly, I got you there. I got you a new one. So right here, I come in and I'm going to save it. And I'm going to rescan that specific pattern on this chart here, on the E-mini. And let's see what happens here with the Kelly Selment. Ooh, look at all those, guys. Holy cow. It occurred 203 times, that pattern. And as I come through here, it says 91, 80, 85, 76. And I can come in here and say, let's first start with a 30 bar. Come in here. It'll show you what's going on with a 30 bar. I can come in and look at a 90 bar. Look at that. Oh, the Kelly Selment. We're gonna do well. So as you can see here, look at this. And like I said in the beginning of my presentation, the more events you have, the greater probability that you have into the future. And look at this. It shows you that bright red for, man, it goes out probably 60 days right there, and the price moves right into it. Let's try 180 bar. Wow, look at that. So cool. So cool. So that's, you know, creating your own specific one. Oh, this is perfect. This will identify and show you. So it has so many times it's been going up that when it had that most recent decline and I try to do 6-month pattern right here, it, back then the forecast would that it would ride out here. But no, it's gone down there. So that shows you. Again, the forecast cloud, but look at this, how cool the forecast cloud is, guys. So right here, it was showing us that it would go out because that's a static image. And 6 months ago, that's what it was looking like. But remember the forecast cloud, every time we get a new bar, it recalculates. And look at that. And so it shows you that it's declining right there. Boom. Way to go, forecaster. Okay. So now we have something really cool. Let's say that you're looking in and you want to explore specific forecaster systems that we have in here on our recognizer, right? All of these specific ones right here. Well, you can go into MetaStock and you can actually scan those. You can scan the market and we can look at them right here. So the moving average 50 cross up, let's go ahead and select that. We've been looking at that today. Let's look at the NASDAQ 100 and we're going to start an exploration. So here's an explore. It's looking at if any events have occurred, right now on the moving average 50 cross up. And that scanned through those pretty quick. We have Ross stores. Let's take a look at the Ross. Who isn't going to go shopping today, right? So what we'll do is we're going to bring up ROST.O. And let's bring up a chart, or actually the forecaster. ROST. You know what? I want to show you something cool. Let's go to chart and show you how to open it from a chart. So let's say you're analyzing a chart in MetaStock. And I come in here and I can go forecaster, and this will automatically bring Ross into our forecast analysis here. So let's look at the moving average cross up here, because that's what we just scanned on. Look here at the most recent events. And right there, you can see it, come right through. And then you can, look at this. You can look at the specific clouds. You can go back in time and do that. So it's a really great tool to see. So let's quickly kind of review what we've discussed. So MetaStock Forecaster takes technical analysis, looks at all these historical event markers, and creates probability clouds that go into the future that can help you to decide, when to get in and out of the market. And so that can be a great thing. You can also draw your own patterns. You can also highlight the bars like the Kelly-Selmont indicator, and you can you saw how well that performed. So that was pretty cool. Or you could create the Jeff Gibby pattern that I did. And so this is patented, right? This is something that our users love. Everything I'm using is in MetaStock 18, as we went through a lot of the things in the beginning. Let's keep going through, a little bit of the presentation that we have. So as we come down here, anyone that's using this, we have tons of information on our website, okay? Tons of information. And everything from we have an amazing YouTube page. If you go out to it, you can see just so much information. In fact, let's go there real quick. And you can actually go out there and find so many things on the forecaster. This is where we put, and we've had, millions of views out here. And so if you're a trader, and I know Jeff is putting this live out here. See, it was just live right there. If I click on it, I could wave to myself on Facebook, or on YouTube. But in here, you can go in and you can see all the different things we've looked at, and you can sort here and do a search about, hey, let's search on the forecaster, right? And we can learn more about it. Look, there's an introduction to the forecaster. Look at all these different things. So even though you've just gotten a little taste of it, there's so much support that we can get. And you can call in. Our support is the best in the industry. We send out a survey if you've contacted support. And in the 20 years I've worked here, we've never got under a 90% customer satisfaction. Also, the Kelly Cement, right there, that's Kelly, the man that runs MetaStock. He creates the Unleash the Power of MetaStock, and we'll give you one of those free if you upgrade to MetaStock or you're a new customer to MetaStock. So here's our offer today. We've won 29 years in a row the Technical Analysis of Stocks and Commodities magazine Reader's Choice Award, right? With this, we've just gone through the forecaster, and we are going to give you an insane offer, right? Insane offer. And we're going to give you buy one, get 3 months of either MetaStock Real Time or MetaStock Daily Charts. It starts as low as $59, and that will get you exactly what I went over today inside the forecaster. And I'm thrilled to be here with you today. I love doing these. Again, Jeff, Kelly, great job. You guys are legends. But I'd be happy to take any questions, Jeff, if anybody has any. I don't know if maybe Jeff hears me.
Hello, Scott. I can hear you. Can you hear me okay?
Okay. I can, Mr. Jeffrey Goodbye.
Sometimes I just have a hard time hitting the mute or finding the unmute button. We don't have a lot of questions, but if you do have questions for Scott, let me know real quick.
Okay.
One of the questions Kelly and I've always had is, what kind of product do you use with your hair?
It's true. I mean, it's kind of a light pomade that I go in. I'll tell you what was embarrassing was seeing that first picture you had of me. Because at the time, individuals, I was like exercising, doing some triathlons. I'm down a little bit now, but at that time, I looked really good, and now I look like a bee stung my face. I mean, that was pretty messed up, Jeff, to do that to me.
All right. Sorry about that, Scott. Well, that's good job. Thanks for coming in and starting us off today.
Yeah.
And,
thank you so much, guys.
All right. Very cool. Thank you, Scott. There's a question that came in here, and I will actually address that. But thank you very much, Scott.
Because you're an expert.
Heck yeah. All right. There we go. Let me go ahead and make myself the presenter. Yeah, so you get, Richard, the offer that we're going to go with today is buy one, get two free. So let me go ahead and make myself the presenter again real quick. I'll just kind of go through a little bit of the pricing and kind of what's entailed with that. And, okay. All right, there we go. All right, slideshow was not participating. So Richard, thank you for your interest in that. Basically, with MetaStock, we have two versions. We have a real-time version and a DC version. And with the real-time version, basically, it includes MetaStock, which includes all of the stuff that Kelly talked about yesterday with the ability to do system testing and scanning and the expert advisor. And Scott covered in great detail the forecaster. In addition to that, our real-time version includes a program that we call MetaStock Zenith. And with MetaStock Zenith, what you're going to get is a program that basically is an institutional quality newsfeed. When it was owned by Reuters, they spent about $1 billion creating it. It then became part of Thomson Reuters. Now it's owned actually by Blackstone for a minute, and now it's actually part of the London Stock Exchange Group. And it's basically this news product that I'm talking about is a product that they spent over $1 billion designing, and it's one of the best products I've ever seen in terms of getting news and fundamentals and data. Just to kind of give you some numbers on that, they spent $1 billion creating it. It's supported by over 2,000 different reporters, full-time different, I don't know about full-time, 2,000 reporters in 200 different news bureaus around the world. And it's literally a product and news that are the same data that is used by hedge funds and institutions to decide on what you want to get. So with that one and the real-time product, $210 a month will get you access to that, any of the data that you need. And what we're doing with that is if you buy 1 month, you can get your second and third month for free. Okay. Now we also have a DC version. The DC version, if you're in the US, is $69 a month. If you're anywhere overseas, it's $59 a month. And what that is going to do is it doesn't include that news feed, but it includes the forecaster that Scott just talked about, the MetaStock program, the tester, the scanner, basically the product that's been rated #1 in its price category for only 29 years in a row. So that's $69 per month. That'll include MetaStock, all of the data that you need to run for whatever region that you might be in. And with the data, we actually do cover just about everything. It's kind of insane. We have over 200 different exchanges and hundreds and thousands of instruments that you can actually look up. We get a lot of customers in India. We've had a lot of viewers in India as well. London, Australia, Singapore, Hong Kong. These are all huge markets for MetaStock, and we offer all of the data as part of it. So $69 per month for the DC version. And what we're doing today is if you buy 1 month, we're going to give you that second and third month for free. So we call it an extended trial. You just pay for 1 month. Our goal is to kind of get you going with it, to get you started with it. We figure if you try it out, it's going to be something that you like, you know. And so what we're going to do is, we'll set you up for MetaStock. You get 3 months. As part of that, you're going to get MetaStock. You're going to get the data region of your choice, whether that's North America, Europe, Middle East, and Africa. Asia Pacific is the other region. So you get all of the data for all of that region. We're going to provide you with a white glove installation appointment. And what that is somebody will give you a call. They'll help you install it if you need it. They'll help you answer any questions that you've got. All that stuff is going to be included. And in addition to that, we're going to give you some training. We call it Unleash the Power of MetaStock, where it walks you through the forecaster that Scott just talked about. How to run system tests and scanning and all the powerful tools in MetaStock that have helped it been rated so highly for so many years. But in addition to that, some of our favorite systems like the RMO system, all of those are included in that training system. See, our bet is if we can kind of help you get started, and it's $69 a month over 3 months, that's like less than $30 a month, right? Our bet is if we can get you going with it and we can help you with getting it set up and running, you'll be a long-term customer. It's like so many of the customers that have been using us for decades after decades after decades. And a lot of us, we had a guy in here yesterday that said, hey, I've been using MetaStock since version 4 or 3. A lot of our customers have been with us for such a long time because it's such a valuable tool. For me, I love the ability to go in and just say, okay, well, it's time to trade. Let's go on a little bit of a market scan. Let's find out what opportunities exist. And I literally, as I've said over and over and over again, over the last few days, I literally do that every day. And it takes me like 10, 15 minutes to identify the trades that I want to do and look at any positions that I've got and make any decisions that I want to make. So it's such a valuable tool to help you get going. So buy 1 month. We'll give you that second and that third month for free. I'd encourage you to try it out. There's a reason it's been rated #1. 29 years in a row. I have sales reps that are 20 years older. We've been winning that award for decades now. So to sign up, there's a couple of different options that you have. If you have any questions, we've got a group of sales guys that do a really, really good job. You can give them a call at 800-882-3040. They will answer any questions that you've got. If you want to chat online, or you might not be in the US and 800 numbers won't work, chat with us. MetaStock.com/sales chat. They can help you figure out what markets you need, help you get set up, and even set up that white glove installation appointment for you. The other way you can do that is if you want to sign up online, you can go to metastock.com/conf-promo. I'd encourage you to try it. Again, 30 years in a row almost, 29 this year. It's been rated #1. I would not trade without it, and I think you'll enjoy it. And if you enjoy it half as much as I do, you're going to keep it, and you'll be one of our long-term customers as well. So the phone number again is 800-882-3040. You can go to metastock.com/salespchat to sign up, and you got to go to metastock.com/conf-promo. Richard says, thanks, I'll definitely try it. I'll order online this week. Richard, welcome to MetaStock. I appreciate you coming in. And if there's anything I can personally do to help you, feel free to email me. So let's take a look real quick to see if we have any other comments or questions. I don't see any. So let's go ahead and let's thank some of our our sponsors real quick. So also, let me go ahead and mute my laptop. It's dinging with notifications. So again, 29 years in a row. Give us a call, 800-882-3040, metastock.com/conf-promo, or metastock.com/salespchat. All right, very cool. We'll say real quickly, thank you to Stocks and Commodities Magazine. I love Stocks and Commodities. They've been great to work with. I remember we've been doing, they've been sponsoring the event and helping us get people to the event for almost a decade. If you believe it or not, today, or this year will be the 9th year we've actually been doing these online summits and conferences, and they've supported us since the first summit #1. So thank you for that. 17,000 articles in their article archives, 1.3 million, 1.2 million subscribers, been making at magazines since 1982. So again, if you do that extended trial, you are going to get 5 months for free of MetaStock to go with your extended trial. And if you buy any of the products that we're offering today, whether that be Wave Trader coming up or any of the other products that were featured, you're going to get actually a 2-year subscription to Stocks and Commodities. We don't pay for that. Actually, Stocks and Commodities gives it to you for free. It's about $100, I think, a year to subscribe to that. So it's actually a pretty good bonus that they just provide. So Eric says, what kind of computer do you need to run MetaStock? So you do need a Windows machine. And if you'll email us, Eric, or get in touch with us, thank you for your interest. I don't have those right here with me. Any modern type of a PC will work. If you're using iMac, you'll need to, if you're using a Macintosh, you'll need to use like a boot camp with Windows. But if you'll just get in touch with us at metastock.com/salespchat, we can link off to the actual system requirements. If you've bought a computer anytime in the last 5 years, you're probably good. But get in touch with us and we will send you the system requirements. And thank you for that question. Richard says, I've learned a lot in the last 2 days. Great. That's good to hear. I love how well this has been going. I want to say thank you for all of you that have been here over the last 3 days. Thanks for all the comments, the likes, the subscribes on YouTube. If you're watching this on YouTube, that's very, very much appreciated. So I'm glad you're learning a lot. Looks like we're doing pretty good on time. We will say real quickly thank you to the CMT Association for sponsoring the events as well. They've been sponsoring for, I think this is like, well, I think it was fall of last year that they started. CMT is a huge, very well-respected organization. They do, if you work in the industry, there's actually some pretty compelling reasons to look into getting a CMT designation. You can find more about that at cmtassociation.org. So there we go. Our next presenter is Ed Downs. Ed is with us. He does Nirvana Systems. And Ed, I'm going to do this a little bit differently right now. I'm going to go ahead and bring you on here, and I'm going to have you, actually, no, I changed my mind. I'm not actually prepared to do a drawing. We'll start with the drawings after in the next session. So stay tuned to see if you win any valuable prizes. I just realized I have to pull my list. So I'll pull a list and we'll do that. Instead, I will do what I planned on doing initially, and that is introducing Ed. Ed is a person that we've been working with for quite some time now. I remember when I started at MetaStock. This year, I've been at MetaStock for 25 years. If you can believe that, that's it's such a good company to work for, and I absolutely love it here. I don't see myself anywhere else. But like when we started, Ed was already designing products, add-ons, systems for MetaStock. He created also a product called OmniTrader that we used to sell with MetaStock as a bundle. The last couple of years, he's actually developing a lot of systems for MetaStock, like an AI engine, a product called Chart Pattern Engine, Wave Trader, which he's going to talk about in a second. But he's very, very smart, very, very good designer of systems and has been doing it for decades. So Ed, that's the introduction that I'm going to give to you. And let's go ahead and bring you on here. How you doing? Actually, you're still muted. So let's go.
Aha, there you got it.
All right, I can hear you now. All right,
yes,
Ed, welcome. Let me go ahead and make you the presenter.
Pardon me? Go ahead.
I'm going to make you the presenter.
All right, awesome.
And
thank you so
I'll
much.
also make you an organizer so you can see the chat. So, how are you doing?
All right. Well, gosh, Jeff, it's good to be on with you again for another webinar. This is fantastic. And I just want to say, you know, you're the only company I know of that does these summits like this. And, you know, I've been doing this stuff for 30 years, and I learned something in all these. I mean, there's fantastic, the approaches different people have. So I want to give you guys kudos for maintaining these and keeping them going. And I think it's a great resource for everybody trading.
Oh, yeah. Well, thank you for coming and doing it. Like, it would be nothing without great speakers.
Well, thank you. Thank you. Well, as I guess I'll just dive in here and jump into it. So this is a couple things to explain. First, as Jeff said, I've known MetaStock and the people at MetaStock for, let's see, I hate to date myself, but it goes back to like 1994, I'm going to say. I started Nirvana Systems in 87. And the reason I started, I'm an engineer, and I was trying to trade, and I had a hard time being consistent. And so I started trying to automate things around trading, all kinds of stuff. So automation is my background as an engineer, and I just kind of kept that theme going. And so, you know, built products around that theme in Nirvana Systems, including artificial intelligence engine and different things like that. So about 3 years ago, I was talking to Jeffrey, and like I said, we have a long history working together. Fantastic folks over there, and just love Jeff. But anyway, so we were talking about what we could maybe do together. It's been a while. And I said, you know, I'm thinking about launching this new company called Fulgent, which is designed to take our technology, which is our trading technology, artificial intelligence and specific systems, and make them packaged so they can go on another platform. So just, you know, basically hooked up to MetaStock, you know, was the one we chose, of course, to go to. And so what do you think? And we have chart pattern recognition, we have an artificial intelligence engine. And so we started the process of building these things for Fulgent. But then Fulgent is an engine that runs in the background with MetaStock. So this says Wave Trader for Fulgent. It's really Wave Trader for MetaStock, but it's the Fulgent engine. So Fulgent Technologies LLC is this company that is specifically targeted to getting our products packaged and out into the world this way. So it's been a great partnership with MetaStock. Really appreciate you guys over there. Been fantastic in every respect, helping us get it done, everything. So thank you so much. Now, today what we're going to be talking about is this module that we developed that is designed to take advantage of something called waves in the market. And you've probably heard of or seen things on Elliott waves, for example. Robert Prechter is the known, you know, recognized leader in that pursuit, that discipline. And so this is very closely related to that. We have found that, you know, Elliott waves themselves, if you're trying to trade that way, it's kind of difficult because there's lots of different ways you can count. And so learning to trade with Elliott waves is not real straightforward. But the important thing about markets is that they do form these waves. And so what we're going to do today is look at how that happens and how you can determine where the waves are in MetaStock with just basic indicators. I'm going to show you, hopefully teach you something that you haven't seen before that you can try. It's pretty simple, but very, very effective. So we're going to do that. And it's all about, as I say, these waves, and they really form like cycles in the market. So going from what we call a pivot, there's a pivot there, a pivot here, and so on. And so the market goes back and forth, back and forth, back and forth. And we all know this happens. You have things going on in here like Fibonacci retracements to 50%, like you have there. Here's another one here. 62% retracement here from these two pivots. This move back up. So there's other things you can measure about these waves, but primarily what we're doing is looking at where is there likely to be a reversal in the market based on this idea that their buyers and sellers are kind of duking it out. And when the price gets a little too low, there's a psychological thing that kicks in where people go, oh, that's a good place to buy that stock. And they do. And it just so happens, a lot of people do. And so you get a start of an up move, and then it just continues until the next, resistance point or the next overbought point. And so this is what happens in all markets. And what I want to show you right now is going into MetaStock, you can actually just do a couple of indicators and see these things very, very easily. So I've got it right here, and I'll just do it real quick for you. This is, I'm going to put two indicators on the chart. One is the zigzag, and this actually does show pivots really well. It's a 5% zigzag, which means that it reverses direction every time the chart moves at least 5%. So it will anchor that point. When it goes the other way, at least 5%, it will say, okay, back here, you had this pivot. Now, so you don't see them in real time. They have to form after the chart has moved away from them. But it's still very intuitive just to show them here on the chart. You can see that same effect on Apple of these waves forming and basic cycles being demonstrated. We're kind of at one right now, it looks like, with that low, and then there's a low here. So that's just zigzag to kind of show where those are. The real workhorse of this is just your good old garden variety stochastics oscillator. And what I want to encourage you to do is change this first number to a 21. So this is the primary period for stochastic, and then plot it. Okay. And you notice something really interesting right away with this. And I just picked Apple as the first stock in the list, from the Dow. So, but you can see that where these are forming or have formed, that you usually have the stochastic low right at that same point, and then it starts to go up. That's a great place to buy that stock because it has formed a wave low, most likely at that point. You go up here, we've got, wave highs kind of forming. You don't want to trade short though, because the market's in an uptrend. So you look at your next long point, which is here, and either of these reversions through that 20 line, the 20 line on the stochastics is going to be, a decent place to get in Apple for that move. And then you've got another one here. So you can see there, it's really highly predictive. There's one there. So just with a stochastics 21, you can just go through chart after chart and see these. We're going to be looking at the wave trader sort of approach to it, but I just wanted to show this to you. So that's just the zigzag is just kind of fun to plot. It doesn't really, help you much. You can't get, a right edge zigzag that's accurate because it's looking at the chart in the past to form these pivots. But it just shows you where those lows are, and there you go, right, perfectly aligned with it. So hopefully that's helpful to you. And just look at it on some charts and see what you can see. It works in real time too. Very, very simple kind of a system approach to trading these waves. All right, so let's go ahead and move on now to talk about this product that we're going to get into today, and that's called Wave Trader. So Wave Trader is based on this same principle, but we don't use zigzag. We use a very special, sophisticated approach to identifying the most likely point of a pivot where a pivot has formed. We look at a lot of things around the pivot to come up with these Wave Trader pivots, or it's not zigzag, but it's just the pivots that are formed. And so we can use those pivots to generate signals. And that is what Wave Trader does. It's real simple. I mean, just to have a system that can find these things out there and in different modes and different ways that these waves can form trading opportunities is very valuable because of just this truth about markets that they just work like this. So so that's what Wave Trader basically does. It's very simple. And just looking at, why would you care? Well, it identifies trend reversals and continuations because it can look at the breaks of prior pivots. Like, are we going through a prior pivot? That's a continuation move. Are we reversing at a pivot? That's a reversal. And one of the experts we have looks at multiple time frames. It's actually look at different values for indicators to figure out, do you have, the big wave and then the smaller waves inside that, and then the smaller waves inside that. And so it's looking for consensus between those three time frames. And we do have an Elliott wave expert. So we'll be looking at that here in just a second. But again, the whole idea of this is to give you really good signals to prospect from. And we're going to be getting to that in just a minute in MetaStock. So, the whole idea of this is to buy the dip. So, and we call these higher lows. So there's a low here that is higher than the one down here. As I said, we're looking at Apple. You want to trade in the direction of trend always. You can trade the counter trend moves. It's fine. But we're looking for things that are going with the trend and have that pullback that is, significant and then turning up from that pullback position. Okay. So it's really simple. So let's look now at the product and what it does and how it's integrated into MetaStock. Okay, this is just kind of a picture of it. And I'm going to bring it up here and just show you real quick. We've got the interface to Fulgent, which is, again, this thing is running in the background. We have experts and we have things going on in the charts that are really, really helpful. Actually, very unusual to see the stops plotted the way we do. And the folks at MetaStock helped us figure out how to do that. So, it's awesome. Let me go ahead and bring up MetaStock and just show you these things real quickly here. Let me go ahead and get rid of, let's see here. I'll just close the chart. We can open it again. Okay. Close that chart. Nope. All right. And let's go over to this thing. I love this dashboard. This is so intuitive, the way that they've done this. I have to say something about it because a lot of programs I've looked at, you go down menus and trying to find, well, how do I get signals today for the market? And this thing, well, it's the Explorer, it's right there, so it's all just very easy. We're on the chart tab. And so I've got, okay, open the chart and I want to use the template that I need to use. All right. Which is my wave trader template. And let's go ahead and view the expert commentary here. All right. And so there's our little deal going on. And now let's take a look at the actual experts. And I'm going to turn one of them on. Here is the interface to Fulgent. And you can see there's several things in here because we do have a pattern recognition module. We have an AI module. Today, we're going to be talking about Wave Trader, which is, like I said, just a super signal generator. So I double click that. I see all of the Wave Trader experts here. So what I'm going to do is turn on this first one and close it so I can show you what happens. All right. And let's refresh the chart. And there we go. So I've turned on the breakaway Wave Trader. I'm going to go through each of the 7 experts. This is the first one and talk about what they do, what they're looking for, because there's different ways we use these waves to find signals. But you can see these are pretty darn good. I mean, here's a breakaway signal. There's a trailing profit stop right there. And what happens is, as you're in this trade, it will tell you exactly what value that is. So they are mechanical systems. And if you've ever tried to build systems before, I got to tell you, coming up with mechanical systems that are this accurate is not easy. It is very, very hard. They're hard to find. I mean, and especially at the price point. I have to add that because this is a very inexpensive plugin for MetaStock, but it's just amazing how well these work. But so that's the first one, the first expert. And so, like I say, you click anywhere in here and it'll tell you, where is the current stop if I have a signal. So let's see, let's look right there. So 144.17, which is going to be that level right there. And that's what it does. Okay, very simple. It also supports, back to my slides here, more goodies in here. All of the things that MetaStock is famous for. As Jeffrey said, they've won these awards. I mean, I've been around a long time. They do it every year, right? Because they have all these tools that just make it simple to find great trades and to test things. So we support all 3 of the primary assets built around charts, standard charts in MetaStock. And so we're going to be looking at that a little bit later. Let's go ahead and look at the experts though first, and I've got a little intro to them here. As I just showed you in Fulgent, there are 7 of them, and they look for different things. Primarily, there's short-term versus long-term opportunities, but there's also, as I mentioned, reversals and continuation signals. And so as you use this, you'll kind of figure out which ones you really like. And there's various ways to do that, which we're going to talk about here shortly. But as I showed, it's very easy to activate them. Okay. Oh, I had this over here. So there they are. There's the 7 experts. All right. One of my favorite is probably Breakout, but I love E-Wave. That's the Elliott wave. And the other ones are also good. Short-term is very, very good. But they're looking for, as I say, different kinds of signals. So we're going to get through that. All right. There's also, as I showed you in the chart, stops calculated. We use a trailing profit stop and a fixed loss stop at the beginning of the trade. And these have been created through very rigorous testing on live market data for years. And so you don't have to mess with them or change them. They're there, but you can test them with a system tester and see how well they work. So we're going to be looking at that in just a minute. If I looked at the mechanical accuracies, I said they are mechanical systems. There's an entry, there are stops, so there's exits, so you can test that. This is what they did over like 5 years of S&P and NASDAQ data. And so very respectable hit rates and profit per trade numbers coming out of these. And again, this is over like not singling out any stocks based on something. It's just all of them running over 5 years. And so there's times when you wouldn't trade. There's times when the market is dropping precipitously and you know that. So if you get a long pivot, you go, well, we're not gonna take that signal because, market's going down. So given the fact that there are a lot of places that you just would not trade, this is amazingly good accuracy. Look at that short term, 78% accurate. Again, it's just a tremendous thing that all those are there. And they are sort of designed to be short and long-term oriented. And so these are kind of the short-term ones. Here are the longer-term ones. And again, this is those same numbers stated again over here. Okay, so what we're going to do now is go through each of these. And let's see, actually, breakaway is the second slide. So we'll start there because that's what I've got shown right now. So what this is doing is looking at the prior pivot in the chart to determine if a breakout is occurring. So we are forming pivots in here. You can't see them. We're not plotting them, but they're there. And so when we break one, like here's one right here that was identified. I mean, I know it was identified. Like I said, you can't see it. That's an exit right there on this signal. But it's saying, okay, we're breaking a major pivot here. And so that's when it generates a signal. That's it. And, the great thing is you can use the exploration and find all the stocks in the market right now that are doing that. We're going to get in the Explorer in a minute, but it's very powerful. But, I mean, nothing could be simpler. We're breaking the prior pivot. That's a breakaway signal and should be seriously considered for trading today. The pivot change. Okay. So this is looking for long-term reversals, so wider pivots, or short-term pullbacks in a long-term trend. So it's a little more sophisticated. These are just a couple of examples that my guy pulled for me to make this slide, but incredible, 18% gain. Okay, fine. But anyway, so it's looking for a what it thinks based on testing is a longer-term potential. So what I can do is go into my little Fulgent engine here, and we'll turn off breakaway and turn on pivot change right here. Okay. And we can turn all of them on in just a minute here, but I'll just do this individually. We'll go through a few charts. So again, I mean, it's, and every signal isn't profitable, obviously, but you're going to get, this one I think is like 65, 67% accurate. But the way you use this is you look at the market and you look at what else is happening in the chart at the point you get the signal. This is a higher low here. It's a good opportunity just because of that fact. You're in an uptrending stock. And you put the stop is maintained very close to that signal. Actually, right there is the first point that it adjusts to. And so, it's just very easy to use. But there's a couple of pivot change signals on here. Let me go through just a couple charts. We'll go through AXP and then we'll back up. So, it just doesn't really get much better than that. There's Amgen. Let's see. We'll do another one. Like I said, they're not all going to be profitable, but you'll see the power of these signals if you were to get them every day in your MetaStock, on all the stocks that are out there, because you can explore the entire market with MetaStock. So there you go. Okay, I'm going to leave it on American Express. Go back to the PowerPoint, and let's go to our next contestant, which is WT trending. So this says it finds entry points in the direction of the primary trend, which is typical of most of these, and it says the HLLH system. We shouldn't have put code in there. That means the higher low or lower high. So higher low is, we showed that. A lower high is the market that's going down. So you have a high formed, a high formed, a high formed. And so it's looking for that and, for long and short signals. So let me go ahead and let's look at WT trending real quickly. Over here, the drill by now. We'll go to Fulgent, open it, go to Wave Trader, and we'll turn on the WT trending, which is that guy right there. Okay. And I'm going to back out just a little bit. Oh, actually, that's all the data. Okay, never mind. We'll just leave it where it is. And I'm going to refresh the chart. Let's see what we get here. WT trending. So you can see it's just looking for any reason to get in if a chart's going up. I mean, that's basically, it's, you know, where those little short-term pivots are formed. So these are little bitty pivots that are going like this is what it's looking for. And so, you know, for a short-term opportunity with the primary trend, that's just great. We'll go back here to the prior two. So Amgen, and only had one signal on that one. Go back to Apple here. And again, you can kind of see the effect of these signals. And of course, you have the exits on the chart. All right, let's look at the next one here. Okay, WT long-term. So this one is, excuse me. Sorry, allergies in Austin, you gotta love them. Anyway, so looking for the larger pivots to get longer term signals, and the stops are a little bit looser. And so its objective is to find moves like this. So again, we can go back over here, go to the Fulgent engine and into Wave Trader and do the WT long term. Okay, all right, and close that and do a refresh here. Just see what we get. And I'll go through. It's going to take a few charts probably. So there you go. So you know the stops are pretty tight. That's what it's looking for. But it's, you don't see that many signals. But here's one here. Here's one here. Here's one that got stopped out. So that one went against it, and it was not able to establish a trailing profit pivot. So it got stopped out there. Go through a few more. And again, so here's only one signal on this chart. But you get the idea. It's just looking for what it thinks from testing is a longer term opportunity. Okay, and again, just a couple signals on this chart. All right, go back to American Express, and so I think we got a couple more to go through. Okay, long term 2. Okay, so this is looking at two sets of pivots, longer term big ones, and then shorter term little ones. So it wants to get them lined up. And that's basically what it's doing. So we call this fractal confirmation. You know, fractals are a phenomenon whereby it's like a snowflake or something. You have the big pattern, then you have the same pattern replicated inside there a bunch of times. And then inside each of those, you have a bunch of little teeny ones, and they keep going down in theory to zero. But so we use two separate fractal zones for this particular expert. And let's see here. So go ahead and look at that real quick. Okay. All right, long-term 2, turn this off and close it, refresh. Okay, like I say, when you use this, and so it's going to do similar signals to long-term. It kind of honed in on that trend right there. Here's a nice long-term 2 signal. Let's see, we'll go back to Apple, and it's finding, you know, several in here, again, based on the trend as it climbs this. So, all right. So a little side commentary. So I'm showing you all of the ones that we have in Wave Trader. They're all different. Like I say, there's a couple that I really like. These are fine, but it's that short term and the E-Wave that we're getting to that are my favorites in here. But this is able to find really good long-term opportunities on charts where those two factors line up really well. Okay, WT short term. All right, this is good. So short term, let's go ahead and bring up Fulgent again. Oh, I didn't read it. What is short term? What's it doing? Hold on. Okay, it's one of the best performing experts. Uses minor waves for initial signal generation while confirming trend direction with the major waves. So it's similar to that long-term 2 strategy, but just different parameters. So it's looking to find these little moves like this. And let's see how it does on these charts that we're looking at. Fulgent, Wave Trader, and there it is right there, WT short term. Okay, very good. Refresh. Okay, and you can see, I mean, if I was to zoom in on this is, now why it's picking that particular area of the chart, why it likes it so much, I don't know, but it's doing a pretty good job. You know, 3 profitable signals right in a row. Let me back out here a little bit again, and we'll go to the next chart, which is that American Express or is Amgen? So again, just looking for little short-term moves. Okay, here and then here, just that right there, right? And of course, this one was stopped out, but there you go. And we'll go one more chart. Okay, and again, it's just seeing in this zone, it's been looking at this and says, okay, we've got the right stuff for these short-term signals to occur in those two places. Okay, let's go back to here. And finally, one of my favorites is called E-Wave. And so it is based on the Elliott wave principle. All this, wave, the same thing. It's, higher lows, lower highs. And if you've looked at Elliott waves, you've got, wave 1, the retracement is wave 2, 3 is up, 4 down, and then 5 is the last on a standard Elliott wave. There's variations, but 1, 2, 3, 4, 5. Then you have the corrective wave, which is A, B, C. So it's looking at it's looking for 3s and 5s. So 1, 2, 3, and then 4, 5. So those two upturning pivots is what it's looking for, and then the highly identified corrective wave, which is wave C. So A, B, C down. So that is what it's looking for. We'll go ahead and go back in here, go into Fulgent, turn that on. All right. And that is right there. E-Wave. Okay. Yeah. And there we go. Let's go ahead and refresh the chart and get that found. So this is 1, 2, 3, 4, 5. Okay, and then it's doing a count from here. 1, 2, 3, 4, 5. So it's seeing the wave pattern ahead of that, and finding those signals in there, and they're really quite good. We'll go through a few charts. Of course, any chart can have weird ones on it. It can happen, but generally speaking, I find this to be a really, really good system. Here's an E-wave signal that just happened just now. It's on the right edge. I click on that and I get my expert. It says this is the E-wave expert, and the trailing stop is at 224.11 on Amgen right now. Okay, we'll go to the right, do a few more here for E-wave. It's finding quite a few in the recent market. Okay, none on that chart. So it's pretty picky. I mean, it's looking for, 1, 2, 3, 4, 5 right there. So that's what it does. So you won't see that many E-wave signals, but again, you can scan the entire market with the Explorer for these things. So, but they are generally really, really good opportunities because of that Elliott wave theory and the fact that that's how markets move. They move in 5s and 3s, 5 up, 3 down. So that's what that does. Okay, let's see here. Let me go ahead and go back. And that's all 7 experts. What I want to mention now is the fact that you can do explorations in MetaStock very easily. I'm going to do one for you. And in the product, which I'll show you, you can scan either the individual patterns. If there's some you really like I really like E-wave, short-term trending, and breakaway. Those are my 3 favorites. So I'll scan for those. But if you just want all of them, you can just run this one. This Fulgent AI Wave Trader is all of the experts combined into one scan. So this makes it a little more flexible and easier to do. So we'll go ahead and go to here, to Explore. And let's see what we got. So I'm gonna go down and find the Fulgent thing. I love how fast this is too. It's really, I can do it live in a webinar because it is so fast. So, that's patterns. We want Wave Trader. There it is, Wave Trader. Okay, so that's turned on. And then down here, we're just gonna do the SP 500. Get to it. Come on, Ed, faster mouse. Let's go. Okay, I think I already have it activated. Yeah, I do. So I've got the SP 500. All those stocks are active. And I'm scanning, loading 500 records, which is more than you need. That's okay, though. Using the current exchange date and time. And, that's it. So it's going to be on the right edge. So I start exploration, and we'll just let it go here. Again, it won't take long enough for me to get a cup of coffee here. So. All right. Yes. Okay. I just love how fast this is. It's fantastic. So it's looking at all of them. I mean, they're all turned on. So there you go. Almost done. Okay. And when it gets done, what we do is we look at, do we have any trades that are in play right now? So this one means that there is a buy signal. And there's something we do in this software that is kind of unique, is we actually are passing back to MetaStock from the module, the Wave Trader module in Fulgent, how many bars since the signal was generated. So there was a signal generated 9 bars ago. This is 1 bar ago, 2 bars ago, and so on. So what I really like to do is just sort this. And here's 100 bars ago. My goodness, the thing's been in trade a long time. So we'll go down here. If I'm prospecting, what I want to do is look at the ones that are recent. So I can kind of pull this over a little bit here. Here we go. So we can see the chart, and just click on some of the ones and just see what it's finding today. So there is an E-wave signal. Oh, I need to turn on all the experts. Actually, no, I did not turn on all the experts. I just had E-wave selected. So guess what? I'm only going to get E-waves. That's okay. But if I turn them all on, and again, that's in Fulgent. So whatever you have activated in Fulgent is what it's going to test, what it's going to scan for, what it's going to show in the charts. So it's very simple. You just turn on the ones you want to see. So I'll go ahead and go with this example. It's pretty good. So E-wave is what it's searching for. And so there's, 1, 2, 3, 4, and there's your 5th wave going up. Let's look here. The next one, another E-wave signal. All right, there you go right there. There's more behind them. And let's go again here. So you just kind of go through them and see, what I'm looking for when I do this is something that is in a trend like this guy, and you've rested, and now you're an up move in that trend. That's a really good opportunity point on that stock. So you can go through them very quickly. You can get signals that are like 2 or 3 days old, whatever you want, or just very recent, like the recent signal on the right edge. So very, very easy to use, as with everything in MetaStock. It's just great. That's Halliburton. Okay, cool. All right. So we've got that, and there's your picture of the exploration for the benefit of the PowerPoint. The next thing is system testing, and this is actually my favorite part of this product, this presentation, because this is where the rubber meets the road. I mean, if you have a system that is mechanically accurate, you are already ahead of the game, right? You're not going to trade every signal. You're going to find the ones that are really set up right, that have a good trend, and everything's looking good on them. Maybe a Fibonacci retracement, a little volume coming in at that pivot, just little simple things that you look at in charts anyway. It's going to bring these candidates to you, and you're going through them and going, oh, that one is really set up nice. Okay, so you could increase the accuracy doing that by quite a bit. But if you just blindly system test this thing over a whole bunch of data, you want to see how it does. Okay, so in the system tester, which I won't do, takes a little bit longer, and anyway, it's easy. I can just show it, but it's very similar. System test on the left. You select the Fulgent AI Wave Trader system test module and the symbols you want to run on. So here we're running on the Dow 30, and this is kind of what it looks like. So what I did is I went to MetaStock, and they have some of these classic technical analysis systems that are mechanical, like based on Bollinger Bands and MACD, and I just turned on a bunch of them and ran it. So I've got a bunch of tests here. The number one did come up as Fulgent, right? And of course, this is, market hasn't been real kind lately to trading systems. So that's okay. And these are actually, I think, are great that they have these, because they're really good for prospecting too. But we test against, just standard things out there. This is what happened on the breakout strategy. Here's the pivot strategy. There's Fulgent, and its numbers down there are good. And then had another one here, the trending strategy. Okay, so that's basically outcome that you want to see from a trading system. And finally, this is one just on the recent 6 years of data on everything, just pretty much everything in there. I just turned it all on. And so, like I said, we want to see that accuracy in the software, because you're going to be getting signals from it. So it's really important that it's good. Okay, so that is that. All right, so I'm actually going to give you a little more time today, Jeffrey, and we can do some things if you want, but let's do a summary. Okay, so Wave Trader, Fulgent, includes these experts with their advisors, long, short-term signals, stops on the chart, plotted, of course, generated and plotted. And I know Jeffrey in this summit, he does these special deals for you guys out there, so we'll let him talk about that. And Jeff, if you have any questions, I'm happy to field them.
All right, thanks. We do have one question that's kind of come in, and it's from Trevor, who's bought the add-on. He wants to know if you can use it to scan for short setups.
Yes. Now, not all the experts have shorts. I'm trying to remember which ones do. I believe that short term does. So I know I have to look at the documentation to see which there's two that have shorts included. Because the market is so biased to the long side, we typically just scan for long signals. It's like 70% of the time the market's going up. But there are two in there. I just can't recall exactly which ones they are right now. But yes.
Gotcha. Okay, that was the only question we've got so far. Did you let's see. Well, let's go ahead and I can. You guys go ahead.
One thing I could do is just turn them all on and then let you continue there. So we'll do that real quick. Go into Fulgen again and turn on all the experts. I'm going to turn on my favorites, which is this one, E-Wave, and short term. There we go.
Oh, we are having, Andy also has a question. He wants to know if you can use this for options and options trading.
Oh, you bet. Of course. So, when you're trading, if you're buying calls and puts, it's really the same as buying the stock. It's the same dynamics. You would buy the option on the signal and then, get out of the option if it hits, an exit point, which is the little red dots here. So MetaStock has a tremendous feature called Option Scope, where you can find these. And I hadn't been prepared to do that, but I'm happy to launch into that, Jeff, if you'd like me to.
If you want to. So generally what I say in relationship to that, actually Option Scope, then the changes that they've made to Option Scope, particularly after the last couple of versions, have been incredible. However, the big thing about trading options, in my experience, is like the question of the underlying, right? Like, okay, so what stock am I going to trade? There's 4,500 of them. And so generally, and this is kind of an interesting demographic study for kind of MetaStock, but about 60% of our traders use stocks. About 40% of those do options. And typically, the way I think it's most useful for options, at least for me, is what stocks, which of those 4,500 optionable stocks should I be looking at buying an option on, whether that's a put or a call? Which ones, which once you have stock, you've got a huge part of that equation kind of figured out, is I think what I'm trying to say. So,
no, exactly right. Yep.
But yeah, you can definitely go in there, and they've actually done a lot of things lately with being able to kind of do option strategies, and you just right click on the chart. But the critical question as well, okay, should I be doing an option on Microsoft or Apple or Google or one of the other 4,500? Which ones are the best? And for finding that underlying, I think that's really where MetaStock has always excelled. So, my opinion.
No, I agree with you. That's the Explorer really is the perfect thing every day to find those candidates based on something. And, we use these Wayfair signals here, but, and then you want to look at the liquidity, which, you're saying it's really all about that stock. If it doesn't trade many shares, the options are probably really thin and the spreads are wide, right? So you're going to pay the ask price and you're going to sell it at the bid price. So if the ask is $3, and the bid is $2, you've already lost $1. So if you trade something though, like Apple or even some of the ETFs, like the QQQ is one of my favorite things to trade because those spreads are like cents. So you've got like, a $200 instrument, the options on it will be like, $2 or $3 near term at the money, but it'll be like $2.10, bid $2.08. So you got a 2-cent spread. That's awesome. That means that's all you're losing taking that trade, except for the commissions or addition commissions. They, that's what you're really looking for. And of course, the Explorer, the option. What's the proper name for it, Jeff? Option Scope. Yeah, is able to show you all that data, like help you pick the right option, on any instrument, but also, like I say, looking at, what is the market for that stock? Is it liquid? And so a liquidity filter on the Explorer scan is really good to have, and MetaStock lets you do that. And so if you have that, that's half the game right there. Then you got to have the setup. It has to be right. Is this likely to move? And of course, that's what this product's about, and others that MetaStock offers. And with those two things lined up, I have an option presentation I did. I'll just kind of ad lib a minute here, Jeff, so we got some time, and showed that one way to look at option trading is that if you buy, let's say I was going to buy QQQ. I don't know if I can get that. Let's try it in here. Get in here and see if I can get it. Yeah. Okay. So let's say I were to buy a call on QQQ right now. It's $300 is the value of the ETF. This is the NASDAQ 100 is what it represents. It's an ETF. That option is probably the very near term, like let's say a weekly option, it's probably going to be around $3 or $4 at the money. So meaning that you're going to try to buy that option, pretty in terms of the strike price, the price that the contract is written at. Like this is the value that you can buy the stock for if you exercise the option, which almost no one does. They'll just take the increase in the option and make money that way. But a strike price somewhere around like 305 or 310 or so, that option is going to be just, like I said, very, very small spreads. And this thing of course is moving a lot, and it's pretty chaotic lately, pretty volatile. But now the other thing you have to watch out for is if you are in the middle of a volatile situation, like something like the Netflix thing that happened a little while back, those options, the spreads get really wide. They get expensive and the spreads get wide. And so that's the other thing. You need kind of a calmer market on the stock to not get hit by the cost of trading options. But those are just some thoughts and pointers.
Sounds good. That's great. A couple comments. Tavanda says, great presentations from all of the speakers thus far. So appreciate that. And Richard says, I've learned a lot over the last couple of days. So I hope everybody's enjoying these sessions as much as I am, at least. I think what I should do now is actually kind of take over and just kind of talk about the special that we're doing. Okay. I do have one more small thing to ask for you, though. I need you to help.
All right.
Now, this might be a really big ask, and I'm kind of putting you on the spot. But I need you to pick a random number between 1 and 8,810.
Wow. Okay. Let's say 2022. How's that?
2022. So we do price drawings, so you might have guessed. And that is going to be Hector L. So wait. Yeah, Hector L. And I have not given away anybody's last name yet, so I'm doing very well there. Hector L, I will tell you about the prize that you've won in just a few minutes. So Paul asked, does one need any subscription to use OptionScope? So if you have Paul, that's a really good question. If you have the DC version, we do have all of the options for the North America data in there. So the North American subscription will work with DC. If you're using Zenith, you can plug any of the options data that you get from Zenith straight into OptionScope, and it just reads it directly out. So thank you for that question. Hector, you have won 3 months of MetaStock, and I'll talk to you a little bit more about that after we're done here. I'm going to go ahead and kind of talk a little bit about WaveTrader, Ed, and kind of how they can get it and the great deal that we've got. I do want to say thank you for coming in today and spending some time with us. And thank you for helping me pick out. Hector, thanks you for guessing his name or his number.
Okay, you're welcome, Hector. Congratulations.
All right. Thank you, Ed. All right, let me go ahead and do this. It's good to have you.
Good to be here. Thank you so much.
Okay, let me go ahead and make myself the presenter here. We'll just kind of recap. Ed does a really good job of actually showing the product, showing how the scans work, all of that kind of stuff. But I just want to show, I'm going to go into the question about how to use it for options and kind of, since we do have a few extra minutes, which is kind of unusual for these events, we're usually running over on time and not under on time, but let's go ahead and talk a little bit about WaveTrader and kind of how you can use it. And if you're interested in options, the best way to scan for options. So as Ed had talked about, there's quite a few different methods in WaveTrader. One of the things he may have mentioned is this is one of the most popular add-ons that he's ever designed. Actually it says best, I think the word was his best-selling add-on. So I'm glad he brought it into MetaStock. Certainly a good addition. I really like kind of the swing nature of it. I like how long it's holding. It's perfect for somebody that kind of trades in the temperament of what I trade. So as part of it, you're going to get these methods. You're going to get the pivot change, the breakaway, the trending, the long-term 2, and then the L8 wave systems. He also did talk a lot about how it has the trailing pivots. Those are so important, like to trade, as you may have figured out over the last couple of months, having a stop, respecting that stop. Money management is such a key to trading, especially when things get too choppy and that kind of stuff. You never want to be too far into a trade when it goes really bad against you. So those trailing stops are awesome. He does include a full integration into MetaStock with the scanning, the expert commentary, and even the system testing. And these systems test very, very well, which is something that I always expect when we're looking at an Ed Dan's product and kind of like what he's done with the product. So normally what's included is you get the stops, the 8 explorations, the system tester, and the expert advisor. All of that's included. It's a one-time cost. It's normally $495. Here at the event, I'm just noticing I didn't put the event special offer on here, but it's only $395 here at the event. So we're going to give you $100 off. We're also, of course, going to back that with our 30-day money-back guarantee. So if you don't have MetaStock and you get this, we'll include a free trial of MetaStock. You can find out why it's been rated #1 in its price category 29 years in a row. But as part of that, just $395, one-time cost. You own it forever. 30-day money-back guarantee. To take advantage of that, you can give us a call at 800-882-3040. You can go to metastock.com/sales-chat, or you can go to metastock.com/conf-promo. Now, I did promise to Andy to talk a little bit about how I like to use MetaStock to scan for options. And one of the things I think, OptionScope's awesome. And there are such a lot of cool things in OptionScope that you can do. But I think really, let's go back into MetaStock and let's just talk a little bit about how to find the right option. So the first thing I want to know when I'm trading options is what stock has an opportunity that exists. So right now I've actually opened up the Power Console. I've got the Power Console ready to go here. And you notice I've actually found the WaveTrader scans. So I'm going to actually unselect a lot of them here. And what I'm going to do is just real quickly show you, because we do have a little bit of extra time, the first question. Okay, what stock options should we be looking at? So with MetaStock, with the Power Console, we're going to have access to just a ton of data. The data that we get from Refinitiv covers, well, look right here, 313,328 issues. So that includes all of the all of the important markets in Asia, Europe, Middle East, and Africa, North and South America. You also get futures index, and it's all fairly well. I think it's all pretty well organized. But if I want to find just out of the optionable stocks, if I want to find just the ones that a list of North American optionable stocks, what I can do is I'll just go ahead and click on this North America here, and it's going to give me different groups. So I could scan the NASDAQ, the New York Stock Exchange, any of the pink sheets. I could do any of the ETFs that I'm interested in finding. But what I'm going to do, just to kind of show you this, is we'll just do the optionable stocks. So I'm going to run this WaveTrader scan. That's going to scan for all of the patterns. And I'm going to do it against these optionable stocks. So we'll go ahead and click the Start Scan here button. And I don't think we'll have time to kind of let it complete. It actually doesn't take very long to run. It's a little bit slower than we actually are presenting and have everybody in the office on YouTube and, you know, are sharing our video on our screen. And, you know, there's a lot of bandwidth that kind of goes into that. But you'll notice it is chunking through this pretty quickly. It's about 83% done. Or I'm sorry, it's actually about 52 out of 5536. But what's going to happen is it's going to get through that list. It's going to give us just a list of the buy or sell signals. And obviously, we're not going to kind of let it finish just because it's going to take a second to go through. But that's how you would go in. And I believe that is the most important question when it comes to options, because you have so many choices. You're spoiled for choice with options. Not only do you have like what strike price am I going to go for, what am I in the money, am I out of the money, what expiration date? There's so many questions. But in addition to all those questions, you've got the 5,500 optionable stocks that you could take an option on. And so what we want to be able to do is, and I think MetaStock's really, really good for that, is identify those stocks that kind of have an option right now. Once you get done with that, you do have the ability to go in, and with the option scope program, you can kind of find out which ones, what strategies you want to play. Here, I'll just open up an option scope real quick with options for Apple. We'll just do that. But you can come in here and figure out what the bid and ask is. You can do some spreads. You can identify exactly what option you want to trade based on what's available for your strike price. Certainly, we're not going to turn this into an option scope model, but you could even plot those out over time. But I think the most important question, and the reason so many of our traders are using options, is tell me which option, which stock should I be looking at the option on? And all of these other tools that kind of help you identify, you know, the profitability over time are good, but that's always been the most important question to me. So hopefully that makes sense for you, Andy, in terms of what that is. If you haven't played with option scope, there's some really good training up on our site that you could go through that'll actually kind of walk you through how that works. We've added a lot of stuff. Scott earlier showed a list of all the stuff that's been added, but here you can see like the call put ratio. You can see the open interest to the in the volume. You can look at the tops. You have the ability to kind of put in strategies down here and have them plotted. Very, very easy to use. I love the, we just introduced this a version or two ago, and we've made so many changes to it. So it's really, one of the things I say all the time is, you know, it's really cool to see the amount of changes that have come to the MetaStock platform over the last couple of years. One of the things Scott has really, really prioritized is, you know, making improvements to the product. And, you know, we just came out with this massive upgrade that includes all the beautiful new charting, and it's so nice to see. So in any case, there you go. Let's kind of go back in here real quick. I think that'll be enough filler time to kind of talk about it. Again, that wave trader, what it's going to include is it's going to include the full, all of the methodologies, the pivot change, the breakaway, the trending, the long-term 2, the Elliott wave, all of those systems are included. You get the trailing stops that are as part of it. You can see how well it tests here. This is basically a system test, and the scanning, as well as the expert advisor and the commentary. So a full implementation into MetaStock. So $495. Here at the event, we're going to do $395 as that one-time cost. We'll include that with a 30-day money-back guarantee. We're going to give you a free trial to MetaStock, our award-winning MetaStock software program. Give us a call, 800-882-3040. Go online and get metastock.com/saleschat or metastock.com/conf promo to take advantage of that. So there you go. All right, so let's talk a little bit about Hector. Hector L, you have won. Congratulations for winning the prize. Basically, the prize this giveaway was MetaStock. We're going to give you 3 months of MetaStock real time. So that's going to be basically, that's going to include the real-time data feed Zenith, all of the news and all of the information, basically the platform we were talking about earlier that supports so much, basically thousands and thousands of reporters, over a couple hundred different news bureaus, all kinds of information all over the planet for any of the stocks or futures that you're interested in. A truly institutional quality platform that's built for institutions by they spent over $1 billion creating it. You're going to get that. You're also going to get MetaStock real time, which is going to help you scan the markets, test trading ideas. Scott showed how the forecaster works and how you can use it, our patented forecaster, to kind of figure out probability of price action in the future. You get real-time commentary, alerts, and all of that starts at $69 a month. We're going to give you the real-time version, though. It's basically going to include everything you need for 3 months to kind of run both the data and the news, everything. So congratulations, Hector. I'll reach out to you for some information that we'll need to help you get your account set up. For those of you that might be watching and are interested, you can actually just buy a month and you can get 3 months as well. So the price on that starts at $59 per month. If you buy 1 month, we will give you the second and the third month for free. So if you do the DC version, it's less than $20 a month to try out our award-winning software program. And you can do that at metastock.com/conf promo. You can do that at metastock.com/salespchat, and you can call us at 800-882-3040. Andy says, thanks for covering options. My pleasure. Thanks for the question. If you guys have questions as we go, let me know, and I'll do my best to answer them as we go. One of the things is we usually get more questions than we can handle. So there you go. In any case, let's kind of move over here a little bit. I want to say thanks to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been sponsoring our events for a decade now, almost 9 years, getting close to a decade. They're great partners. Again, if you do any of the MetaStock subscription offers, you're going to get a free 5-month subscription to Stocks and Commodities Magazine. If you buy Wave Trader, you're going to, or any of the other products that we're selling today, you're going to get a complimentary 2-year subscription for them. They've done a great job. They help us advertise the events. They've been supporting them. Great sponsors. We really appreciate what they do. And as a subscriber, you get access to all of their trading articles. There's more than 17,000 articles in there. They have 1.3 million subscribers, and they've been making it since 1982. So great job. Really appreciate the sponsorship there. Okay. And of course, the CMT Association, a newer sponsor for us, only been on board for almost a year now, and they're great. I love working with Tyler Wood. He came in, and one of the things that was eye-opening to me is if you are working as a money manager or you want to work as a money manager or things like that, is how much a CMT designation can help you with like your career, your responsibilities, your money under assets. It was really, really interesting when he was talking about that on, was it Monday? Yeah, it was Monday. But if you want to find out more information about that, you can go to cmtassociation.org. And with that, we're going to start a little bit early with our next presenter. Jeff Tompkins is a friend of mine. He has a great, fantastic first name. He lives up in Boise, Idaho, which I point up, but it's just north of us here in Utah. And I believe pretty sure it's Boise. Jeff got his start. He started training customers how to trade with a website called Udemy.com. I had no idea how big Udemy.com was, but he got a ton of students, and was one of their most prolific, from what I understand, speakers there. He's gone on since I've met him to run I don't know, I think it's more of a hedge fund. I was going to say mutual fund. That's not right. I think it's more of a hedge fund. I'll let him talk a little bit more about that. What I like about Jeff is he is down to earth nature. Such a nice guy, easy to talk to, easy to understand. And I think you'll appreciate that too as he's talking to you for the next hour about some of the methods that he's going to talk to you about. So with that being said, Jeff, let's go ahead and bring you on here. How are you doing today?
Fantastic, Jeff. How are you doing?
Good. I'm going to just tell you right out of the gate that the conference is going great. We have a great audience. They've been asking very, very good questions, and I'm not just pandering to them.
Oh, fantastic. Well, no, it's always great to have interactive viewers. So let's go ahead and do this. They're great. Yeah, it's been a great audience. The conference is going well. Welcome. Let me go ahead and make you the presenter. And I just turned on the organizer, so you should be able to see any questions as they come in. If we get questions from YouTube or Twitch or some of the other channels that we're broadcasting on, I'll let you know. Other than that, I can see your screen. All right.
Evening.
Yep. You have my slides because I've got dual monitors. I want to make sure you're looking at the right screen.
So I am looking at a non-expanded version of your slides.
All right. So let's get over to my other screen. How's that look?
Perfect. 100% right.
It's funny. Zoom defaults to my other monitor, and GoToWebinar defaults to this one. So I always have to switch them. But all right, we're on the right one. So. Well, thanks for the intro, Jeff. Great to be here as always. Always a pleasure, and thanks everybody for joining. I have a lot of great stuff to cover today. So we're going to be talking about trading volatility with algorithmic buy and sell signals. Any of you who are currently involved in the markets know that we're in very volatile market conditions, and actually have been, since the Corona crash back in early 2020. Not only that, we've got this real shift from a secular bull market to secular bear market, which we'll talk a little bit about today as well. So again, lots of great stuff to cover. Before I do that, I'll read a quick disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options and need a broker to trade securities and options and must meet suitability requirements. Past results are not necessarily indicative of future performance, although performance figures are based on trade signal algorithms. And due to the time-critical nature of trading, brokerage fees, activity of other subscribers, etc., we don't guarantee that subscribers will mirror our performance. But again, the performance numbers shown are based on trades users could enter based on our trade signals. Or in the case of today's presentation, I'll be sharing some of my own personal results as well. So by the end of our session today, you'll discover how to use predictive indicators to spot turning points in the markets. This is valuable information that can be used to help predict markets over the course of the next 30 days. We're going to be talking about a lot about volatility and the CBOE Volatility Index, or the VIX, which is designed as a forward-looking measure of volatility across S&P options over the course of the next 30 days. So whether you're just starting out or you're a seasoned pro, this is must-have information for today's markets. So let's talk a little bit about volatility. Again, it's a relevant topic in today's environment. If you have studied volatility at all, or are familiar with the VIX, which is often referred to as the fear gauge, it's the ticker symbol for the CBOE Volatility Index. You'll know that it measures the stock market's expectation of volatility based on S&P 500 index options. So volatility itself measures the frequency and magnitude of price movements that a security experiences over a specified period of time. So the more extreme the price swings in the security, the higher the level of volatility. And the VIX index is a measure of expected future volatility. So I'm a big advocate of forward-looking indicators. I probably, like most of you, do not like using lagging indicators because they aren't real valuable in terms of making trading decisions and forecasting future price. So we try to stay away from those, right? So I'm going to give you guys some tools today to use in your own trading and investing that are designed to be more forward-looking. And one of those is the VIX. Now, the VIX estimates expected volatility by aggregating the weighted prices of S&P 500 index puts and calls over a wide range of strike prices. And the prices used to calculate the VIX index values are midpoints of the real-time SPX, or S&P 500 index option bid-ask price quotation. So that's basically how they get the number. Now, in terms of the VIX reading, the consensus is generally that if VIX is over 20, we're in volatile market conditions. And if it's less than 20, we're in more normal market conditions. Now, another important point is the VIX is inversely correlated to the S&P. So when the S&P sells off or goes down, the VIX typically rises. And conversely, if the VIX is falling, it's generally when the S&P is in an uptrend. You know, when the S&P has been in a nice steady uptrend, as we've seen many times over the past decade, we tend to see a low VIX reading. And that might periodically spike during a market correction or sell-off. Often when we shift from bull market to bear market, we can see an elevated VIX versus more of a brief VIX spike. And we're going to take a look at that because that's really what's occurring right now. So what does the VIX actually tell us? Well, Again, it's a real-time index that represents the market's expectations for the relative strength of price changes of the S&P 500 index. And it's derived from the prices of SPX index options. And it's designed to provide a 30-day forward projection of volatility. And again, volatility is how fast prices change. And it gives us insight into market sentiment, especially the degree of fear among traders and investors, which again is why it's often referred to as the fear gauge. So as I mentioned, the VIX is typically inversely correlated with the S&P 500 index. So when the S&P 500 goes up, the VIX drops. And when the S&P 500 drops, the VIX goes up. So keep that in mind. So how does volatility impact most indicators and trading systems? We're at an event this week where a lot of educators are going to be talking about different indicators and different systems. And I think when you learn about these, keep volatility in mind at all times, because it has a major impact on how different indicators and systems work. But the bottom line is that volatile markets can be extremely difficult to trade. And we'll just demonstrate that with a very generic example. Obviously, on the left side of the screen here on this generic chart, if a security were just to move up in a straight line, it would be very, very easy to make money in the markets, right? So you start at point A, you end at point B, and there's no bumps in the road in between. That's, be pretty nice, right? But unfortunately, it doesn't work that way. So more realistically, this is what we see in a price chart with a series of up and down moves from point A to point B. So while you might potentially start out at the same point A and end at the same point B, the road along the way can be windy and bumpy, right? And that's what can create difficulties for us as traders and investors. So we need something to navigate this to help us smooth out the windy roads, right? And here's what I'm going to give you guys today to make it easier for you. We're going to look at how to use the VIX as a forward-looking predictive indicator, how to spot potential market sell-offs and corrections, how to protect your portfolio when these occur, as they inevitably do and have in recent past, how to buy cheap insurance when it makes the most sense. We're not going to get real deep into options today, but we'll talk a little bit about how to use options if you're familiar with them, particularly on the VIX when things start to get ugly, how to apply volatility and momentum to any market in any time frame, how to help prevent entering bad trades. So when we get into the indicator, we'll talk about some built-in features that help keep us out of trades that we wouldn't have otherwise wanted to get into. Losing trades are inevitable with every indicator and system, but we need something to help filter out a lot of the whipsaws and bad trades. So we're going to talk about that. We'll go over some examples together and then stick with me to the end, and I'll show you guys how you can get my top indicator that I use in the markets. And as Jeff mentioned, I'll go through a little bit of my background. I do manage a hedge fund, and I'm also a professional trader. So I do trade for myself for a living. I have over 20 years of experience trading stocks, options, and futures. I received professional training at Morgan Stanley as an intern at their trade desk. I'm also the founder and chief investment strategist of Altos Trading. So we're an educational company and software company that produces softwares and trading and investing education for our members. And we have over 50,000 of them in over 100 countries across the globe. And as I mentioned, I manage money professionally for my clients in my hedge fund, Altos Capital. We won't really be talking much about that today, but a lot of the education and tools and things I'm going to be sharing with you in our session today are things that I deploy in my hedge fund. And I'm also the founder and creator of the Trade Trend Signal software. So that's going to be a focus of our session today, because we're going to be looking at how to use predictive analysis to forecast future price movement, future trends, momentum moves, etc. And what we've done is we've developed an indicator software in partnership with MetaStock that can help us do that. And there's some really cool things that set this indicator apart from a lot of the other indicators out there. So I'm going to run through a few of those with you. What it does, and we'll shortly demonstrate this on charts for you, is it provides accurate buy and sell signals up to 3 candles in advance of an anticipated trend or a momentum shift. And again, we'll demonstrate for you how that works and what that looks like on a chart. But it's designed to give us an advanced notice of an anticipated move. And it does it with a proprietary blend of momentum algorithms that read the market in real time. And it includes trailing stops to help lock in profit. So it also has a trailing stop algorithm for when you get into a successful trade, how do you know how long to stay in that trade? We've built a really cool algorithm around this to help you do that. So it can help predict short-term and long-term trends with really astounding accuracy. And it works with any asset class, right? Any security, stocks, futures, Forex. I've used it in all of the above in real money trading. And it also works on any time frame. So regardless of whether you're an intraday trader and you're trading off a 5-minute chart, or you're like me and you trade mainly off daily or weekly charts, it can be applied to any time frame. The time frames are fractal. The algorithm is designed to identify potential future trend moves, regardless of what time frame we're using on our chart. We also have a lot of members who use it to trade options. So it's a great tool for options trading. If you're trading directional option strategies, they're very time sensitive, right? You really need to be correct on your timing, as well as a lot of other things, the magnitude of the move, etc. So we've designed it to help with that as well. And I personally also use it for options trading. We're going to look a little bit about at the VIX and about using the indicator on the VIX with options here in just a second. A few other things. So it does not repaint. Once you get a confirmed signal, it stays on the chart. So unlike many indicators out there, it does not repaint. You don't have to worry about looking back on a chart and seeing something that wasn't actually realistic. It has built-in protection to avoid whipsaws. So we're going to talk about the entry criteria for the signals as well when we get over to the charting. And it helps us capture a lot of the trend before it reverses. So never believe somebody if they tell you can get it in right at the bottom and out at the top. But we want to capture as much of the trend as possible. So it helps us do that. And it's designed to limit losses and let profits run. So when we look at an important factor in trading and investing is trade expectancy. A lot of people get hung up on, what's the win percentage or, things of that nature, where you can have a high win percentage in a losing system. Conversely, you can have a low win percentage in a very successful, profitable system. So what's kind of built into that aspect of trading is the trade expectancy. So not only do we want to look at win rate, we want to look at average wins to average losses. And we've designed it to help improve that component. It can also be used with any other indicator system. So if you're already using an indicator that you like, or you have a system in place for trading or investing, this can be a great added benefit that can be used as further confirmation, or it can be used as a standalone. But we have a lot of members who use it with other indicators to help remove the guesswork involved with trading. All right, so we're going to jump over to the charts, and you're going to discover why volatility is one of the only leading indicators of market direction, how to identify when markets may be vulnerable to a sell-off, and how to identify when the market is likely to go up, right? Wouldn't that be nice to know? How to determine exactly how far the market is likely to go up. So, we don't have a crystal ball, so we need to use some sort of an adaptable algorithm to gauge trend strength and momentum to help us get out before it reverses on us. And then again, stick with me to the end of the session today. We'll be together till just the end of the hour. And I'll show you guys how you can get your hands on a tool that it's changed my trading forever. And we found the same for a lot of our members that use it. So let's go ahead and get into the fun stuff. I'm going to get over to the MetaStock platform. Hopefully you guys can see that. Grab a quick drink of water. Sorry, I've been doing presentations like all day yesterday, and my voice is starting to go out, so I apologize, but grab a quick drink of water here. All right, so hopefully you guys can see my charts. So we're in the MetaStock platform, and I've got a chart of the CBOE volatility index, pulled up the VIX. And we're going to kind of take a look at a few things here. So I mentioned generally when the VIX is below 20, it's considered relatively low volatility conditions. And even in the context of an uptrend in, let's say the S&P, you'll still get periodic VIX spikes. So like looking back at last year, we see that the VIX spent a lot of time below 20. In fact, I drew the line in the sand there for you. The blue line that you see there is the 20 level. So we spent a lot of time here below 20 last year with some, brief spikes above 20. This year, things that, the structures change, right? So entering into 2022, we started out below 20. We got a very significant spike up until around the 40 level in January. And we've seen some retreats from that level, but you'll notice that we're kind of basing around the 20 level on the VIX this year. We've dipped below it a little bit in late March, early April, and we're back up, right? So I'm looking at real-time pricing on right now on my other screen. So right now it's at 29.37. So that we're elevated VIX level. So you'll notice we're going to talk about how to use this. And for those of you who aren't familiar with the VIX, you can't trade shares of the VIX like you could with a stock. The VIX only has options that are tradable. So we'll talk a little bit about how you can use options here, but we're also going to look at using the VIX with our trade indicator signals to time the S&P, and you're going to see that's really cool. So you'll notice that I'm going to zoom in here, some signals on the chart here, right? You see some diamonds and some arrows. So let's talk about what those are. So we'll just look at this one here, for example, back on March 30th. So you'll see there's a green diamond. Zoom in a little bit more so hopefully you guys can see that there. All right. So a green diamond is, recall that I mentioned that we've designed Trade Trend, the indicator, to give us up to 3 candles of advanced warning of an anticipated move. Okay, so right now we're looking at a daily chart. So the idea here is to get up to 3 days of advanced notice of an anticipated move. And that's what the diamond is. So the green diamond below the candle is the buy notification. So it doesn't mean, if you wanted to take a trade off the signal, you go in and buy it at the time the diamond shows up. That's simply the anticipated move over the course of the next several days. Now, if that move doesn't take place, then that would be ignored. So if you see an arrow that follows the diamond within the next 3 candles, that shows us that the suggested entry price that the algorithm gives us, and I'll show you how to find that here in a second, has triggered. The security, in this case the VIX, has hit that entry price. All right, and so what we want to look for, I'll kind of zoom out here for you, as it relates to the VIX, is we want to look for these buy warnings below the 20 level, because that's when volatility is low, and there's a greater likelihood of a spike. In fact, it's inevitable the VIX is at some point going to spike up, right? Because markets don't go straight up, and it's inversely correlated. So we have our buy warning. Anytime we get one of those on the VIX below 20 is when I would look at using either a portfolio protection by, let's say, buying VIX calls, or a vertical call debit spread. We're talking options here. Or even taking a speculative stance on the VIX by, let's say, buying call options. And I'm gonna pull up the commentary so you can see there's an expert commentary that comes along that gives the entry price. And so I'm mainly paying attention to these buy predictions, the green diamonds below the 20 level. So you can see when we get these, they're highly reliable in projecting a future VIX spike, which correlates to a sell-off in the S&P and generally the broader markets. So see, like back here in October, we get 3 buy warnings below the 20 level, and there's our VIX spike. And then you see here, right at the start of 2022, we get the buy warning. Okay, that's telling us that VIX is below 20, and there's a high probability it's going to spike. And there's the spike, and that was the sell-off in January. This one came in above 20. That's a little more of an advanced concept, but if we get support around the 20 level and a rejection, this one might be one I'd pay attention to. But I really want the ones below 20. And here's another one in later March, right? The one we were just looking at. And there's the big VIX spike. Now it can work the other way too. So you'll notice there's also red diamonds. So the red diamonds do this a very similar thing to the green diamonds, but they give a prediction of a down move or a selling opportunity instead of a buying opportunity, right? So you'll see like on this most recent VIX retreat, and the market turnaround that just took place over the last week or so came in on May 12th. So there's a projected move down in the VIX, and you'll see that triggered the next day. So the projection followed through. As the VIX was retreating previously in early May, there was a projection of a further move down on May 4th, but you'll notice it didn't follow through, right? So price on the VIX actually did not come down into the entry price. So that's what I'm going to talk about real quick now. Not every prediction results in a triggered signal. So a really cool thing that that MetaStock provides is expert commentary. So expert commentary is basically like having me sitting there in a chair right by you, telling you, giving you instructions on how to take the signals. And it's all written out for you for every, candle and the time frame you're looking at. So in this case, on this daily chart, looking at the different days here, we can see what the instructions were for the signal. So I just went back to, actually, let me go all the way back to May 4th. So here was a projected sell that didn't follow through. So you'll see that the commentary tells us the trade trend projects a move down, and criteria for sell setup has occurred. So it's going to give us a suggested entry price. In this case, 24.88 or 24.89 if we round up. All right. It's also going to tell us not to take the trade if there's a gap down in price overnight. And then it's going to give us a trailing stop level. But let's look at the suggested entry price, 24.89. Okay, so that's going to be just below the low of this candle. Now, remember, I mentioned one of the things we've designed the algorithm to do is keep us out of bad trades. It can't keep us out of every losing trade, but it can keep us out of ones that don't follow through with the anticipated direction. And that's what happened here. So there was a sell prediction with no follow through down to the entry price. So that's why we place our entry using a sell stop order below the candle of the projected move. Okay, so that would have been, again, down here, right around 24.89. No follow through. Now that's good for up to 3 days. So over the course of the next 3 days, the VIX spiked up again and never followed through. But then we get the next, and let me fast forward to this sell prediction here. We get the next one on May 12th, right? So here's the red diamond, the sell prediction. And if you look at the commentary, once again, we have a prediction that the VIX is going to move down and the criteria for sell setup has occurred. And it gives us our suggested entry price, right? 31.65 roughly. So again, that's going to be just below the low of this candle. And there was the trigger. So there's the arrow, right? And the follow through and the trigger. So it kept us out of this one that didn't follow through. This one did follow through and triggered. Okay, then we get a VIX retreat and the subsequent inversely correlated up move in the S&P. So really cool here. And I'll also point out, as I cycle through the trading days here, now we're on to May 13th, the day that we hit the trigger price, you'll see the suggested short entry trigger price was reached, initiating a sell short position, and it gives us the stop loss value for tomorrow's trading day. So see how this is giving us forward-looking predictive information instead of telling us something after it's already happened. Okay, and as we go on to the next day, this is the next trading day, May 16th, you'll see that the trailing stop is getting trailed down as price moves. And so now the trailing stop is at 31.25. Okay, so nice move, down move here in the VIX projected by Trade Trend. Let me go ahead and take the commentary here. By the way, I'm going to leave time for questions, guys, at the end as well. So if keep your questions written down on a notepad or in the back of your mind so that we can cover those. But I got a lot to get through, so I want to make sure I get through everything, and we'll stop for questions. Okay, so that's kind of how we use the VIX, and there's really cool option strategies that we teach around this. In fact, we do a free live session that I host every Tuesday evenings at 7 p.m. Eastern, where we use this tool, and we talk a lot about the VIX. That's a tongue twister. A lot about the VIX, and then and how to use it with the trade trend algorithm, and then also option strategy, right? So, like for instance, when we're hitting resistance zones up here, like this 35 to 40 zone, and we're getting sell predictions here from trade trend, like this one back in early December, or these two this year that we've looked at up in this resistance area. For instance, we might look at a bear call credit spread strategy, or even selling calls as an options income strategy with the algorithm and the VIX resistance levels. So there's a lot of things that we play around this. But for basics today, just know that we're looking for the green diamond predictions for below the 20 level. So I'm going to zoom out even more so you can see how the accuracy here and how many of these occur. But when we're getting these green diamonds below 20, notice how virtually every green diamond that you see here resulted in a VIX spike, right? Boom, boom, boom. And some of these that are near the 20 level, also we get big VIX spikes as well. All right. Here, let me actually go back to, because this was the real big one right back during the Corona crash. So see that it's a little small here, but February 19th, there's our green diamond below 20. This was the crash of February, March 2020. There's the VIX spike up into about the 85, a little above 85. There was the prediction just 3 days, really 1 day, because the spike started the next day on the 20th. But till it really gapped up above 20, we got the prediction down here on February 19th. So you can see that these are really useful for helping us time VIX spikes. So that's how it relates to the VIX. So what does that mean then as it relates to the S&P index? Well, what we generally want to find, so we want to look for the correlations here. Like for instance, a buy at a VIX below 20, buy warning, right? With a sell on the S&P around the same time. And often we get that on the VIX before it happens on the S&P. So that's pretty cool. That's true predictive quality, right? We're not using lagging information or a lagging indicator. So like here, we got the green buy prediction on March 30th on the VIX, right? Below 20. And then when we look at the S&P, so that would have been here on this day, right as it's turning over. So the all-time high in the S&P was just the day before. There's the turnover. The VIX buy warning actually came in that day and told us. And then we got even additional confirmation on that we're looking at the SPY, the ETF that tracks the S&P 500 on daily chart. That came in on the 31st, the next day. That gave us further confirmation. There's the red sell prediction. There's the trigger. And there's the sell-off, okay, and so you can see, how these give us advanced warning. And if we want to really find the good ones at big turning points, like here was the previous high in the S&P back at the end of December, early January. If we correlate that to, there it is. So there's the January 5th, the buy. Pending buy from a trade trend on the VIX below the 20 level, okay? And there's our sell. That one actually came in the exact same day. Sell warning, January 5th. There's the trigger, and there's the sell-off. So we kind of look from a high-level overview. And again, not every diamond is going to result in a trigger trade, but you'll notice that the ones that do, where you get the arrows, you'll see a lot of the green diamonds with arrows, even in trending markets, near the bottom of a pullback. And you'll see the sells at the tops before the pullback, or even before a market top or an all-time high and a major sell-off like we've seen this year. So you can kind of see from a high-level overview the accuracy of these. This is going back to the crash that we just looked at, and the VIX spike that occurred above 80 back in February, March of 2020. And look at, there's the March 23rd, there's the buy from Trade Trend, right? Practically at the bottom of the sell-off and the trigger. And then of course you get lots of them on the way up in the uptrend through the remainder of the secular bull market, which I believe is now shifted to secular bear, and is why we're seeing these VIX, these elevated VIX levels this year without much of a retreat back below 20. So that's how we use the VIX and to time entries on the S&P, in addition to the trade trend algorithm to help us even fine tune that more with tops and bottoms and market trend shifts and momentum shifts in the market. So two kind of main tools that we use here at Altos Trading. I also want to demonstrate, because there's so many great features and tools built into the MetaStock platform, I want to just quickly demonstrate a scan and how you can find these types of opportunities on any security. So we've got Trade Trend programmed into the MetaStock platform. You can scan for both long and short signals. So you know, some of you may not like shorting stocks, or you know, or others might, you know, trade futures or forex or something, and they do like to short. And then so we have those broken down by signal if you want to only look for longs or shorts. But we'll just run a quick scan on both long and shorts. And they have so many different watch lists that you can that are defaulted in here. I mean, you can scan not only with U.S. Securities, but even securities outside of the U.S., as you can see. And you can also create your own custom watch list. So like, for instance, I've created Jeff's futures watch list and Jeff's weekly options watch list. So the Power Console includes charting, exploring, system testing, and forecasting. So we're looking at the Explore tab, and we'll just use a daily interval. You can scan if you have the real-time data package on any time frame, because I mentioned Trade Trend gives you the signals in any time frame. And you can go ahead and hit Start Exploration, and it's going to run a quick scan for us here. So we'll let this run, and it's going to basically show us the current signals that are triggering for both buys and sells on equities that have weekly options available. So again, this is just kind of a custom watch list that I've set up. I do a lot of options trading, so I like to look at equities that have weekly options on them. Okay, so you can see it's run the long signal scan. Now it's working on the short signal scan. So we can just start looking at some of these long opportunities. We'll just kind of pick out a few and look at these. Let's look at Cardinal Health, just as an example. So just to kind of show you how this works, we'll just zoom in terms of signals, and we'll pull up, actually, let's pull up the expert commentaries so it can kind of help walk us through this. So we actually had a triggered trade there today. But you can see if we go back, there was the warning, right? Came in yesterday. So there's the green diamond. At that point, if we wanted to take a trade off the signal, that's where we would go ahead and use the instructions here to enter a buy stop order with our broker. And the buy stop is simply telling our broker that if the stock moves up into a higher price specified in the alert, that we would want to get into a long position. Okay, so that's kind of an example of how it works. So yesterday, the 17th, if we had run a scan, we would have seen this this pending buy warning, and this is one that is actually now triggered. And then we're kind of looking back, it looks like we got a nice sell prediction here after a run up, and a nice move down there. I got a nice little buy here in this small pop up in price there in mid-April. So you can see that it gives it, and like I said, it doesn't repaint. So you're going to see all the past signals on the charts. Here's another nice sell, nice buy warning, and you can see most of these are coming in the day before. So you're getting a day's of advance notice before the actual entry and follow through. This one is an example of one that didn't follow through. So the algorithm picked up a trend reversal, and we got one for a day. But this was the sell prediction on December 20th. So the entry would have been down below the candle. And again, it's good for up to 3 days, no follow through. This is an example of keeping us out of a bad trade, one that wouldn't have worked out. So there was no trigger there, no red arrow. And then we do get a buy here. So there's a buy warning. The uptrend resumes. There was the trigger, and got a nice little move up in cardinal health. Let's take a look at another one here. Oh, I lost my scan. There it is. Let's see. Just restart that. System test. I don't know where my scan went. Oh, there it is. It's on my other screen. Okay, so let's take a look at another. Pick one of these out. Trying to find names that I'm familiar with. Look at new core. Okay, so here's a signal on new core. So this one also came in yesterday. All right, so if we look at the expert commentary, we see that buy setup has occurred. Okay, so we're at the bottom of a big downtrend. We got a nice sell signal at the top of the uptrend here back on April 22nd. So I'd be looking for some level of horizontal support around this signal. Going back on the chart, I see that we've got some area of support here, buy signal. So this one's still early, but it did hit the trigger price today. So still has time, obviously to move up. But you see that we have the entry price, the suggested entry price, the trailing stop order, and that's going to be updated every day so that you can go ahead and manage the position. And you can see, like on the sell signal, same thing. Back on April 22nd, the sell criteria was reached. And at that point, if we wanted to take a trade off the signal, we could go ahead and enter a sell stop order. The suggested entry was at 159.89, roughly rounded. All right, and this one actually moved all the way down to 115. So that was another good one. So you can run these scans to find the current signals that are taking place right now. But this is by no means an endorsement to trade any of these. We're just using this for educational purposes, but just to show you how some of the live signals are currently looking. And so those are a couple I pulled out of the scanner. The scanner is a really great tool for making our lives easier and making it quicker to find these buy and sell signals. Now, the nice thing is when we find one, we generally have at least, if we're working off a daily chart, at least a day in advance, right, to get into the position. Even if you're intraday trading, like let's say you're on a 15-minute chart, you have up to 3 candles, so 45 minutes of advance notice. But at a minimum, you've got that up to 15 minutes of that first candle. So you get some advanced warning there. I also wanted to take a look at, I thought it'd be fun to look at Twitter. It's kind of one of the hot topics right now, right, with the Elon Musk buyout and everything. So let's take a look at the Twitter chart. I was curious if there's a current signal on it. So not a current signal, but let's see, a recent sell. Actually, there's still an open sell on. Let me pull up the expert commentary on Twitter. So the stock's taken a big hit, this month. So the sell warning came in May 3rd. It looks like. Let's go back. And this one actually got a trigger. Oops, a little too far. The next day. Okay, so May 3rd, the sell warning comes in, right? There's the commentary. Trade turn projects the move down. The criteria for the sell setup occurs. So it gives us a suggested entry price of 48.72. All right, so that's going to be just below the low of this candle, which was 48.75. So 3 ticks below the low of the morning candle. So let's say I wanted to take a short position on Twitter off this sell warning. So on May 3rd, I could go ahead and go over to my broker platform. I use the Thinkorswim platform and enter a sell stop limit order. And it actually gives you the order type to use as well here in the commentary at 48.72. Okay. And that means if Twitter comes down and trades down into 48.72, it would trigger me in the trade. So that happened here. They hit the trigger price the next trading day, May 4th. Got a little bit of a gap up, but nowhere near our stop loss. And then there was the follow through on the move. So this one actually looked, man, it went from, let's see. And you'll notice too, as I'm cycling through the days on the expert commentary on the left, it's giving us a new stop order each day to help lock in profits on a trade if we had taken a trade off this signal. So very handy, no guesswork involved. It's reading the trend strength and the momentum to give us the most opportune stop level to protect any open profits on an open trade from a reversal. So far, the momentum strength remains strong. Looks like as of today, the stop value's at 38.74. So the entry was up around 40. I think that's almost exactly 10 points, right? I think it was up around 48.74 roughly. And now the stop is down at 38.74, so 10 points. So that's about a 20% move down or gain in a trade if you had taken one off this signal. So this is a really nice sell one. I was curious to look at this one because I know Twitter's taken a beating since all the news of the Musk buyout. So just kind of a good demonstration of how it works even when things get ugly, right? So we don't want to just look at easy buy signals in an uptrend, right? So what happens when the stock wasn't an uptrend and then it reverses? Well, here's a good example on Twitter. Okay, so those are some of the things I wanted to demo for you on the platform and show you a few charts and how it works. There's a lot of features in here, obviously, and I'm sure Jeff will be covering a lot of these throughout the event this week. Including a lot of other indicators, but we have the trade trend indicator built in here. And again, what sets it apart is it gives us an advanced degree of anticipation or warning of a pending move, whether it's up or down, so buy signal or sell signal. And then it gives us a nice trailing stop level to manage any open positions and limit losses and let profitable or successful trades run, right? And that's really crucial. So as I mentioned, you can apply this to any market, and MetaStock is great for that. It provides access to many different both U.S. markets and international markets, forex, futures, in any time frame, and really any size account, because it's all scalable in terms of position sizing and money management. So that's kind of really up to you. And the beauty of an indicator like trade trend, when it provides predictive buy and sell signals before the move occurs up to 3 candles in advance, then the decision really is in your hands of, how do you want to act on it? Do you want to act on it? How many shares do you want to trade? Do you want to use options? And I love using this for options because I do some directional option strategies and I do a lot of option selling. And it really helps, I've found, improve my accuracy for timing entries on those types of options trades. Here's some examples just going back in the past of some really bad markets situations where we had a major market crash and how trade trend helped us navigate that. So this is the flash crash of August 2015. Trade trend provided a sell signal, and you can actually go back and verify this on your own charts if you decide to use trade trend. That came in right around or right before the market tanked during that flash crash of August back in 2015. It also gave a nice buy signal in early October at the double bottom before the market rebounded. This is going back to the 2008 mortgage crisis. So you can see that about midway through the year, the housing bubble burst. We're in the midst of this major mortgage crisis. The market's been in a nice run up until that point, Trade Trend actually provided a sell warning around May 21st before the market lost over half of its value. This is the S&P 500 index, right? And it also gave a buy signal in late November before the market rebounded. So kind of as the sell-off was losing steam and starting to turn around. This is going back over 20 years to the 2000 dot-com bubble. So there was the sell warning after the market had just hit these new all-time highs. The market had just been on this major tear from the tech run-up in the 90s, and then everything just fell apart, right? So the sell warning came in there in early September, and there's the market crash in the 2000 dot-com bubble. It gave a nice buy signal around mid-September as that crash started to stall out and reverse. So some examples of signals and periods in the market that were really, really ugly. And I also want to give you some real money examples. So I mentioned that I use this indicator myself, and I really believe that it's important if you use an indicator that somebody has created or programmed, that they're using it themselves in real live trading, and they can demonstrate how it's worked for them. Because if that's something that they can't do, then I would urge you to consider looking at another indicator. And so I mentioned I do a lot of trading in the futures markets, and I use the trade trend algorithm to help me identify trading opportunities in futures. And these are screenshots from my TD Ameritrade brokerage account. Trading typically just 1 or 2 contracts per futures market. So not real big positions here, which demonstrates that, yeah, there's some losing trades in here, but they're typically, and relatively small when you look at them compared to the profitable trades, right? So you can see that the profitable trades are outpacing and outperforming the smaller number of losing trades. And that's how you get a positive expectancy using a system or an indicator. And so we designed trade trends for that purpose, to help limit losing trades and help successful trades achieve a higher profit, right? That outpaces the losing trades. That's the idea, should be the idea with every system or indicator. So these are some real money examples from my personal brokerage account using the indicator in the futures market. So first of all, I want to thank everybody for being here today. It's been a pleasure to share some of the education here with you. And I also want to help you be successful in the markets like we've done with many of our members. And I want to give you access to my trade trend indicator starting as early as today. So this is a one-time opportunity to join me to discover how I trade with consistency. And I reveal every one of my special techniques and indicators that make what I've revealed today possible with absolutely nothing held back. So we don't just give you the indicator and say, good luck. As I mentioned, we hold weekly live sessions, and I'm going to get into the details of those. So you can attend those every Tuesday at 7 p.m. Eastern. They're all recorded. So even if you're not able to attend, but I host those, and I help coach our members through how to use not just the indicator, but a lot of our strategies, including option strategies. And we look at all different asset classes, futures, Forex, equities, ETFs. And we spend a lot of time together helping you become successful. That's our goal, is to help you guys be successful. And there's a lot of things that we provide to do that, not just the indicator, not just the weekly live sessions. So what you're going to get in addition to a year of trade trend on MetaStock that comes with the exact entry and exit signals, the trailing stop levels, the live interactive trade sessions, is also access to our members area and replays and recorded training sessions. And you're going to get full support and personal coaching from me and my team on our weekly live sessions and in our members area forums. You're also going to get, and I'll tell you how you can get this here in just a minute, my top 2 weekly trade trend picks that I send out to our members every Monday. So I actually handpick 2 signals every single Monday and send those out to all of our trade trend members. So we've set this up, this package, to help you guys cut the learning curve and start trading with more consistency. That's our goal for all of our members. And this is a breakdown of what the package comes with. So again, you get the year of trade trend on MetaStock. That normally retails for $1,499. You get our weekly live sessions, which normally retail for $550. And again, I host those myself. I spend an entire hour, sometimes more, with you on a weekly basis in a Zoom session. So, and again, those are recorded. If you're not able to attend, not a problem. I help personally coach you guys through different strategies, through the trade trend signals, and I do that with you guys on those sessions. So normally a personal coaching from me in that format comes at a $1,997 retail value. We're throwing that into the package as well. You're also going to get access to our exclusive invitation-only Facebook group. We have around 900 members who use a lot of our strategies and trade trend indicator themselves. So you can also interact with a group of other members. And normally membership to our Facebook group retails for $199. You're also going to get, this is really cool. So I've covered, kind of scratched the surface of some of our strategies that are used, that we use here at Altos Trading. But we have a whole lot more up our sleeve, right? That was just a little taste of what we offer. So we have over 9 hours of recorded online content and training of all of our best strategies. It includes option strategies and as well as trade adjustments that you can watch at your leisure, right? It's available in the members forum. Normally it retails for $900. We're throwing that into the package as well. To ultimately help you guys learn to trade really any asset class. A lot of our strategy and methodology is universally applicable. So whether you're trading Forex or futures or stocks or options, I believe this can be very beneficial for you. And then the extra bonus we're throwing in, again, is my top two weekly trade trend picks. So those go out every Monday. We do sell those. So they normally retail for $997 for a year's worth of my 2 picks every Monday. But we're throwing that as bonus number 1. So you get that at no additional cost. And we're also going to throw in a second bonus, my latest ebook, How to Create Risk-Free Trades. It's a great money management tool and ebook that complements a lot of what we teach, and as well as the trade trend indicator. And it teaches different money management techniques to mitigate risk in trades, and even in some cases eliminate it. So that retails for $97. We're throwing that into the package as well as a bonus. So the total retail value on our package is over $5,000 if you were to purchase all of these items from us individually. But we package them up as a special offering for the MetaStock event. And you're going to get everything you see here on your screen, valued at over $5,000 for 80% off. So it breaks down to about what, $2.30 a day, roughly. Only $9.97 for everything on the screen for the year. So really good deal, 80% off the retail, and you're grandfathered in. So not only do you get to keep the bonuses and the professional trading series online course, and so many of the other things that we're offering you in the package, even if you decide that you want to continue beyond the year, you'll never pay the full retail price for the trade trend signals. So you're grandfathered in at that 80% off discount. And because it's such a great deal, and it does take a lot of work on both MetaStock's part for getting you set up on the platform, because they provide a really incredible white glove treatment. It takes work on our part too. So this isn't any sort of a marketing tactic or anything like that. We really truly do limit it to 25 seats because we don't want to compromise customer service just for the sake of selling more packages. So we want to make sure we can really spend time with you guys and get you set up and help you be successful. So for that reason, we limit it to the first 25. So if you want to be one of the 25 that gets the trade trend package on MetaStock today, you can go to altostrading.com/MetaStock, and we'll start getting you set up, and you'll get everything that you see here on your screen. And I'm going to throw in a guarantee here. I realize that with anything new, right, there's a leap of faith. You need to try it out. You need to see it for yourself, and you need to prove it to yourself. And I understand that because I would be the same way. So for that reason, we're offering a 30-day full money back, no questions guaranteed. So if you're not convinced this is the only indicator that you need, we offer a full 30-day money back guarantee. That's all you have to say. I don't think this is the only indicator that I need. I need other indicators that are working better for me or that I believe will work better for me. That's fine. Then we'll say, hey, here's your money back. Wish you the best. So that also is included, that full 30-day money back guarantee. And again, you get the 2 bonuses, my top 2 trade trend picks emailed to your inbox every Monday evening. as well as bonus number 2, my latest ebook, How to Create Risk-Free Trades. Let your profits run with little or no risk. We'll just share a few comments from our members who have used Trade Trend. Jay Thomas's very impressive results. Well done. Thanks for helping us little guys with small accounts who dream of growing our accounts over time and reaping the benefits of consistent monthly income. Our Julian recently wrote into me and said, this is an excellent indicator. One of the most powerful indicators I've used. I use this indicator for my Great British Pound pairs on Forex and Bitcoin. I recommend this indicator for anyone who is serious about winning trades and making consistent money. Frank wrote in and said, how refreshing to have someone produce a product that does what it says. I thought it was too good to be true at first, but you've proven me wrong. Thanks, and keep up the good work. And lastly, Allen says, I've been involved with lots of software testing. Trade Trend does exactly as it says, and I found some nice setups. So these are just a handful of the hundreds and hundreds of testimonials we get from our Trade Trend members, and wanted to share a few of those with you. I want to go ahead and open it up to Q&A. Looks like we have about 5 minutes left, and I'll, if Jeff, if you can relay any questions to me, that would be fantastic.
Of course.
And
we have tons of them too. Tons of questions.
All right, we'll try to get through as many as possible. If I don't get through all your questions, here's our contact information, support@altostrading.com. You can shoot us an email, or visit our website, altostrading.com. You can also call us toll free there. So.
And for any that we don't get to, I will do my best to answer by typing during the next presentation. Okay. Very quickly, Bobby wanted to know, what is the renewal price next year?
Great question. Yeah. So you're grandfathered in at the 997. So if you want to break that down into like a monthly or quarter, we could do that for you when the time comes. I'm sure whether you purchase through MetaStock or through us at the altostrading.com/MetaStock link, just give us a quick call or email when the time comes, and we can talk about that with you, whether you want to do the full year, break it down by month or quarter. But either way, you're grandfathered in at the 80% discount, so it renews at that rate as long as you're a member.
All right. I love this question from Andy. It's always one of my favorite questions. Do you have any suggestions for option pricing, such as strike price, expiration date, et cetera, for equities? So any suggestions in terms of what options he should be looking at?
Okay.
Are you looking at in the money?
So that's something we cover extensively on our Tuesday live sessions. Obviously it's dependent on the strategy and the time horizon, right? So there might be scenarios where we buy in the money, call spreads on a anticipated uptrend, or sell far out of the money, put credit spreads. So it really depends on the strategy. But we cover that a lot in our weekly live sessions. And as it relates to the VIX, since we covered that on the session today, for instance, personally, I do a lot of call selling on the VIX. So I'll sell call spreads, out of the money call spreads, but slightly out of the money, because I use the Trade Trend indicator for timing of those shifts, as you saw on the chart. So I might sell like a 1 or 2 strike out of the money call spread on a VIX spike, or even a naked call. So I do a lot of that. And we also teach trade adjustments. So our professional trading series online course that you get access to if you purchase the package today, comes with all of our training on trade adjustments with options. So if you have a losing option trade, we teach different adjustment tactics to help mitigate those and even turn them around into winners. So we get pretty complex with options as it relates to strategy selection and trade adjustments. So hopefully you decide to join today, and you can get access to all of those answers to those, as well as on our Tuesday weekly live sessions.
Bobby would like to know if it works well also on monthly and weekly timeframes instead of just daily.
Yes, I found that it does. In fact, I use it to analyze longer term markets and trends using the weekly and monthly charts. I generally place my trades off the daily time frame, but I often look to see if the daily aligns with the weekly and monthly anticipated direction from the Trade Trend algorithm. So yes, I find actually that it works very, very well on high time frames.
Okay, I think we have time for just one more if we hurry. Bobby wanted to know, on the chart, there's different colors like black, maroon, green, and then he wanted to know what those colors meant.
Oh, good question. So, Jeff, you can correct me if I'm wrong, because that's something that's unique to MetaStock. The colors are basically designed
I'll tell
to show the strength.
I can tell you exactly what they are. Yeah. So
Yeah,
black means you're just not in a trade. A bright green means you are in a trade that just triggered and that the momentum is good. When it trades to a kind of a darker green, it means that the momentum is phasing out. So, and then the same as short. If it's bright red, it's going to be basically the momentum is still in your favor. And when it starts to hesitate a little bit, it'll change the coloring just to kind of give you a heads up. You'd still want to respect your stop no matter what, but initially it's going to always be bright green because you're getting a strong, powerful momentum move. As that momentum waves, it'll give you a different color. And then when you're out of the stop, it's black.
Yeah, so it's basically showing you the strength, and then yeah, the black is the flat. There's no trade, basically, it's flat. So yeah, thanks for elaborating on that. I wanted it to be explained well, so you did a good job.
No, thank you. I was wondering if I did. Michael, we'll do one more, and then I think we absolutely have to break. Can it work in all markets? FTSE, Japan, etc., DAX, etc.
Yeah, so we designed it to be really fractal in nature. It's a trend and momentum based algorithm. So it's gauging trend reversals and momentum strength. So when someone asks, does it work well on this or that? I would say that it works. It tends to work really well in volatile securities and trending securities. And if it's a stock, a security that just basically moves sideways, as long as the range isn't too tight, it can work well to identify tops and bottoms of the range. Where it may not work as strongly is if the security is really not moving anywhere. If it's just moving sideways without much price fluctuation, it's going to be very difficult for the algorithm to find any significant trend strength or momentum strength there. So that's kind of the best I can answer, but without looking at the specific security, obviously that's something you'll need to review on the chart yourself. So hopefully that helps.
All right. With that, there's a whole bunch of other questions. I'm going to actually do my best to answer them. And Jeff, I want to say thank you for coming in. I appreciate your time today. I appreciate it.
Thanks for having me. It's always a pleasure. Thanks so much, Jeff. And thanks everybody. And welcome for all of you who are joining. We'll be in touch and reaching out to help you guys get set up here very soon.
All right. Thanks, Jeff.
Thank you.
All right. Let me go ahead and kind of get some changes made over here. Let me go ahead and make me the presenter. Turn on the camera. All right. And Jeff does such a great job. So I think he does a really good job showing what that is and how it works and how to do it and all that kind of stuff. The package that he's talking about includes the 12 months of the trade trend signals, the live trading sessions, the personal coaching, the Facebook group access, his professional trading course, the 2 bonus options, which include my top 2 weekly trade trend picks and how to create risk-free trades. You can get that at altostrading.com/metastock. I know a lot of people were requesting charts and we just didn't have time for them, but I want you to let you know if you're interested in looking at any chart. We can pull up a chart for you and send it over to you for whatever instruments you're interested in. If you want to get in touch with us here at MetaStock, we can help you get set up for that offer, and we can answer your questions, and we can help you get set up for MetaStock as well. So get in touch with us. You can give us a call at 800-882-3040, and you can chat online with us at metastock.com/saleschat as well. So I want to say thank you for Jeff for a great session there. Appreciate it. Always does such a good job in terms of kind of putting everything together and kind of putting it there. So give us a call if you want to take advantage of that. I'd recommend it. 800-882-3040 or metastock.com/saleschat. Sharon asked a question I'm going to answer real quick. She says, I'm registered. How do I enter to win the prizes? Sharon, because you are in GoToWebinar, you're registered to win the prizes. So I would every time we do a prize drawing, you will be one of those lists and the people that we look for. So in terms of the other questions, like I said, after we get Jerry started, I'm going to do my best to answer all of those questions that exist there. So Very quickly, I'm going to say thank you to CMT Association for sponsoring today's event. They do a great job. They've been a great sponsor. Very, very well respected, great reputation organization. If you're looking to improve your career and you're doing trading, or you want to have a career in trading, a CMT Association accreditation will help. Go to cmtassociation.org and you can find out more about that. So, and of course, we're MetaStock. If you have any questions, give us a call. We're happy to help. Our next presenter today is Jerry Allison. Jerry is been in lots of presentations with us.
Right.
He's going to talk. Hey, Jerry, how you doing?
Fine. How are you doing, Jeffrey?
Yes, I'm going to tell everybody that you're going to talk to us about if you feel like you might be paying the government too much money based on your short-term capital gains,
Yes.
because of your MetaStock usage. Jerry's going to tell us how we can maybe look to fix that.
Fantastic.
How's that
Yes,
sound?
we are.
All right. So let me go ahead and make you the presenter.
All righty.
Okay. And then that should pop up here. I'm also going to make you the organizer too, so you can see any questions that come in. And then I can see your screen, but what I see is the preview page, or the speaker preview. And now I can see the proper screen. So you look good.
Fantastic.
You sound good. I know your webcam popped on real quick there. Do you want your webcam on or off?
No, we can leave it off for right now. I don't know
Okay.
that I'll turn it on maybe at the end, and we
Yeah, it's up to you.
have a little conversation. But for right now, let's just go ahead and get into the presentation.
It's all you, Jerry. I'm out
All
of
right.
the way.
Thanks, Jeff. Appreciate it. And I'm glad to be here. I'm glad you all are here today. And what we want to do today is we want to talk about income taxes, as Jeff mentioned. One of the fearful topics, as he was saying, you don't want to pay too much in taxes for the capital gains you get. And I was thinking zero, or anything over zero, is too much in taxes. So, but we can't control that all the time. So we want to be able to control what we can control. So today I'm going to present trader tax status and investor status and what it means to you. Now, this presentation is broken down into three parts. But first of all, we're going to do the presentation. And then, as I mentioned a little bit ago, we'll save a little bit of time for questions at the end. I'd like to answer any questions that you do have. Also, the presentation here is going to be broken up into three parts. First of all, we'll talk about trader tax status. Now, some of you may have already read about this on the internet or in IRS publications. We're going to break it down a little bit, try to help you understand it, because there is a lot of information out there on the internet that is false. We also want to, this is an extremely gray area, so we want to pinpoint down as much as we can, and then we'll talk about things that are a little bit gray, but also that we want to do what we can to do to minimize taxes. Then after we get done with trader tax status, we'll talk about business structures. Business structures are very important, and whether you realize it or not, if you are trading to earn any type of income, you have a business. It may be small, but it may be large, but you have a business and you need to think of it in those terms. And finally, when we get to the end of this thing, we'll talk about the mark-to-market election and what that means and who that applies to. Now, before we get going, I got to make the lawyers happy. So we are going to do a disclaimer. To the best of our knowledge, the information given in this webinar is accurate. As of the date of the webinar, tax changes happen constantly. And one point that I want to mention here, I always mention this in a webinar, or try to, is it's not only laws that pass through Congress that are important, it's also important what the tax commissioner does, because Congress gives the tax commissioner tremendous amount of leeway to enforce the tax code. And so we have to kind of pay attention to what the commissioner does, as well as to how things are done. He cannot raise taxes. He can't set up credits or anything like this, but he can set up administrative functions, and that's very important. And matter of fact, we had a change this year with the mark-to-market election, so and he changed that. Also, the seminar does not establish a professional or confidential relationship between you, myself, and Traders Accounting. And finally, Traders Accounting is not a law firm. We are a CPA firm, but we're not a law firm. So the advice here should not be construed as legal advice. But, you know, we do give tax advice and do tax consulting as well. So, and just briefly, our contact information here. Our website, I will get this into the chat here as soon as I can. Matter of fact, I've already got it set up. And so there is a link here. And in fact, I duplicated it by accident. So you just need half that link. So our main website is www.tradersaccounting.com. And phone number is 800-938-9513. And then, of course, our email is learn@tradersaccounting.com. So now, I always start off this presentation with the most important thing for any business, but I'm going to kind of sidetrack that for a little bit because we want to get into that. I want to give you a piece of the puzzle here that I have noticed in the last year, and it's something extremely important. And where this stems from is I've talked to people, numerous numbers of people from the beginning of the year who made a fortune off of GameStop and AMC. And you all remember that last year. And they came back and said, man, I made all this stuff in 2021, and then I lost it all in January of 2022. And unfortunately, I have the bad news of telling them you're going to have to pay the taxes for whatever you did in 2021, even though you lost it all, and then try to recoup the losses in 2022 and forward. And so far, nobody's been happy with that because it's really not a good situation. But it goes to the importance of this presentation. You need to plan for taxes now. Don't sit there and wait for this huge fortune to happen and then lose it all over an artificial time barrier, which would be a year, and then realize that you're now stuck. So towards the end of this thing, I want to kind of give you some ideas on what to do. But the second thing that's important about this is psychology. Now, I'm not going to get into a lot of psychobabble and stuff like that, but I am going to say that you're going to these seminars, MetaStock and maybe some others, and you're training and you're learning, and trading is psychological. And you have to have a good mindset, and you've got to stick with your plan. It's got to be rigid, and then you just stick with whatever you're going to do. However, another trend I have noticed is that traders have a tendency to get taxes involved in that plan. And when you get taxes involved in that plan, the whole plan gets screwed up. No matter what you're trading, whether it's futures or commodities or stocks or options or cryptocurrency or Forex, whatever it is, if your mind gets fixated on taxes, you are going to screw up your trading plan. So actually here, I'm going to do it right now. Here's the tip for the day. Each month, when you get to the end of the month, one of the last few days of the month, look back at what you've done for the month. If you've made some gains over the month, then put some of that money back into an account for taxes. Make this part of your plan. Make it as something that you do automatically. So put money back into an account for taxes, and then you don't have to worry about it. And you don't have to trade differently. You've already socked some of it back. Usually 25 to 30% is what I recommend right now. It depends on whether you're in a high tax state like California or a no tax state like Texas or Florida. You still want to put some money back to take care of the taxes. And if you don't have to worry about that, that does not affect your trading. So that's my tip for the day, and something that I've noticed over the last few weeks. Now, it goes to the heart also of what we're going to be talking about here. What is the most important thing for any business? And I'm talking in general businesses, anything from restaurants to grocery stores to tire shops to whatever. Most important thing, and I've asked lots of people, what is the most important thing in business? And they'll come back and say, you got to have customers, and you got to have sales and all that stuff. And traders don't have all this, and yet they're still a business. The most important thing that any business can have is cash flow. Cash flow is king. And what you guys are doing in your MetaStock seminars here is you're learning how to bring in money. You're learning how to increase the revenue for your business. Remember, I said you have a business, whether you realize it or not. And the goal there is to bring money in. If you constantly lose money, you don't have anything left, and then you can't invest anymore. So the idea is to bring cash in. Now, most people look at that and they say, okay, that's great. I can bring money in, but they ignore a second aspect of this thing. Now, I presented at the Money Show in Vegas here last week, actually. And here's what I want you to get a picture of. A lot of people think a business, whether it's trading or not, is just money falling from the sky, and it's not. There's a couple things involved in businesses. Money just doesn't fall out of the sky simply because you declare you have a business. But you've got to have cash flow coming in. And there's two things inherent with that. One, there's work involved. Well, you guys have been watching presentations about doing the work, looking at charts and graphs and analyzing what's going on with a particular trade and deciding whether to make that trade or not. There's some work involved there. But there's also something else that's nefarious here. I want you to picture a bucket. And we're trying to fill the bucket with water. Think of that as money. Your bucket is your account, if you will. You're trying to fill it with water, with money, but there's holes in the bucket. The holes represent expenses. Every business has expenses. You make a trade, the broker takes out a commission for that trade. You just incurred an expense. So you all have expenses, whether you record them or not. And so that cash flow works two ways. You want to maximize the stuff coming into the bucket, but you want to minimize the stuff going out of the bucket. And that's where we come in with taxes and trying to minimize some of those expenses. So regardless of the business, if the cash isn't coming in, the business is going to starve to death or not staying in. So you can kill your business two different ways. One, by losing all kinds of money through the market, and certainly that would kill it real quickly. Or you can kill it by having all kinds of expenses and not controlling those expenses, particularly with taxes. And so that's what we want to concentrate on today. So the points here in this webinar are designed to either generate cash flow or protect your cash flow. You either want to be able to bring money into the company or your business, or you want to keep it inside of your business and not pay as much out and control that outflow. And just to kind of give you an example, I know a guy in Iowa. He's not a trader. He owns a different type of business. He brings in millions of dollars a year. And yet he's still losing money year after year. And it's because he cannot control those expenses. And we can't figure out where it's going. We're starting to look at that, but it's really a major problem. So you need to have this dual mindset. You want to bring money into the business, in your trading business, but you got to keep money from leaving the business as well. Now, one of the ways of keeping money from leaving your business, your trading business, is trader tax status. Now, this is a rule by the IRS, or status, I guess would be better. That's why they use the word status, that allows a trader to deduct trading expenses from a tax return as a business. So what kind of trading expenses are we talking about? Well, certainly margin interest, if you use margin interest, short locate fees, your computer that you use, office furniture that you might use, the MetaStock seminar is an expense. Any other seminars or training classes that you might take, your home office, that's a deduction. If you've got, I mentioned search fees already, subscriptions, or thing like that, anything that helps you trade or enables you to trade, we want to be able to get those on a tax return. Well, why is that important? Well, let's go back to our cash flow for a second. And let's just take an example, then I'll explain why. You might be able to see from the example. Suppose a trader with trader tax status deducts a $5,000 training course. If the trader's in the 32% tax bracket, then by deducting that expense on the tax return, that trader just saves $1,600 on taxes. Now, what does that mean? Means even though the trader paid $5,000, there's a savings of $1,600 coming back into the business that can be reinvested. So in essence, the training course really only costs $3,400. You take the refund or the savings and taxes, and you reinvest that. And that's the goal here, is to be able to take the expenses that you're already incurring, put those on your tax return, and basically get the money back from the IRS so you can reinvest it into whatever it is you trade. So we want to be able to take those expenses and get something back for them. Now, there's a danger here. And I've seen a lot of business owners, I've been doing this for 30-something years, I've seen a lot of business owners fall into this hole. It is unwise to spend money just to get a tax deduction. It always results in a decrease in cash flow, and you really don't do anything. Here's why. The standard business principle says any money you spend, like for margin interest or trading commissions or whatever it is, that should recoup itself. In other words, it should pay for itself. It enables you to do something that you could not do otherwise and be able to make the money to pay it back. So if I buy a $2,000 computer, that computer should be able to pay for itself in the long run. I should be able to make at least $2,000 extra to be able to pay for itself. So we're not just going out and spending money to get a tax deduction. That's worthless. You're wasting money that way. Anything you spend should be able to come back to you as far as revenue. Now, let me give you an example of somebody I talked to several years ago. He owned an auto repair business. And he came up to me, and I think it was the beginning of December, and he said, you know, I think I need to buy this piece of equipment for my business. It's going to cost about $20,000. I said, okay. I said, are you going to be using it in your business? He said, well, maybe once a year. I said, okay, you're going to spend $20,000 and you're going to get maybe a little bit of revenue back every year to pay for it. It's going to take you a long time to pay for it. I said, why are you buying this piece of equipment? And he said, well, I need the tax deduction. I said, you're going to spend $20,000 to get maybe $6,000 back. So you're losing $14,000 just to keep from paying the IRS $6,000. He said, yeah. And I said, you're never going to use this in your business hardly? He said, no. I said, that's really not a good idea. It's better, and this is part of the mindset we have to change, the psychology thing, is we have to get out of the mindset of not paying taxes and avoiding taxes and just setting it back so that we can pay them and just keep doing what we do best. And hopefully that's making money in the market. So trader tax status is a great idea. It allows you to actually deduct your expenses on your tax return. Well, what do you have to do that? Well, there are some qualifications, and these qualifications are straight out of IRS publication 550. And try not to have your head spin as we read through them, because we will go through them in a better fashion than what I've got here. But here's what publication 550, and by the way, if you're doing any kind of investing, publication 550 is the one that you need to get from the IRS. All you have to do is go to the IRS website, irs.gov, and there's a search bar there. Type in publication 550. It will bring it up. It will bring it up in HTML format. It will bring it up in PDF format. I have the PDF format. It's downloaded to my computer, and I can pull it up anytime I want, whether I have the internet or not. You have internet problems or whatever. So here's what publication 550 says about trader tax status. You must first of all seek to profit from daily movements in the prices of securities or commodities, and not from interest, dividends, or capital appreciation. Number 2, your activity must be substantial. And number 3, you must carry on the activity with continuity and regularity. Now, if you're looking at those things, you're saying, what do those things mean? Well, I think Congress and the IRS write things very vaguely because they don't want to be actually to have things pinpointed. And so this is actually gobbledygook, quite frankly. This is meaningless stuff here. And so these qualifications are extremely vague. So what we have to do, and what happens with the IRS and with Congress, when they write junk like this, we have to wait for court cases to start coming out. And then the courts start defining, in this case, what is trader tax status, what is not trader tax status. And so what we want to look at right now are the court cases summary. What has come out of the courts? And these are the big ones right here that define trader tax status. If you meet these qualifications, then you can start deducting expenses as an individual trader on your Schedule C of your personal tax return. First of all, the holding period is short-term, less than 31 days. Now, this is from Endicott versus Commissioner. So you're not doing, now that doesn't mean you can't do long-term holdings. It just means that your trading is mostly short-term. Day traders obviously fit into this, swing traders, whatever. As long as it's fairly short, within a month, you're going to qualify on this one. So now the next one is the big one. From Poppy versus Commissioner, you have to be trading 75 to 80% of the trading days per year. Now you can trade more, obviously. So that is about 3/4 of the year, the trading days per year, you're actually actively trading something. Now, usually some people ask, well, what constitutes a trade? Well, you have a buy and you have a sell, and those are two different trades. If it happens in lots, for example, if you have a huge buy order and it gets broken up into 5 lots, those are 5 different trades. And so you have, it's really not that difficult to do something, and they may occur over the same day, over 2 days, whatever. But trading 75 to 80% of the trading days per year. Now, you also have to have over 700 trades per year. Now, some of you think that's a lot, and some of you may get that done in 2 weeks, frankly. From what I've seen, there's a scale here, and the range is vast. I've seen people with 1099s at the end of the year with thousands of pages to it, and they easily meet the 700 trades per year. But you do need to have that in a year. You need to be trading 3/4 of the days per year, and you need about 500 hours of trading activity. Now, trading activity includes research. So your 1099 here, what you did get at the end of the year, will actually prove the first 2 things, that you're trading 75% of the days per year. You've got over 700 trades per year, but it doesn't show how many hours of trading activity. So what we generally recommend is you keep some type of a trading log of what you're doing every day. What trades you make, what you're researching, and just the time that you actually do it. So out of Poppy versus Commissioner, we get really the core characteristics of trader tax status. If you meet these things, then you can qualify for trader tax status. And there's one other thing here. The intent is either to make a living, either solely as a trader or supplementary to other income. K versus Commissioner decided that. So it's not a hobby. It's something that you actually have a business. That's why I keep going back to that word business. You have a business. If you think of this as a business, then you get into it and you can start deducting those expenses. But if it's just a hobby for you, something you do once in a while, then don't even think about trader tax status. Don't even try to do that. because it's not going to work. The IRS wants you to treat this as if it is a business. Now think about if you owned a different business. Let's say you're a mechanic. I mentioned a mechanic a little bit ago. And you're going to go in, you can start your mechanic shop, and you're open 2 days of the week, and then you decide to take 2 weeks off. And then you come in, you're open another day, and then you take another week off, and it's very random. Well, you're not going to have a business, and you're not treating that like a business. Same thing happens with trading. You need to treat it very seriously. It's not a hobby that you just do whenever you want to. It's something that you do in order to supplement your income, and you take it very seriously. So if you meet these 3 criteria, you can take the expenses that you have for trading and you can deduct them on a Schedule C. Now, some people ask me all the time, said, well, what are reasonable expenses? And I always use the word reasonable. I say, well, okay, if you go to a seminar, if you travel there, you can deduct your travel and your meals, cost of the seminar. If you go to a conference, for example, the Money Show in Las Vegas was last week. If you went to that, you could deduct the travel expenses, the hotel, meals, things like that. If it's reasonable and you can prove that it was for trading, you can deduct it. But once you start getting unreasonable things, that's when the IRS is going to have a problem. For example, you go to Las Vegas for the Money Show, which was a 3-day conference, and you stay there 2 weeks, that could be a bit of a problem because the conference was only 3 days. Trying to buy an airplane or a car through a trader business, you really can't justify those very well because a trader sits behind a computer and does their thing. So you've got to have some reasonableness here, and people have abused this for a long time. So you got to be reasonable in order to keep yourself out of trouble. Now, as far as proving this, I already mentioned the best proof of these things is basically your 1099-B at the end of the year and your monthly statements from your broker. That's how you prove a lot of this stuff to the IRS if they ever come in. So if you're an individual trader and you want to deduct your trading expenses, then you can use trader tax status if you meet these qualifications to deduct them on your Schedule C of your tax return. Sounds wonderful, right? There's a problem. The Schedule C on the personal tax return is also the most audited target of the IRS. And so now we have an issue here where we want to save money. We want to be able to deduct those expenses, but we don't want the audit risk. We don't want to paint a target on ourselves so that we're getting audited. Well, that brings us to our next topic here. Are there additional ways to increase cash flow? And one way to do this is to form a trading business, usually an LLC, where you can move all your trading and your expenses, and those can be reported on the business's tax return, not on your personal tax return. And so the idea here is to set up a separate business just for trading and reduce the scrutiny of the IRS. You still get all the deductions. Matter of fact, you may get a couple extra. You still get to do whatever, the same thing you would get to do personally. It's just under a business. And then if it's a pass-through entity, like a partnership or an S-Corp, it still ends up on your personal return, but it ends up there in a much, much cleaner fashion than going through the Schedule C route on your personal return. Now, some of you may be thinking, well, LLCs are expensive, and depending upon which state you're in, yes, they can be expensive. While there's a fee for the LLC, which is a decrease in cash flow, the IRS is less likely to scrutinize you. And here's how I described it in a previous presentation. Remember, I described that bucket that's got holes in it. And we're trying to kind of minimize the holes because those holes are expenses, and we want to minimize those. This is like creating a small hole, an LLC fee each year, if you will, in order to create a major hole from happening, which is an IRS audit. And you say, well, my tax returns are perfect. I'm never going to have a problem if they ever come and audit me. And that's probably true, except for a couple things. The cost of IRS scrutiny can exceed the cost of maintaining the LLC. And we think of this as your insurance. Even if your tax return is perfect, can you spend 10 hours, 20 hours justifying to an IRS agent why everything on your return is great? Now, keep in mind those 10 and 20 hours that you spend are coming possibly from your trading time. And so you're losing money in trading while spending money with an IRS agent trying to prove and justify why your return is correct. And that's what we're trying to avoid. Or worse yet, and not worse, you can hire somebody to represent you in front of the IRS, but you're going to have to pay them for it. And two, here's the other thing. IRS agents are trained to look beyond what they're looking at to find other things. And this is why it's generally not a good idea to represent yourself, because IRS agents are trained to pick up on things that you say. They try to get you talking, and a lot of people, when they're nervous, as you would be in front of an IRS agent, you start talking too much and you say something you shouldn't say, and now they found out another avenue that they can go after. And IRS agents are trained to find even the smallest thing that could be wrong, and it might be misinterpreted. And once they find something, your only other choices are maybe to take them to court. And that gets even more expensive. You need to keep the IRS scrutiny off of you. And the best way to do that is actually to form an entity. Now, what type of LLC? Because we recommend LLCs for a lot of different reasons. There's two different types of LLCs, a single member LLC and a multiple member LLC. The fees generally same on the state. Now, what are the difference? Well, the single member LLC is taxed on a Schedule C of your personal tax return. Remember what we're trying to avoid? We're trying to avoid IRS scrutiny, and IRS scrutiny comes if you have a Schedule C on your personal tax return. So a single member LLC does absolutely nothing for a trader. It's good maybe for other businesses, but not for a trading business. Don't do it, because it just messes everything up for you. It puts it right back where the IRS can look at it. However, if you want to do a single member LLC and immediately elect to be taxed as an S corporation or C corporation, that's different, because an S corporation or a C corporation have different tax returns than individual tax returns. They file their own tax returns. An S corporation, everything still flows through to your personal return. It does it in a cleaner way. And a C corporation pays its own taxes. So they're different tax returns. It gets it off your personal tax return, less IRS scrutiny, but you have to go that direction. Do not leave it as a single member LLC on a Schedule C of your personal return, or it doesn't do you any good whatsoever. Now, what we recommend to most of our clients is a multi-member LLC. Now, the default there is as a partnership. So it's Form 1065. You file that by March 15th of every year, and it still flows through to your personal tax return. And you can also elect to be taxed as an S corporation or C corporation, just like the single member LLC. So this is the route we generally take people. You say, maybe I don't have a partner. Well, if you're married, you've got a partner already set up. If you've got, we can set up a family trust if you want to start saving up for maybe some family members. Maybe you've got some nephews or nieces or even kids that you've got and you want to start saving up for them. You could do a family trust that gets 1% of the partnership and you have 99% of it. There's other complicated things we could set up that even if you're the only person, you don't know anybody else that can help you out, you don't want to set up a family trust, we can still do a partnership. There's ways to do that. So we can talk about that. I don't want to get into it right here because that's going to bog us down. Now, this is why we talk about LLCs, because LLCs can decide how they want to be taxed. With a single member, you can decide to be taxed as an S corporation or C corporation. With a multi-member, you can decide to be taxed as a partnership or an S corporation or C corporation. And you can change them later on if it doesn't work for you. So this is why we recommend the LLC route. it's just so that you can, if things are not working out or tax laws change or your needs change or whatever, we can change actually how it's going to be taxed. We have to do it about a year ahead of time, but we can do that and put you into a more favorable tax position. Now, just to kind of keep this in mind and clarify, the number one most audited business is a single member LLC Schedule C. You have to get that off your personal tax return, or you're going to get hit by the IRS. Now, there's a couple other things to note here before we move on about S Corps and C Corps. S Corps and C Corps require the officers to be paid a salary as well. Now, that increases the FICA taxes. You got a little bit more in taxes, unemployment taxes as well, and that decreases your cash flow. So why would anybody go to those? Well, it has actually to do with 401ks or SEP IRAs. Also could be health insurance, things like that. There's cases where sometimes people want to pay a little bit extra in FICA and unemployment in order to get some benefits like a 401k. That's a conversation we have to see if it's right for you. So what does Traders Accounting recommend? Well, first of all, depending on the situation, and again, let me emphasize that because everybody's situation is different. We usually recommend forming a multi-member LLC to pay taxes as a partnership. And then what happens then, this creates a trading business where your expenses can be deducted. It's on a partnership tax return. The business files its tax return. Now, the partnership doesn't pay any income taxes. It just files with an informational return with the IRS to let the IRS know how much each of the partners are going to be showing on their personal tax returns. So you still get the benefit. You get everything off your personal tax return. The IRS scrutiny is now severely limited. You get to deduct all the expenses that you have, and the money still flows there. The income still flows to your personal tax return in a very clean way, and you still pay the taxes on your personal tax return. So that's what happens. And as I've already mentioned, doing this, the Schedule C is eliminated from the individual reducing your audit risk, and the partners still claim their share of the income on their personal returns as a share of a, quote, legitimate business, because it's a separate business now. It's a partnership, or it's an S corporation, or C corporation. It's there, it's separate. It looks like a legitimate business now, rather than this Schedule C that has been abused for decades, frankly. People have tried to write off just about anything you can imagine on that Schedule C, and that's why the IRS scrutinizes it very well. And then, of course, the partners can still claim a home office deduction on their personal tax return. And so it's linked to what's called a K1. You get a K1 from the partnership, and that goes onto your personal tax return. And you can still claim a home office deduction on that as well. So you get all these deductions, and you save money from taxes, and then you could take that money, as we mentioned, and put it back into your trading and not have to pay as much in taxes, but you also conserve the capital. Remember the cash flow thing. You're plugging the holes in the bucket, or you're reducing the holes in the bucket to save that cash flow. All right. Now, everything up to this point has been about for everybody. It doesn't matter whether you're trading Forex, you're trading commodities, you're trading futures, ETFs, cryptocurrency, stocks, or options. All of this has been for everybody. Now I want to turn our attention to those who just trade stocks and options primarily. Cryptocurrency has a little bit of a benefit, and you may have heard of this. This is the mark-to-market election. Now, there's a lot of information out on the internet. Trader tax status and mark-to-market are not the same thing. Trader tax status allows you to deduct expenses, and anybody can do that no matter what they're trading. Mark-to-market is only for stocks and options and possibly cryptocurrency. But basically, it's an accounting method for the revenue side. What it does here, it realizes the actual gains and losses in your account. And and doesn't recognize anything between unrealized gains or any realized losses. Now okay, I just said that in a very strange way, but here's what happens. If you have been trading stocks or options, you realize that there are this thing called wash sales. And without going into it too much in depth, wash sales are basically losses that you incur that the IRS is not going to let you take right away. It's a loss deferral. And so what happens is when you trade things rapidly, you end up with a lot of wash sales, and a lot of them get deferred to the next year. So in other words, you pay taxes now instead of being able to use the loss right now. That's opposite of what we're trying to do. We're trying to get refunds now and pay tax later if necessary. Also, with a typical investment account without mark-to-market, if you lose money in a year, you're limited to $3,000 on your tax return. So if we add all our gains and losses up, and let's say we lost $10,000 in a year, I could only write off to $3,000 on my tax return, and the remaining $7,000 go to the next year. Again, that's loss deferral. You're paying taxes now and hoping to get it back later. Mark-to-market changes that and stands it on its head, basically. The idea behind the mark-to-market election is you take the actual gain in your account. You take the beginning value of your account, the ending value of your account, and if it went up, you pay tax on the gain. If it went down, you deduct the loss, the entire loss. Because what happens with the mark-to-market election, all the gains and losses become ordinary gains and losses. Now, that doesn't mean anything right away, but when you say they're ordinary losses, that's deductible now against your ordinary income, like W-2 income or pension income, things like that. And so mark-to-market changes the character of the gains and the losses, so they become fully deductible if they're losses, and you don't have to worry about those wash sales. So there is no loss deferral to the next year. And I already mentioned the $3,000 limit on capital gains loss. That goes away under mark-to-market and increases your cash flow. And then, as I already mentioned, the trading account is no longer subject to wash sale rules, increasing your cash flow. Now, as I mentioned, this is best for trading stocks and options because you get rid of the wash sales, you get rid of the $3,000 limit. I did mention a little bit ago cryptocurrency. Cryptocurrency does not have wash sales, but it is subject to the $3,000 limit. So if you do mark-to-market for cryptocurrency, then you can convert those losses at that point in time to ordinary losses. And if you lose $10,000 in cryptocurrency in a year, you can write all of that off under mark-to-market. Now, how do you make the mark-to-market? Mark-to-market is an election that you have to file with the IRS. For an individual, that had to be done by April 18th of this year. It is impossible now to get mark-to-market as an individual. However, if you form a brand new entity, such as an LLC, a partnership, S corporation, or even C corporation, a brand new entity can file mark-to-market as soon as it exists. Matter of fact, it doesn't have to be done until the first tax return. So if you need mark-to-market for this year, then what I would suggest is forming a brand new entity, an multi-member LLC, S corporation, C corporation, whatever gets it off your return, and then move your trading accounts over. You have to create new trading accounts underneath the business itself. And once you start trading there, that stuff is then under mark-to-market, and then you file the election with the first tax return. Now, you can't do anything prior to that. You're stuck with whatever's happened this year. But getting that business set up as soon as possible and getting those trading accounts under the business, that is the key if you still need mark-to-market for this year. All right, another disclaimer. The paths recommended here are general recommendations. Everybody's situation is different. And so there's no one size fits all. A lot of people we do recommend multi-member LLCs for. But in some cases, we say you need to go straight to an S Corp or you need to go to a C Corp, depending on the circumstances. So this is something you need to discuss with a tax professional. You need to look at how things are going and what things are looking like in your personal life, as well as tax laws. And your strategy is not permanent. Whatever you set up today may have to change in the future. Tax laws change, the environment changes, your needs change, all kinds of things change. So I suggest that once a year you review your strategy here to make sure that you're receiving the maximum tax benefit from it. All right. Let me talk about traders accounting real quick. We're really close to getting questions here. Traders accounting, what we do is we do provide entity creation and maintenance. If you call our office, our business manager, Raven Johnson, can set up an LLC for you. Matter of fact, I did one the other day, yesterday. We was talking, I didn't do one, I talked to somebody about it, but it was set up like in 4 days. That's not normal. It usually takes a couple of weeks, but they can be set up pretty quickly. We can do that for you if you need help with that. We also have bookkeeping for our trading businesses. If you want to just concentrate on trading, we can keep track of your expenses as well as your income from your trading accounts. And then at the end of the year, it's all kept up nice, and we can just prepare the tax return. It's very clean, and the IRS really isn't going to touch it because it's been done cleanly for the entire year. We also do income tax preparation for all types of returns. It doesn't matter what you have, we can do that. So if you're interested, please contact us about that. And finally, we do tax and entity consulting. If you want to call us and set up a time, consulting time, we can do that, and one of us will sit down and talk to you, and we can certainly talk to you about that and help you take care of whatever needs you have. All right, let's go to our last slide here. Something free for you. Raven Johnson, our entity formation specialist, will give you a 30-minute consultation, free 30-minute consultation to find your best options. She will be happy to sit down with you and talk to you about what's going on and where the path goes for you. And our phone number is 800-938 and 9513. And of course, you get a free consult. If you use the link down here, you can schedule that online, if I'm not mistaken. And I did put that into the chat. It is sitting there again. Thank you, Jeff, for putting that back in. And that is there. So I would encourage you to avail yourself of that. So please contact us if you need any help. So what I'm going to do right now is I am going to open this up to questions and answer any questions that you might have. I'm going to leave up our information there for a little bit and maybe have Jeff come in and read some questions off, or we can have a bit of a discussion.
I'm ready. Yes, we've got some good questions too.
Okay.
Really good question. Let's start though. We've got more than we'll probably be able to get to, so we'll go quick.
Okay.
Richard wants to know, do you need to have a company to get tax deductions from some of the items you stated earlier?
No, you could just do it as an individual trader as long as you meet the trader tax status requirements, and then you can deduct those on your Schedule C. But you do open yourself up to IRS scrutiny in that case.
Prafula wants to know what happens when you get the return for an expense like a trading course. Is the money received as a return when invested back into the business? How is it treated in terms of tax for the next year?
Well, okay, for example, if you had a W-2 job, you'd have already withholding done. And then you get these expenses, so you get a refund from the IRS. That's how you'd get that money back. It is possible that you may have to pay in, you just wouldn't have to pay as much in taxes. And I would suggest in that case that you kind of mark off how much you're saving. You can look at your tax return and figure out what the tax rate is, and then just take that amount of money, whatever it is, and then reinvest it back into your investment accounts.
David asks, if you lose money, can you also pay yourself a salary? So if you lose money trading.
Yes, you can actually, if you've got the money sitting there. As a matter of fact, we had a discussion like this on an S corporation here, and the person I was talking to wants to pay himself a salary regular. Basically, he's just kind of paying himself his money back, but with FICA and withholding that because he needs the 401k. And so with a month or so, you're losing money. Yeah, you can still pay yourself a salary if you have the cash built up. Hopefully it doesn't stay that way that you're losing money, and you can gain enough in profits to actually start paying for the salary.
Okay. Na wants to know, I thought a wash sale, if you buy and sell a stock, the wash stock within 30 days, the loss is added to the per share price of the subsequent sale. It isn't deferred. So hopefully that makes sense for you.
Okay. Well, let me describe what happens with a wash sale. If you buy a stock or an option, and then you sell it at a loss, that does not trigger the lost sale rule. What triggers it is if you buy something under the same ticker symbol. Now, it doesn't have to be the same security, just anything under the same ticker symbol. Could be the stock, could be a different option, whatever. And once you buy that, make that second purchase, then the loss on the first one actually shifts to the second. It becomes part of the basis in the second transaction. Okay, well, that happens within 30 days. And then if you do it again, that loss can keep shifting back and forth, or not back and forth, but keep going to the next transaction until you get to the end of the year where it shifts over the end of the year, and that's where your deferred losses actually take place. So it is a deferred loss. If you were to take, okay, for example, you're trading in January and you have some wash sales in January, and then you stop trading for the entire month of February, 30 days, let's say, 30 days, then those wash sales become regular losses after that point if you stop trading in that security. But most day traders don't do that. They like the same thing, QQQ or SPX or SPY. They just keep trading over and over and over again. Those wash sales keep getting deferred, and they end up in the next year.
Michael wants to know, how easy is it to reverse a designation from trading to investing for tax treatment?
You going backwards? Not difficult at all. If you just don't want to record your expenses and you don't want to do trader tax status, you just don't do it. It's not something you have to record with the IRS. If you do expenses 1 year, you just got to be able to show the IRS if they ever come in that you met the qualifications. And the next year, if you don't do it, that's fine as well.
We've had this come up about 3 times, including from Bobby and Timothy. They want to know if some brokerage firms actually charge you more if you're trading as a business as opposed to as a trader.
Unfortunately, in a lot of cases, the trading or the brokerages do charge a little bit more if you have a business. Now, I know some of you are probably thinking, okay, I'll just trade under my personal account and then make it go under the business. The problem is it's the ID number on that. If you trade under an account with your social security number, that's where it has to be recorded. And if you trade under the EIN of the business, that's where it has to be recorded. So I understand that the fees are a little bit more, and that's part of the cost of doing business here. But it's something that you just kind of have to buck up and do, because if you try to get finagling all this stuff and using social security numbers and EINs and getting everything mixed up, you're going to end up in a major problem with the IRS.
Good advice. Bobby asked, can I do mark-to-market election as an individual in my next year filing?
Great question. Yeah, for individuals, you have to make the mark-to-market election for 2023 by April 15th. And then in that case, you would just file a paragraph with your tax return or the extension by April 15th. You can publication 550 has the wording in it, but it does have to be April 15th. There are no extensions to filing that, but you can get it for 2023.
Cool. James wants to know if there are gains before you create your LLC partnership. How are these gains traded for tax purposes?
Gains before setting up a partnership, those are going to stay on the personal side. They are going to stay as capital gains or capital losses. And this is where we start getting into strategies. If you have a lot of capital losses, then we start having to look at, okay, well, we need to earn some capital gains to eat those up, but they do stay capital. Unfortunately, what happens when you start a partnership or an LLC or whatever it is, at the point you start that the trading accounts underneath the EIN of the business. Going forward, that's what goes underneath the partnership or the LLC. And in that case, if you got mark to market, that's the point it starts. So there's a hard stop there.
We're getting some really good questions, I would think. Carl wants to know, can I put a partnership under my spouse's name even though I'm filing married filing jointly on my yearly tax returns?
Yes, you can. Matter of fact, we have a lot of clients who file jointly, and their spouse is the other partner. And if you're wondering about percentages, sometimes now the partner doesn't have to do anything. Spouse sometimes is just a silent. It's just a person sitting there, actually. And as far as percentages, it goes from 50-50 to 99-1. It depends on what you're comfortable with. But it all ends up on your personal tax return again.
All right. Bobby wants to know, can you put your salary back into your trading account after you pay yourself?
Yes, that would be a contribution back into a contribution of ownership. So if I pay myself $20,000 and maybe after taxes, I get $15,000, just to use some round numbers, I can take that $15,000, put it right back in the business as a ownership contribution and just reinvest it again. That shouldn't be a problem. But it does need to go out and then come back in, or else the IRS will have a bit of a problem with that.
All right, last question. I can't believe we got through them all either. There was a lot of them. Bobby wanted to know, how are income futures trades taxed? Ooh, I almost didn't get that out.
Futures and commodities. Those are taxed very differently. I'm going to turn that on. Because what happens with commodities and futures is there's a special tax structure that's set up for those. You do not want to put those under mark to market, because what happens if you have, let's say you have $100 in gains under what are called 1256 contracts. Those are futures and commodities. 60% of that gets classified as a long-term capital gain, even though you may not even kept it for an hour. You can still get classified 60% as a long-term capital gain. And the key to that is the maximum tax rate for long-term capital gains is 20%. That significantly decreases from the maximum individual rate of 37%. So 20% is a great benefit there in order to actually trade in futures and commodities.
All right. And that's time. Jerry, thank you. So everybody go ahead and sign up for a free consultation, 800-938-9513, or you can click on the link that I just put in there. Jerry, I don't know how you make taxes so interesting, but I always find that I'm learning something. So thank you for coming in today.
You're very welcome. I hope you all have a great day.
All right. Thank you very much.
All right. Bye-bye.
Okay. Bye. Okay. All right. Let's go ahead and kind of get switched over real quick. Show my screen. They do a really good job. Very quickly, we're going to say thank you to Stocks and Commodities for sponsoring the event today. We appreciate it. They've been sponsoring us for 9-10 years, and they do a great job. If you do an extended trial of MetaStock today, or any of the subscriptions that we offer, you're going to get at least a 5-month subscription as part of what we're doing. So really, we do appreciate what they're doing and their sponsorship and all that kind of stuff. So there you go. Again, we're MetaStock. You can get a hold of us at 800-882-3040. We are offering an extended trial of MetaStock where if you pay for a month, you'll get a second and a third month for free. You can give us a call at 800-882-3040. Steve, I'm sorry I missed your question about the 401k, but get in touch with them, and I'm sure I've talked to Raven. I've known Raven for decades. They'll answer that 401k trading business question. I don't know the answer for it, but they'll be able to help you answer it. In terms of a recording, we are streaming this to YouTube, Steve, or Forrest, and I will post a link to the YouTube, but it's available, and it will be available indefinitely. So yes, we are recording today. I guess you could call it recording. We are we are actually streaming to YouTube, and then we're going to leave that stream up, basically. Our next speaker today is Peter Dalal. Peter's been a partner with MetaStock for like 15 plus years now. His initial product that he released was called FX Traders Advantage or Forex Traders Advantage. It was an insanely popular product. Over the last couple of years, we've been working with him to market and promote the Magic Trader product, which is a huge iteration of that product. He does it works well with stocks, futures, options, ETFs, whatever you're interested in. I like his ingredients approach to trading, all that kind of stuff. So let's go ahead and without any further ado, let's get him going, get him started. How are you doing today, Peter? Let's see. All right, Peter, can you hear me? I do show that you're still muted. I'm going to send a request to unmute. All right, I think that just worked. Yeah, that worked. For some reason, sometimes the audio takes a second to connect today. It's been interesting. So yeah, but I can hear you. Let's go ahead and get your, okay, I can see your screen. I'm going to let you go. It's all you.
Okay. Let me try one more thing. If we could move the slides or not. Okay, we could move the slides. That seems to be correct.
All right. I can hear you. I can see you. Your slides look great. Go.
I cannot go back some reason. Okay, now I'm all right. So how are you doing, Jeff?
We're doing great.
All right.
We're doing great. Great audience today. Lots of really good questions. So.
All right. So hopefully we got more questions. All right. Thank you very much, everybody, to be here during the weekdays. And some of the people are enjoying the markets, such as we do, as well as some of the people holding the bags. So it's a bad day for the bullish traders, but we kind of having known this thing happening, right? So we're going to discuss those later. But thank you very much for coming here. My name is Peter Dalal. As Jeff introduced me, I've been partnered with MetaStock for a long time. And I've been using MetaStock more than 30 years, actually. So way before I developed the product, I was an actual user. All right, so what we're going to do, we're going to talk about primarily scalp swing, which is kind of new concept, but the words are already there in the industry. So what we figured out, we could do a better job using many inventions, which I did it, and we still been inventing new stuff almost every week, and file for patents kind of things. So we're going to be talking about inventions, application in trading, as well as how to make it easier. So this way, anybody can trade it. And it is also true, you're going to be exposed many symbols. Don't worry about it, because everything has its place, but you got to focus what is more important to you, and we will guide you into those. So basically, we're going to talk about disclaimers, because lawyers want us to talk about disclaimers, right? We're going to talk about the goals for this webinar. Then I'm going to introduce you Magic Trader. There's some design basis. We're going to talk about ourselves and scalp swing trading concept, which is very important for you in any market conditions. And we kind of practicing that for actually since 2006. That's where I put first time Magic Trader to work. Was not the same version, but it was very preliminary. And let me put it this way, the broker flip out, and I got a phone call from vice president. What happened to you? All of a sudden, because I was costing them money. That was the reason why I got a phone call. All of a sudden, my trading results like a upside, what do you call, upside from regular trading. Like they couldn't figure it out, right? So basically, then we realized that this is something what I created works, right? So we gonna talk about also essentials. What you need to do scalp swing is very important. Then we can talk about the ingredients, as Jeff said, and different kind of ingredients. Then we're going to talk about catalysts. Then we're going to talk about low risk entries and exit. And then we're going to show you top-down approach, which seems to be working very well to identify right securities at the right timing. And there are more trading opportunity, we find it, than we do know what to do with that. And you're talking about hundreds of opportunity in most of the market conditions, because we figure out a science how to do that. Then we're going to show you a flow diagram of doing actual scalp trading. That's where I would like people to focus about it, because that's the real meat about doing scalp trading or scalp swing trading, right? So it is not the traditional things what you're doing. It's a little different, and utilizing these inventions make it more unique. And results are obvious. I cannot share with you because you are not my client, and I'm not managing money for other people. So it makes difficult without disclosure document. But people who are in my alert room have eyewitness things what I do for my own trading. And I don't need to speak about the results. I think Jeff is aware of that. So we're going to talk about how to hunt these ingredients, which are integral part of scalp swing. And we're going to show you some examples, E-minis, which is pretty good timing for that, right? And you know what is happening with the market, getting whacked. All right, so let's make lawyers happy. Unfortunately, I have a lot of disclaimers, but what I'm going to do, I'm going to talk fast a little bit, as well as I'm not going to read everything. Copies are available with Jeff, as well as you could reach out to us, or you could go to themagictrader.com, and you could also read the disclaimer. Same thing is available there also. But I still need to point it out, most important parts of those disclaimer, so lawyers are happy and regulators are happy. So trading any securities involves substantial risk, and you can lose all your money. Only trade the funds you could afford to lose. You cannot borrow money and trade with that. Please don't do that. There is no guarantee of any profits or freedom from losses. Past performance do not guarantee any future results. There is no representation made here today. Whatever we're going to discuss is for education purpose only. No buy, sell, or any hold recommendation of any securities or any market vehicle or any instrument. It is for education purpose only. Please consult your investment advisor, and financial related decisions you could make with them. And Magic Trader does hundreds of millions of calculations per second and requires a good size of computer, so you got to be aware of that. This is something not usual, but MetaStock has pretty much down to work it on any computer. So, and you also need a good resolution on your computer. Please do so you could enjoy a magnificent colors changing right while you are trading. It's like fascinating. All the risk transfers happening in front of your eyes, which was not possible before. CFTC Rule 4.41. Let me move this slide. So I'm registered with CFTC, right? I'm not practicing as a broker or money manager at this time, and I took the exemption, but we're following all the rules and all the disclaimers, what they want us to discuss here. So Magic Trader is not a trading software. It is a software to identify the risk on a weighted basis. So no buy or hold recommendations or signals given by the software. Results are stimulated and hypothetical in nature and does not represent any actual trading. Testimonials do not guarantee future results or success. Hypothetical or simulated performances are generally prepared with the benefit of hindsight. No hypothetical or simulated trading record can actually account for the impact of financial risk of actual trading, as well as impact of a lot of factors, or lack of liquidity is one of them. Options, because Magic Trader has option symbols there, so you're going to see that. And options are risky, you should practically use this phone number, call them up, they will send you the standard booklet as well as latest supplement, and they have latest recording which are free of charge. Everybody should do that instead of spending money on the internet by any means, because these people have a education, state of the art education. There is nothing like that. So this is what Lawyers wants us to talk about. My company, not even me personally, that Save Dollar Enterprises company, it's for education purpose only, and no buy or sell recommendations. And if you want to trade, it is your decision, and you should consult your investment advisor. You're going to see a lot of symbols, trademark, service mark, registered trademark, everything is there, and we have filed for patents. We have patents pending. So please respect our intellectual property, because federal government don't take it easy when it's violated. And you could blame the previous administration for Copyright Streaming Act. So please stay away from trouble. That's what I would say. Now, additional disclaimer, this is my registration number with CFTC, right? And the name of the company is Save Dollar, and we are registered with the federal government. So we have to follow a lot of protocol. That's why you see a lot of disclaimers. Also, technically, everybody is supposed to have some disclaimer. One thing I will tell you, we're going to discuss some security. I may be in position or may not be in position. We are not going to disclose those security. And I try not to talk about the securities I'm in, so I don't have to hassle with anybody. But sometimes people ask the question, and I'm in security. I'll try to stay as it is, but I'm not perfect, non-intentional. All testimonials you see on Facebook, these are for education purpose only, and that doesn't mean it's repeatable. So basically, they are falling under hypothetical status, which is also considered for education purpose only. Now, Magic Trader, we're going to talk about this scalp swing today, as previously mentioned by the previous accounting firm. You could consult them, but we are telling that you're going to be doing a lot of tradings. If you do scalping, that has a different tax structure, and I'm not an accountant, neither an investment advisor or an attorney. Please consult them. So let's talk about the way we look at the picture and how we treating this business with the Magic Trader. First of all, like kitchen, right? And this picture came from my wife, actually. She put this thing in the kitchen, and I took a screenshot and make it look nice, right? So she using ingredients to cook the tasty Indian food. So Magic Trader has a certain ingredients. There are more than 5, but the 5 stands up, which always can be used in any preparation of the trading. So I came up with, because I visited one of the cafeteria, and I don't want to say the big firm, right? And I saw the kitchen like this, and I get an idea. I said, wow, I could put my scalp swing, and that will taste good, because we know what we're doing, I guess. So this is the clock. I put it showing the candles. The drawer has the candles and magic lines, and this is the candle. So you're going to learn about those ingredients which make a tasty scalp swing. So tasty means we have positive trades, right? That makes you happy. So we're going to talk about that. That's the whole goal. And there is an additional goal for today, which are also as important. So identify low risk trade setups with a scalp swing 7-step trading method. Pay attention to those. I'm going to identify them. So step by step, how you could be good at this scalp swing. So a lot of webinars I did it, and we gave the knowledge in pieces. So this is a brand new technology, has nothing to do with most of the traditional stuff. And I was the guy who was teaching all over the world technical analysis for Reuters. And Kelly and Jeff used to go with me. But what I realized, that there is a better way I could do it because I handle several businesses at a time, and my problem is the time. And I miss my children, so I got to find a time. So while we release the first product, my mind was working on the new product. So that takes less time in technical analysis. And the idea came from we are tired traveling 4 cities per week from airport to airport kind of things. And I had to call broker and give him instruction to buy this and buy that for me because I don't have time right while I'm traveling. And then I create a little trading plan and send it to him that this is what you need to do. It takes 2 hours, 3 hours sometime. And by the time market changes in the morning and disaster happens. So I said there got to be a better way. So this whole thing started. And then when I started staying home, I said, I don't need to stay too much in a trade. Figured out a way to use this software to do quicker trades and produce better results. That was the whole idea. So it's not necessary you got to stay in a trade traditional scalp, what you call swing method, 1 week, 2 weeks, or 3 days. You could do in a matter of 2-3 days, or sometimes 1 or 1.5 days, better or same result. So less exposure to the market, and it's perfectly working in current market condition. Nothing lasts here, especially last few months, more than 1-2 days. That's it. Maybe 3 days, and then the steam comes out. So perfect example today and last 3 days. So we don't have this problem complaining with a good risk management. We know what to do. So this is happening because of Magic Trader, not because of me. So we're going to talk about the switches, which some people have seen it, but they did not know the power. So we're going to talk about that. Then we're going to talk about the catalyst, which we spoke many times over. So that also needed, and they also work as a switch, right? We're going to talk about all these things, right? And what do you call? We're going to talk about the ingredients, right? Catalyst and a CAT time frame, which is the first time you're going to be hearing, but you have heard from other expert in the industry. What is that? It's a confirming time frame, right? Anchoring time frame and trigger time frame, which is very important for any trader, whether you know it or not. It is a prime reason why the entry fails because you don't identify them. So we're going to show you, and Magic Trader identifies them very easily, and that will change your trading life here. So let's talk about something for Magic Trader, why we're doing what we're doing. Basically, the whole thing started with the risk management in mind. And I'll be honest with you, I got humiliated in front of my wife while I started learning trading. Up to a point, I have a lot of money, and I feel that I could buy any stock any given time, whatever I want to do it. When I went to the actual professional trading, I was putting in a confinement, and the manager said, you are a gambler, you are not a trader, and if you want to become a trader, if you don't do what we supposed to tell you, then the door is right there, go, we don't need you. It was shocking to me, and they constrained me to trade only 100 trades or 100 stocks. I cannot buy more than that, and it's a large account and only allowing 100 shares. And I'm running a couple of businesses. Is worth it? That's what I'm thinking. Then I realized the guy's telling me the truth. What I have to learn is the risk, not how to trade. That is very true. If you don't know how to control the risk, you could be a good technician. It's useless. And I, for 8 months, had to go through like a, school of hard knocks, right? And they constrained me, right? And then I learned this business and not to do what normally all the traders do, right? And it was all about the risk for them, not making money. It's risk, risk, and risk. And I realized that I got to figure out all what I learned to identify, analyze the risk, control the risk, transfer the risk, reduce the risk, and how to assess them. So that's what the software was designed and actually still performing since 2006 on basis of risk. So I want you to understand today one thing, even if you don't learn anything, instead of worrying about making money, worrying about capital preservation, as well as, right, you need to control your risk, and emotion goes with that. If you don't have it, you're going to blow up your account few times at least. Then you're going to wake up, right? Unfortunately, I did not blow my account, but I will tell you, I had a margin calls because I was taking so much risk, and they stopped me doing all this stuff, and that changed my life. So a lot of people will find it similar, right? And especially forex traders. I got a lot of miles on a forex, right? Since 1999 for sure. I was one of the first few forex traders in the retail side. So I got a little bit knowledge about forex and all the leverage, right? And please do not try to use excessive leverage, and that's a part of the risk. So Magic Trader here pinpoints those entry, because what we're doing it very simple. I identified more than 2,000 risks in a market. It's hard to believe, but people in my alert room already experiencing. And then those combinations, it's unlimited amount of combination, and how to control them. We figured out a way to do it, right? And there is no mystery about it, right? So everything is a risk as far as I'm concerned. And I need to be aware of that every step of the way. And that's what Magic Trader does. And when I'm entering, all the good risks are in my side. So I don't have much drawdown, and chances of failures are less. And that's what the Magic Trader does, is magic for. Now, what it started happening, I never used to see my children. I never home. Now I see my wife, my children. That changed everything for me, right? And I'm enjoying it. So basically, this is the goal we have it. You don't need to trade too much. And people in my room knows that I don't trade like a crazy, right? I trade when I feel to trade, and I trade with minimum or no losses most of the time. Can I guarantee that? No. But it is the honest truth. And people, eyewitnesses, and they're telling me it is impossible, but they're witnessing it. And now some of them experimenting, same thing I am doing it, right? So it is not like some kind of real magic, but it's about the risk management and how you treat the risk every step of the way. Now, this is what I realized. Around the world, I got so many friends, right? In the industry, I used to call them up, what's going on, whatever, right? And big guys putting 5 billion, 10 billion forex trades kind of things, right? And basically, I realized I don't need to talk to them. I got to figure out a way. When people believe to pull the trigger, there is a lot of secret about it, and how I could track that electronically and still use whatever MetaStock gives to me. And we did just funny thing that about this gamma, right? When the market maker takes the position to bring delta neutral position, I couldn't get what I wanted. So I said, go to engineering, right? Go to basics. And I figured out. And now we could see the market maker positions when they take it without talking to anybody. I dreamed this for the last 17 years. But when you tune into these things, you could find what you're looking for. And mathematics and science is there, and you need to learn to apply it. So trading is not that difficult. That's what I want to tell you out of that example. And I'm not a programmer. I'm a stupid programmer, I say. I don't know anything about anything. But I needed to keep this secret because of pattern. I forced myself to learn these things. So what I'm giving you an example, you could learn yourself. You don't need to be a scientist to figure it out. It is all about the risk. Don't forget that. And you put your soul into that, not heart, soul into that, you will do very well. So when you believe in yourself, is the miracles start happening. So trading works that way around the world. When people believe to pull trigger, right? they pulled the trigger and you see the output. So Magic Trader is based on believingness, right? That's what we crack the code, how to figure that one out, and the timing. So that's what is the most important in Magic Trader. And how we could know that. So see the green line? And this green line and red line are not the lines you are using every day. It has nothing to do with that. We created this line in a sand where all these people around the world using this security, same security, they believe to buy it, so the price stays above it. If they believe that they are no good, they short it or they get rid of it, they are below this red line. That's what it is. So you hear in the Wall Street, oh, risk is on, like these last 2-3 days, was risk was on. So all these prices are above magic line. So the magic line does its magic. And this line we created later to do in a way it creates a mean risk reversion area, as well as this red line works as a stop. Say, for instance, security falls below this red line, then we get out, right? That's one of the exit, or it close below it. If it close above this red line, then we get out if we are short. Otherwise, stay in the trade. That's the way it works, very simple way, unless your hands are itching and you want to do things opposite. So for anybody who doesn't know nothing, this is the simplest way you could trade with this software. And you don't need to worry about all the happy stuff here, colorful stuff. That's the minimum you could do without worrying about all other stuff. Now, no disrespect to the current developers or anything. I was one of them, right? We used the same thing. My first product, I didn't know any better, right? But all these things, I have used it. I don't want to use it. I don't know even anymore, even though I practiced for many, many years because I found a better way of doing it. So that doesn't mean they're all wrong, right? But we found a better way, and that's the best statement I could make it. So for me, I put in a trash. I have not used this thing at all. I have no idea how they work anymore. I don't need to, right? And basically, you could do the same if you want to, but this is my choice, and the people around me made that choice. So let me put a couple of words for my lovely daughter, who sacrificed since she was 9 years old. She was involved with all businesses I do. She worked day and night like I do, right? Sacrifice every single thing. And she is a co-inventor. And this girl has a lot of talents. She has it because surrounding, and she dealt with many, many CEOs, chairmen, billionaires all over the world, right, in a very young age. And she helped me to create this Magic Trader, all the color systems and all these things that goes to her. So all the symbols, there are 10,000 items there. So you don't need to learn about it, but it goes behind the scene. It's a lot of work. She did that. Currently, she works for a big publicly traded company. Everybody most likely has heard about it, right? And she holds a couple of licenses herself. And let me say a little bit about me. I've been registered before with SEC, Series 663, right? Whatever, right? Couple of licenses. And currently I have Series 3, and I grandfathered 34 because I was trading Forex since 1998. So they give it to me. I don't have to go through getting the license. I'm allowed. So basically, I developed the first product with Reuters, right, which everybody knows, in 2003. And 2006, we put this Magic Trader to actual application. I was trading before, but actual application happened on 2006. So I got a couple of years experience in trading, right? And I'm not a guru. I never claim as a guru. I'm just like you, know how to trade, right? And I don't have traditional courses. I trade and teach how I trade. Very natural way. So unfortunately, I got to put all these slides together. So excuse my slide presentation may not be expected by you, but this is what I know about this business. That's what I saw to you. So let's talk about scalp swing. That's the main topic today. And the scalp swing, if you want to do swing trading, right, basically you got to learn how the cycle works, counter cycle works, cycle within cycle works. So with magic trade, you don't need to go on become a scientist and Elliott waves and this wave, that. Stop right there. We don't need to do those things. Magic trader does not use any of those, but we identify those cycles very easily with a simple filtering method, which you could use it with your own trading, right? Use our idea, right? We have a different way to different things we're using, such as magic lines, horizontal time risk, right? Things like that. But you don't need to, but it could help you. Be my guest. Adapt it. Because at the end of the day, my heart goes to the little guys. That's the idea. I have it, so that's what I'm using to teach you all these things. Little guys, not big guys. I hated them. They slaughtered little guys financially. So magic terror, right? We identify these believers. That's the reason why we are successful, I guess. So magic lines are very important, and the horizontal time risk. So you filter your security based on these parameters. And then what you do, suppose this is all bullish you're filtering, then use those security which has a directional cycles in a bullish side, which is in a big time frame. So even though 60 minutes, you got to find the cycle, or you got to wait until you get that lined up like a big guys, right? Big guys with big time frames here. So that's where your success may come. I cannot guarantee, otherwise I get in trouble. So, and what we're doing is we are using multiple time frames. So like you are filtering from monthly, weekly, and then daily, and then looking at 60, that's a multiple time frame. So we are lining up cycles, right, in a one direction. And that filters back all the way to scalping. So you should not be doing scalping in opposite direction unless you have a lot of experience. It is like going against the tide. You're going to feel the pressure. So you always want to do scalping in direction of bigger cycles, or cycles which big time frames are following. And we are using Explorer, which MetaStock has provided to find them. And that is very easy to find them. So we're going to talk about all this stuff and where you could find it. So another thing I want to show you, that scalp swing is two parts method, part A and part B. I'm going to show you how to practice that. So this way you could do scalping, make some money initially while we are waiting for switches, and use the money to defend yourself against the risk. Hardly people use this thing, but I learned because I have a business background. So let the market give you some money and use that to do swing, right? And identify those in flow of the chart in a way you have hardly any drawdowns. And Magic Trader has already done work for you. So that's how you become a good trader, has a less risk in a market at any given time, as well as you have a less drawdown. Because when I enter, and people in my trading room will tell you, I hardly have a drawdown. Why? Because I wait for the right moment, not just by emotion, what I think. Let chart tell you what chart is thinking. Your opinion doesn't count. Now, this is the traditional way people trading. We respect that: scalping, swing trading, day trading, position trading, all kind of stuff. But they are more riskier in my opinion. And it takes more time to make money. However, with this method, we experiment for 17 years. It takes less time, less exposure to market, and I feel good about it, and I sleep well, right? So this way, I am interested in using this method for myself, right? And if I feel comfortable, I add more lots. Otherwise, I will do scalping. Meanwhile, I'm waiting for market to tell me that I could take more risk. Not what I want. Let market tell you. This is the most important thing. If you take it today from this webinar, you do not need to chase the market. Let market come to you. You must have heard about it. But now, timing, when to do that, Magic Trader does that. Now, as I told you before, 7 steps. So 7 essential things you're going to need to do successfully scalp swing. So what are those? So 5 magic ingredients and a catalyst. You have to know them, how to identify on the chart. We have done many webinars since last year and a half, right? And even before, those become so handy in doing scalp swing. Then custom explorer, which we give it to you with this subscription. So you're going to get those explorers, so you don't need to worry about it. Top-down approach. Always look at the bigger time frame. And I urge people, do not please ignore bigger time frames such as monthly, weekly, and daily. Even if you are a scalper, please do not ignore them. You're going to get hurt. And you know that you got hurt because you're ignoring them. You got to see the game plan, what the big guys are doing, and they follow big time frame. So you need to pay attention to bigger time frame. Right? So we are using that in a filtering from the top, not from the bottom to whatever you feel. So it's a systematic approach. Then apply big time frame results to smaller time frame. So what it means, I'm going to explain to you a little bit detail. So you scan, like say for magic line, given which we have designed, and horizontal time risk. Take those monthly. There are 500 securities qualify. So take that result. MetaStock has that pretty good provision on their Explorer. So automatically you go all the way to the bottom and click it, use from the last Explorer. Then you do filter for weekly. So you get maybe 200, right? Then you do the same thing with the magic line and horizontal time risk, which you call them ribbon, right? And filter them out for daily. Now take that and apply 5 ingredient scanner with that. And this way you eliminate all this security which are not ready to dance with you. Suppose you want to short it, do the same thing. Not necessarily you need to do bullish, but you will find security even in a bad market, which are going opposite to everybody, but they're going in your chosen direction. And I prefer you follow 4 indexes so you don't have to work against them. So I prefer you do pay attention to at least S&P future, because when I traded as an institutional trader as well as a prop trader, without S&P future, we're not allowed to do anything, because all these professionals pay attention to those 4 indexes and S&P is on top of that. So I become good at that. And I cannot even pull trigger unless I have S&P and 3 other indexes reviewed, right, several times, because it changes, right? Because market condition changes. Just like today, say for instance, right? Let's see where it's ES. ES is 39.26 for us. It's all expected thing to happen today. And yesterday, when it did not close, right, more than 40.91, I think. Yeah, we knew this is the end of today, and paired yapping about 75 basis, right? That gives them excuse to sell it off. So you got to pay attention to these things. So this way, when you choose scalping or a scalp swing, you go in a direction of things are happening on a larger scale, overall theme around the world, right? So you don't want to go against that. So that's how you do work, right? And regardless what you do, software figures all out. But it will be easier for you to cut down a lot of timing, knowingly what's happening around you. So please try to study them. And I put a lot of stuff on my Facebook, right? Every day I made a commitment, right? I put something there which trader can learn at no charge. I made that commitment 3 years ago, and I'm still doing it. So that's the way I help many traders around the world. We got about 2,800 people there. Didn't happen overnight. So please pay attention to those, and if you want to learn for free, understand scalp swing flow diagram, which is most important. We're going to teach you, and switches, application of magic ingredients and catalysts. Then we're going to talk about the confirming time frame, anchoring time frame, and triggering time frame, which is really very important after you do all. And we're going to apply them in a real time if we have time. Otherwise, I got plenty of examples. So I'm going back to the kitchen, which pictures I took it from my wife, right? So that kitchen had a 5 ingredients. So Magic Trader has a 5 ingredients on each direction. One is a bullish side and one is on a bearish side, representing those believers. So make it very simple. If you have gone to any kind of education, you could identify this simple thing, right? Anybody can do it, and that is the whole purpose. So let's see what these lines are. A vertical thick line is a vertical line, which is a direction line practically. So we give them number one ingredient. And 3 color lines altogether is ingredients number 2. I will specify who they are. So this is a 0 line in a health indicator. I'm going to show it to you. Then this blue line has a value of 1, which is very easy to identify. You put the arrow and MetaStock chart shows you value 1. Then this purple line is number 4. That means it's +4 value. That means it is for bullish believers, right? That's what it is. And the health indicator identifies, just like your cardiogram, right? Internal health of your heart here, so internal health of your security. So we have 5 different lines there, right? So that identify the health of the security. So it doesn't matter what you and me believe. If the security has internal health problem, sooner or later it's going to get a heart attack. So you go on to go long, it's going to go down. So those lines teaching you what is really happening, not what you or I believe in the security, right? So what I learn, it doesn't matter what I think. It's the software, what it thinks is matters. And it tells you what is happening. So it's easy to follow. So I don't need to do hard work. So this is a spike we call, or dotted triangle shows up on your chart, and which is a kind of entry line. So it's a bullish entry, the triangle. Then there is a thin line. It's a thin vertical line. So there are a bunch of lines. So I don't want to go. So I'm in a rush. If it is security, health is good, really good. So pure health tells me security is doing good overall. So let's go in there. So I use that to my advantage. And this is the horizontal time risk. Any risk related to time is our enemy, because too long is going to pull back and we're going to lose from profit, or we just enter the wrong timing. So this becomes very important. And I warn you, it is not as every ribbon you are used to. This has everything to do with the risks which are related to the time. So please pay attention to those ribbons, which comes in 3 different color: red, green, and a black. So black is for neutral, green for bullish, red for bearish. So I'm going to show you again. So this way you have no doubts. This is what it looks like in a bigger picture, and you're going to see them on the chart. So they are very essential part of scalp swing. So we're going to show you same thing with the bearish, which is also essential part, but they're going to show up in between the bullish too. That means we're going other side. So catalysts. What are these catalysts? They are like a booster system, right? You get an energy shot, right? So like you're down and you get an energy shot. So this is what they do, but they have different purposes. So there are yellow candles, turquoise candles, black candles, which are empty, right? So that means we're going on a positive direction, but they have a different and similar function or multifunction. You don't need to go through all. identify the color. This is more important than going too much technical analysis paralysis problems, right? So once you see the yellow color, and if you are short, if I were you, I will short covering at least, or put a tight stop so I don't lose from my profits, right? So initial stage reversal, they play a role. Turquoise bar is continuation of trend or reversal of the trend. They play a part. Same thing with this black candle. And the beauty about black, it pinpoints the exchange between bullish and bearish believers. If that happens and your ribbon is neutral, that means get the hell out of bearish position. Without advising, they tell you what to do. These candles, they become so essential in your trading. That's why they work as a catalyst to change your trading outcome. It's very important. So, and you don't need to do technical analysis for that. Just see the color and you know what is happening. Same thing on a bearish side. This is indigo color we talk, or violet color, whatever you want to name it. Then this is a golden color, and this is a black filled candle. They're working opposite. So you could see here, it's the same functionality here, same functionality in a different direction, which is opposite direction. One is for bullish believers and one is for bearish believers. These are fundamental things you need to do good scalp swing trading. Now, give you an idea, not necessary you have to have all 5 ingredients all the time in your favor. However, you could do as low as 2, but I prefer that you have help from one of the catalysts. Same thing applies for bearish direction. So this way your trading can be enhanced so you don't lose many opportunity, because 5 ingredients and a catalyst, let me put it this way, if you scan 5,000 optionable stocks, you will have 30 opportunities. However, if you go and do less than 5, you will have hundreds of opportunity. And I have seen on average, any market condition, 400 to 500 opportunities at any given time, which is a lot, practically a lot. So there is no problem for us to find the trade. There are more trades than what we could handle. So there is a room for everybody. So let's see top-down approach, which is very essential in scalp swing trading. So top-down approach, what does that mean? I did talk about a little bit before. So you do scan with the magic lines and horizontal time risk explorer and pull out monthly chart and see what the results looks like. Take those results, say for instance 500, right? Even number, right? And then we use that with magic lines weekly, because they are different than so that's why I told you those 2 lines are not same. But usually those 2 lines, you are aware of that, is the same for every time frame. It's not here because they are not the same, right? It's a different design and different approach, and they represent believers. So they are target oriented lines. So when people really believe to pull the trigger, they track it down. So long story short, you use that for weekly magic line and weekly horizontal time risk and filter them out. And then take those results here and do the same thing on a daily chart. Now you are ready for daily results. Then you pull out Magic Trader special 5 ingredients explorer, and the fun starts from there. So this is the minimum everybody in my room does, and they make a watch list based on that, and then they go on a battlefield. So let's see here. Second step. So apply the bigger time frame, which I just told you, right? And then you have to identify CAT. So what does that mean? Which is the confirming time frame, anchoring time frame, and trigger. Confirming is one which has a 5 ingredients, right? Say for instance in daily, and which we're going to see one or two example. When that happens on a multiple time frame, it already happened on a weekly and a weekly and a monthly. The whole thing takes off like there is no tomorrow. That's a trend, unstoppable trend. That's what you're looking for in a perfect world with the 5 ingredients, right? If it does not, then you got to get good at those small ones which are doing that. So they could be confirming on a 60 or 30 and 10 at the same time or different time, or they have an option. But you could trade with that, right? So you got to be just keep in mind those cycles will be smaller and has a less juice, but they have a better juice than you doing at your own, right? So this time frame I'm going to show you an actual chart, but I want you to just know what is this cat doing here. So cat is confirming time frame, anchoring time frame, and triggering time frame. Triggering is the one where you pull the trigger, actually, the broker platform. Let's go and pull the trigger. So you need to identify. Without that, you just jump into because I like daily. Meanwhile, the other time frame will be doing counter cycle and you're going to get hurt. And that's why a lot of people complain, oh, as soon as I enter, it went down. But you need to identify those things. So these are the switches. You will have this with you on a recording, so you could become good at that. But I want to give you overall quick rundown. So this is for bullish. Advanced price perceptor has a symbol on our chart A1, B1, and C1. When you see them, they work as a switch, means that's where scalping converts into the swing method. When it pulls back, you could do scalping still, and then you could go on a swing style. Depends upon what happens next. But generally, there will be some pullback at the end of the hour kind of things or end of the day, taking profit, the day traders. So that's normal. So you could use that to your advantage. So anything before that, you could do scalping. And then when you see big candle doing this advanced price perceptor show up, you could pull the trigger as a swing trading. Then turquoise bar, same thing. You could do it. You could do within turquoise bar scalping or set up for yourself, make some money and ready for swing trading. Same thing with yellow bar. And this is the forecaster, which is a really good invention because it's been working and proving all the time. No guarantee, right? But people have seen it. And this is based on the risk. So in a scale of 1 to 6, as you go further, risk is higher. So I prefer to hang around to take my position in a lower risk area because I'm a conservative trader. But that doesn't mean that I will not take risk. Suppose, and I'll give you a nugget for the existing guy. Suppose weekly has number 1 and I have number 4. I'm expecting the pullback to add more entries, right? But weekly has 1 or 2. That's a very low risk. So this is going to the moon. I know from experience. So don't get scared away on a smaller time frame with number 4, 5, 6. That means the risk in a smaller time frame is higher. The cycle will be finished and you will turn. So you could put a stop or take the damn profit and get ready for the next cycle. That's how you build up your cash flow. So when you see symbol 3.1, 3.2, I myself, right, do scalping, collect some profit, and use that profit to aid my risk on a lower side for swing method. So I made, say, $50 here. So I have sustainability to stay in a trade, right? I will be worried after $50 going down. That means I'm doing something no good. So I got to figure it out, right? Look at the chart. So at least I have a house money as a business, as I mentioned before, utilized in trading to make more money. And I am doing that every day. Whenever I'm trading, I'm using that. And people in my room, I'm witnessing, not theoretical, live. And we're buying stocks with that money now. Anytime we made profit in a trading room, right, I take that and buy, right, in a swing trading, all those stocks, or sometimes long term. Depends. which one are there. So same thing you could apply here in opposite direction. So we could save some time. So I did a schematic here, enlarge the same thing, and I drew a line. So you do scalping here and a swing here. That doesn't mean you cannot do swing there. We're going to show you some examples. So let me see what time is it. Yeah, we are very much tight. So let's go. So Jeff, can we have a few minutes because I need to at least show them some example after this.
Peter, we do have a pretty tight schedule. We're going to need to have you wrap up within just a few minutes.
So let me explain the flow diagram, which is self-explanatory. Part A and Part B, you already looked at. Swing, scalp is a Part A and Part B is a swing. So basically, we are trading in two parts and identify that same thing on a chart. And transfer point is the switches we talked about it, right? And you could do switching your risk management from scalping to swing when the switch shows up on the chart. Say for instance here, this is the magic zone line. The switch showed up here. I accumulated some profits here and some position and it switched it to higher level. So I'm already in profit, so I could defend myself and this will be my stop at that time. And then another yellow bar came in as a switch. I will be going on a swing mode and you could see the results. So that's what the simple application is, right? So that's how you use this diagram. So now this one is a self-explanatory. We have scanners. So we're utilizing this scanner to identify the magic ingredients. We have so many webinars. You could watch it in details if you want it, how we're doing it. So what we're going to do, we're going to take some bullish examples. So utilizing those two Explorer, we did it on an index, right, or futures here. So we had E-mini showed up on 316, had 5 ingredients match. Look at here, all 5 ingredient match. Plus it had a yellow bar on a daily. That means this is going to be produced right away in my mind. I know it's going to have a good trend, couple days happening because this is a rare occurrence. Out of 5,000, 30 shows up. So this is pretty good, they're matching. So let's go and look at it further, what happened there. So look at this here. Those 5 ingredients we talked about all lined up here, number 1, number 2. And I tell you, these lines are parallel, which is very important. Spike showed up, then yellow bar showed up, and number 4 is the pure health, number 5 is the ribbon. That means we're going in. Now, how to identify this small one? Oh, which has a yellow bar. That means it is going in the same direction. That means I'm going to watch that 60 minutes, right? I picked up right here. And here is the catalyst matching. That means this is going to make a couple days in a trade. So you could see here all the believers are on top of the green magic line. They did not close. The minute it closed below, I'm out or before that. So basically, you could see the results yourself. But let's see for a scalping when I could do scalping. So 30 minutes did not match, but I just put it here, right? So what do you call that? Also had a yellow bar. So basically, that this is wrong. This should be not anchoring, right? I'm sorry. So it is a typo, but basically it doesn't need to be anchoring, but bigger time frames is matching 5 ingredients, then you just have to look for yellow bar. Say for instance, here was 12 o'clock and yellow bar was earlier. So what? You do scalping until you find this switch. So we find this switch A1, then we missed it. So what? So this one is telling that we're going to go higher. Number 3.313, that means it is forecasting that we're going to go higher. Did it went? Yes, it did. So we found another switch, and after the switch, you could do scalping or accumulate more of the security, and results are obvious. So I will show you this diagram. You read through step A and step B, right? This should be step B here. Something is, I think we picked up the wrong slide. It should be B here. I apologize for that. But long story short, scalping is here. which is a part A, and part B is on the swing side, which is right here. So basically, that's how we are applying. And once you get in, you could see here, there's a very least amount of the drawdown. It keeps on going. Right? That's the beauty about this method. So less risk, less drawdown, and we are good to go. Let me show you another one, then we're going to wrap it up. So basically, STKL came in very recently, 512. Look at here. No 5 ingredients were matching, but yellow bar was there. That's great. So we found 60-minute matching 5 ingredients yellow bar. That's unbelievable. So basically, look at here, 10 o'clock in trade. Right? Close price was 575. And look at the development of the magic line. They go to the moon. When things are correct, it match up 5 ingredients. Everything works the way in which they should work. Look at the slope. Look at the angle. It's like there is no tomorrow. All this, many switches comes in. Look, a switch came here. You could add some security here, and look what happened. So this is how we are applying all these things. Let me show you one more example. This is the continuation of that. So you could also learn from there. So look at here, 10 minutes has a 5 ingredients. And if you're a day trader or a scalper, look at here. Here is the correct one. Look, A and B. Part A is scalping, part B is swinging. So you could accumulate your positions here and swing it for a couple of hours. How to get out? You will see opposite direction spike. Instead of green spike, you're going to see red spike. Or you decide when you want to do it. Or you could get out when it close below this red magic line. That's how we exiting. And you could see here, green ribbon goes on and on and on. So let me show you Barry's example for the same E-mini came in on a 421. So there were no 5 ingredients. So somebody said, oh, what am I supposed to do? There's no, you could still trade. You could still make money. Let me show you how it is. Look here. So we show that ingredient and a catalyst here, right? So scalp swing. So we don't have a direction, but it was on the left-hand side. So here is the spike came in, and we have this symbol, right? The bearish symbol. And here is the option. If you want to buy put option, you could buy put option. You see the results. I don't have to explain that, right? And it closed below green line here in this case, right? And look what happened then after. So what is happening on a 60-minute? They did not line up. So what? We wait for it line up and then short it. So this one is telling minus 3.4. That means we are going down. That's what it's forecasting. So that's how we're using that. And let's see if we can find a match. Oh, we have Lotto here on 30 minutes, right? 30 minutes, look what happened. 5 ingredients match, right? Then indigo bar came in, which is a catalyst, right? So it's anchored. This is called anchoring. All ingredients and your catalyst is matching. That means anchored, right? Then we could find 10 minutes and do scalping, right? So initially, you could see the time is given here. You could follow it later. So you could come at 10 o'clock, which is also good, right? Following this method, with the 10 o'clock, nothing late. You scalp it, right? And swing it, right? And then you see how this fall down. And then again, it goes horizontal. You could scalp it and swing it. And then you could see the results. So basically, it is like a very easy to follow. If you don't know when to do scalping, do scalping. If it goes down, stay in there. That's how many people do in my room initially, and they are doing pretty well. So I think I'm not going to give more examples. Jeff, go ahead. You could talk, and any questions they have it, we could answer. Sorry about that.
Yeah. There were some questions I was able to answer them by chat, and we're just flat out of time. So, but Dakari said he loves the 5 ingredients, makes things simple for me. Thank you, Peter, for all the work you've put into it. And I want to say thank you as well. So I'm going to go ahead and kind of transition into back to me. I want to say thank you for coming in here, Peter, and spending some time with us. And I'm going to kind of talk a little bit about the room offer and kind of get the show moving on. So thank you for coming in.
Welcome.
All right.
Thank you very much,
Cool.
everybody, too. Right. And everybody who's been there, I appreciate that.
All right. Thanks, Peter.
Thank you.
Okay, let's go ahead and change over to me again. And we do have a special offer. The Magic Trader Elite actually does include quite a bit, and there are a lot of things in there. It's a very, very good add-on. People really, really like it. It's huge. It's massive. It has 58 indicators, 47 explorations, 2 expert advisors, some templates, some scanning, all those things that we've been talking about with MetaStock that have made MetaStock so successful in terms of what you can do with it and what's up with it. It is available as an add-on that you can get. The normal retail price of the MetaStock subscription for Magic Trader Elite is $199. In addition, Peter had talked a little bit about the room and the consulting education room that he offers. That's normally $299 a month. You can see there's a list of all of the stuff that they cover, but they cover some really cool things, and people really, really do like this room. They normally meet Tuesdays and Fridays from 5:45 a.m. to 7:45 a.m. Eastern Time, and people love the room. The retention, it's amazing how much the retention is on this. So what we're doing is we're going to put together a package that includes that room for 3 months, the Magic Trader Elite, and a bunch of training that we put together called the Scalp Swing Recorded Trainings, which is normally $999. What we're going to do for part of that, as a part of that package, is normally everything would cost $2,493. You'll have access to everything: the 3 months of Magic Trader Elite, his alert room service, the Scalp Swing Recorded Trainings, access to their Facebook group, and the Magic Trader educational portal. Normally that would be $2,493. At the event today at $699, and basically that'll give you 1 month or 3 months of everything on the screen, unlimited access to the recorded room. So wish I had a little bit more time to talk about it, but give us a call. People really, really like this. I want to get you involved in it. 800-882-3040 or metastock.com/saleschat. Real quick shout out to Stocks and Commodities. Thanks for sponsoring this event. Thanks for supporting it, all of that kind of stuff. So you can give us a call, 800-882-3040 or metastock.com/saleschat. Because we were running a little bit late on time, I did do a contest drawing. Brett R. in Australia, I want to congratulate you for winning a prize. Congratulations. I did pick that winner off of the list. Brett, you won a 3-month subscription to Larry McMillan's newsletter. So we will get in touch with you in terms of collecting that prize and what you need to do, but we'll reach out to you within several days. So Jody Samuels is our next presenter. Jody, this is her first time with MetaStock and presenting. She's the CEO of FX Traders Edge, Wavy Channel Pro. We've been invited Jody to speak. I'm really, really excited to see what she has. We're basically happy to have her. So Jody, let's go ahead and bring you on here. How are you doing?
I'm good. How are you?
I'm good. Sorry, we're running a little bit behind, but if you feel like you need to go over, you can. I'm going to go ahead and make you the organizer as well, so you can see all the questions as they come in.
Okay.
Everything is going well.
Just
All right.
share my screen.
Yep, I'll let you know when we can see it.
Okay. Can you see it?
Yep, everything looks good. I can see simple tools for finding big moves for profitable trades. So without further ado, I'll get out of your way. Thanks for joining us today.
Thank you so much for having me. So today we're going to talk about simple tools for finding big move profitable trades without risking your capital. So that means we have a funding program which I will offer at the end. And a lot of these simple tools are for scanning the markets, but first let's please read the disclaimer. I received this email from a Wavy Channel Pro member with us for the last 8 years. P.S. The scanner is really awesome. I've been adding the semaphores and bungees to my trading with really good results so far. I was always a price action trader, did not like too many indicators, but these really do help. This is light years away from any other scanner and system that I've ever seen. So that's what we're going to lead up to today, but I'm going to show you a simple way to get there and what we've gone through in order to develop our scanner and how successful it's been and how excited I am to use the technology and show you what we have been working towards for the last 10 years. This is my book, The Trader's Pendulum, The 10 Habits of Highly Successful Traders. And we're going to start off by talking about the market pendulum, the financial pendulum, and the emotional pendulum. The market pendulum is about the market swings, the market's moving up and down. And today I'm going to show you a roadmap for deciphering those market swings. I'm going to show you the market map. And there's nothing we can do about those market swings. The only thing that we can do is to mindfully trade them and not get too emotional in the process, which brings us to the emotional pendulum, which I like to view as I like to view the emotional pendulum as fear on one side and greed on the other side. And we're going to look at some examples in the market to show you how fear plays out and greed plays out and what we can do about it. The financial pendulum is about making and losing money. It's not about not taking losses. Everybody takes losses. All successful traders take losses. But it's about learning how to manage the losses and to make sure that the losses are small compared to the gains. That's easy for me to say. It's not easy to do in practice. I understand that. I've been trading for the last 40 years. This is the market map, and the emotional pendulum is built into this market map. When we start off on the left side at point 0, the market moves up in 5 waves. You've heard of Elliott wave analysis. Well, that has been my expertise. Even though I am not a consummate wave counter, I do look at the market cycles. And when I look at the market cycles at a chart, at any chart, I can see where we are in the cycle and I know how to trade that cycle. So I'm just going to teach you a little bit about the cycles, and I'm going to show you what trades we've developed based on these cycles. So we start out at point 0, and the market is moving up in 5 waves. And you know that wave 3 is the strongest wave, and waves 1, 3, and 5 are the trend waves, and the corrective waves are waves 2 and 4. And traders use Fibonacci tools to see what the corrections will be. And there are lots of indicators to also evaluate where we are and whether we're overbought, whether we're oversold, etc. But the psychology of this is when the market moves up and we're up here where it says greed, optimism, and exuberance, this is where traders load up. This is where the retail market just gets involved because of FOMO, fear of missing out. They don't want to miss out if the market is going to continue to move up, because sometimes we have extended waves. And we saw that in the stock market over the last several years until November, where we have this exuberance. And that we call point T. And that's the end of the trend. And then the market comes down in 3 waves. This is the 3-wave correction. Corrections are labeled with letters. And at this point, the market is very fearful and traders panic and they're discouraged and they bail. So anybody that was long up here, when the market comes down and moves back up again, at this point, they're saying, great, I'm long, it's going to continue to go up. And then what happens, the market turns around and sells off drastically. This is called the trader's trap, the point B trap. So what I'm going to show you today is how we can find this point to buy after the market is sold off dramatically, and how we can avoid being long up here. So yes, exactly. This is where we need to take profits or sell, and this is where we need to be buying. Warren Buffett said, be fearful when others are greedy, be greedy when others are fearful. So that's exactly what we want to do when the market is extended on either side. That's the contrarian view. I'm not saying that you need to buck the trend. You need to just recognize when the trend is over and when it's time to turn around. So I'm going to show you a little quick strategy to show you that, and then we're going to lead into the tool. So how to locate and trade with confidence, end of trend trades using a simple tool. First, let's talk about how to identify the end of trend, how to get out near the top when others are buying and get in when others are selling. And then at the end, I'm going to talk about our Wavy Tunnel Pro program and getting funded. This is important for you to know because emotions are the Achilles heel for traders. You need a system that removes the emotions. You need to filter out the wing it trades. And if you're planning to subscribe to services, why not get a foundation first? And also, most traders don't have objective rules for a trade plan, which is really, really important. I'm also a trader's coach. So write out and follow the rules, trade it like a system. What process do I follow to give me confidence as a trader to pull the trigger and manage my trades? Let's see. My commitment to you is to show you my end of trend objective trade plan with rules, where to enter, where to exit, and then how to use the system trading as little as an hour a week. And really, this is the system to start with the market map and do a little bit of analysis and then find the top setups, which is the strategy. And I'm going to show you how we find them with our Wavy Tunnel Pro tools. And then trade management and optimal risk reward. This is what cuts it. This is really very, very important. And traders spend less time on this and are more concerned with getting fancy software to find the trades, but really it's about managing the trades. Once you get into the trades, that is so very, very important. So let's start with a little trade plan for this simple 1, 2, 3 reversal end of trend trade setup. We're going to start with this, and then I'm going to show you how our software finds these setups for you. So, and this will also show you what to do when there is a market top and how to get confirmation that the market is turning around and that you can exit your position if you're long or even go short. This is a 1, 2, 3 top up here where you have a 0.1, that's the high on the visible chart. The market makes a swing move down, and we call this 0.2, and then it trades back up again. Now in Elliott wave terminology, it'll make a little trend move down, perhaps 5 waves, and then a little 3-wave correction back up. And then if the market turns around and doesn't make a new high and starts to move lower, and we take out this 0.2, that's the signal to trigger to take a trade. So that's your 1, 2, 3 reversal. This is what it looks like on a chart. 1, 2, 3 top, 0.1, 0.2, 0.3, 1, 2, 3 bottom, 0.1, 0.2, 0.3. Now let's add a few things to it. Let's add some rules. We want to see the visible high or low on the chart with a 1, 2, 3 reversal pattern. We want to see a candlestick reversal pattern, and that might include a long tail, an engulfing candle. We want to see awesome oscillator divergence. The awesome oscillator is an indicator that I use to look for market divergence to see if the market is running out of steam. And then perhaps the most important one is a trend line break. That just that ties it all together. So let's look at this 1, 2, 3 top as an example again. We have the visible high or low on the chart with a 1, 2, 3 reversal setup. We have a candlestick reversal pattern, and this is really where we had a very strong bullish candle moving up. The buyers were in control. And then, alas, the sellers came in and knocked it all the way down again. That is a reversal pattern. Awesome oscillator divergence is when price makes a new high and the awesome oscillator makes a lower high. So that shows us that the market is running out of steam. And then we add our trend line break. So once we put all of these points together, we have a simple trade plan. Well, a little trading system, a little trading strategy. The 1, 2, 3 bottom is the same. So we have the visible low, the candlestick reversal pattern, awesome oscillator divergence, price makes a new low, the awesome oscillator makes a higher low, and a trend line break. Now, let's add a trade plan for the 1, 2, 3 bottom. We want to enter at the candle close at the break of 0.2. We want to place our stop below 0.1 or 0.3. We want to sell half of the position, 61.8% between the entry and the previous high, and then we can raise our stop to break even once the first profit target is hit. We can sell half at the previous high, the other half. So let's look at Tesla. This is an example of Tesla. We have, and by the way, I'm taking you through these simple steps, but then I'm going to take you through the scanner, which actually showed the next 3 trades, which I'm showing you, and then I'm going to show you a current scan that I did today. So enter at the candle close at the break of 0.2. That would be here. Leave your stop below 0.1 or 0.3. Sell half of your position, 61.8% between the entry and the previous high. That would be here, from high to low. And then raise your stop to break even, and your second profit target is at the previous high. So that's your little trade plan. For this market, same thing. This is the trigger. You have your 0.1, you have your 1, 2, 3 reversal, you enter, you leave your profit target at 61.8% times from the previous high to the low, which is here. That's your first profit target. Your second profit target is at the previous high. So in this example, both profit targets were hit. And then the third example, same story. You have your candlestick reversal pattern, your 1, 2, 3 pattern, your trend line break, your entry, your first profit target, and your second profit target, but you've moved your stop to break even once the first profit target is hit. So this is just a little trade plan to take advantage of a market reversal once we've determined that it is a market reversal, and the 1, 2, 3 pattern is a confirmation that it is actually turning up and that we don't get in too soon, that we don't pick a bottom. So now let me show you the same trades and where we find them on our scanner. I am going to start with TradeStation. We have the scanner on TradeStation, MT4, and on MotiveWave. And this is what we call our elite tool. So let's go to TradeStation, and I'm just going to describe what the elite tools are. It's an advanced indicator with our bungees and our semaphores. The semaphores tell us our swing moves at various levels, various cycle levels. So there are 5 different semaphores that we use, and the bungees are a great way to determine when these they work in conjunction with the semaphores. So they tell us when the swing moves are complete. It warns of market tops and bottoms. Use our proprietary indicators to catch reversal points and slowing down of trend. Trigger the trades with trend line breaks. Our technology automatically draws the trend lines. And our sophisticated automatic trend line technology sends alerts when there is a trend line break, so then we can take a look at the chart. We also have a multi-time frame indicator to visualize to do a top-down approach. And this is I'll show you an example of this. It's very powerful to see 3 consecutive time frames lining up for trend reversal. And you can run our scanning tool to find multiple trade setups for trend continuation and end of trend setups. So let's go back to the 3 charts that I showed you, the examples. And this is actually the trade that our scanner found, where you see the red box, the end of the wave C, the end of the wave C. This is our wavy tunnel pro setup on the right. So it's very visually appealing. We do not have to be a consummate wave counter. This lays out the price action and the cycles. This is where we have divergence, and then we have a move down for the A, a sideways move for the B, and then the third move down for the C, which comes right into this area here, which is our target. And typically we go below this level, and then we get our signals firing that it's time to buy, which is what I showed you in those 3 examples: WEC, REGN, and Tesla. So now let's look at the scanner. This is again on TradeStation, and I've highlighted the 3 examples that I showed you. So let's start with Regency Centers, and this is the signal. This is called the Breakout 4. We get a ready and we get a signal. The ready is where we see that gray arrow or the gray dot, and then the signal is when we trigger the trade. So these 3 examples are what I showed you. Let's go back. Here's Tesla. This is the ready. This is our point 1, the gray arrow. So this shows up on the scanner, the gray arrow. And I said that this is an ABC, and it takes us down below this tunnel area. And it did. It took us right down below the tunnel. We did not get a signal up here. We did not get a signal up here. The first signal that we got to buy was here. And then the market moved up. This was the ready. The signal is when we go above this moving average line right here. That's how our system calculates it. So the next one, we get notified on our scanner that the market is ready, and this is the signal. And the third one, the ready, is our point 1. This is our signal. This is very, very powerful. Now, when you run it on the 500 and S&P symbols, these are the results of the 500 trades, 500 symbols. If I run it on the daily chart, 54% have 3 profit targets hit, 15% have 2 profit targets hit, and 9% have only 1 profit target hit. And that gives us a 78% wins and 22% losses, or not triggered yet, among the 500 symbols. If I run it on the hourly chart, now I know I spoke to you about 2 different profit targets, but I'll show you the calculation in just a second. We have 3 profit targets that we're going for. So on the hourly chart showed, running it on 500 symbols, it had 83% wins and 17% losses. So let's go back to this scanner now, and I've opened it up here. So we have our ready and we have our signal, we have our entry price, we have our stop loss, and we have 3 profit targets. Now these are just Fibonacci levels based on the previous high to low or previous low to high, depending on whether it's a long signal in green or a red signal in red. So you have your 3 profit targets. You can change the profit targets. You can put whatever Fibonacci percentage you'd like to find your profit targets. And then we have the P&L, and this is key. What you see in parentheses is the number of profit targets that were hit based on these profit targets, what we have here. So the ones at the beginning, obviously they're just starting out, and they'll probably have either 0 or 1 or maybe 2. And if 3 profit targets are hit, it will say 3. If 2 are hit, it will say 2. If 1 is hit, it will say 1. And we looked at the results. So let's look at, this was a scan that I ran last night. Let's look at, so you can take a screenshot and have a look at these charts yourself. I sorted by ready. I sorted by signal. So the signal has already been triggered. So I'm just going to look at the first couple of trades that are on there. So this is REGN, and I like to look at the daily, the 4-hour, and the 60-minute. So this is the ready, the gray dot. It shows up as a gray dot, not a gray arrow on TradeStation. And then the green arrow is when we go above this moving average. So this is the signal, and this is the ready. Ready is the gray dot, signal is the green arrow. So this was the trigger. Now you can choose to sort by ready and then decide to get in earlier. I also like to look at the 60-minute because I like to look to see if there is a 1, 2, 3 reversal pattern on the 60-minute when I'm trading off the daily, and that's what I do. I look for the, I sort for the signal, and I sort for the ready, and I'm looking at a 60-minute 1, 2, 3 reversal. Here's another example. Union Pacific Corp. We had the gray dot, and we have our green arrow. Now, the profit targets are your green hash marks, so they are already listed here. Okay, and you can change these Fibonacci percentages. It's based on the previous high to the low. Okay, so these are your profit targets. Now I sorted by ready. Okay, so ready means that we have the gray dot, but we don't have the signal yet. So we're just going to look at all of the top candidates, and the ready came 1, 2, and 3 candles ago. So let's just look. There are 3 different charts on this page. So 3 different symbols. One is Monster Beverage, and this happens to be a short. Okay, here's the gray dot, but you don't see the red arrow pointing down yet because we don't have the signal yet. This is GL. This is the signal right here, the gray dot. Here is MET. Here is the gray dot. So these are all trades that you can get on a daily basis or on a weekly basis. However often, how often do you want to look for trades? And I'm only using the daily as an example right now, but you can certainly use the hourly chart. You can scan on the hourly chart if you'd like, if you're day trading. So 3 more examples. Here's the gray dot for FL. Now notice the patterns. The patterns are exactly the same. Notice we have this wave separating from the tunnel, and then we've had a very, very steep correction. So we have a very, very steep correction, a very, very steep correction. So here's ANET, here's your gray dot, and here is AON, here's your gray dot. 3 more. Now, I showed you, here's Boston Properties, gray dot. This is Costco. So we know what happened today with Costco. Costco dropped 25%. So it did produce a gray dot, but the price is much lower. So the signal never got signaled. Okay, the ready dot came, but it wasn't signaled. The market dropped, so this goes away. But I just wanted to show you, this is not foolproof. You will have trades that don't signal just because they're ready, and you will have symbols when they do signal, and they're going to go awry. So obviously, it's not a 100% system where every single trade is profitable. That's why you have to manage your trades. And here is Juniper Networks, gray dot. So that was TradeStation, very, very exciting. Now I want to just show you an example on MT4 with currencies. Some of you might trade currencies. And we have the different trades across the top, the breakout one, and this breakout one serves as an end of trend strategy as well, looking for that higher level purple semaphore, the end of the trend, and if it shows up on 3 consecutive time frames, then that's great. It's something that we want to really take a look at seriously. And then we have our breakout 4 trade, which we just looked at in stocks, and then these are all of the trend line breaks. So let's look at the Euro New Zealand. We have the breakout 4 on the 4-hour chart. It has a 3. So that means that it's red and it's short. And the short occurred 3 candles ago. So let's just have a look. Here it is. We have our gray arrow pointing down. Now we're going to look at, and you can see all of our automatic trend lines that are drawn as well. So you can use that as confirmation. Now we're going to look at the hourly chart. The purple arrow showed up 3 candles ago on the 4-hour. So it's showing up here. And then we go down to the 15-minute chart. It's showing up here. So we had the purple arrow pointing down on the 3 consecutive time frames. And that's really key. So on our scanner, we would see, if we looked at those 3 time frames, we would see, we would be alerted to a small number on all of these on 3 consecutive time frames. We can also see that on the multi-time frame down here where we see all of these gray dots. This tells us that we had green dots moving up until this point that turned gray. So something's going on. We could be at a market turning point. And if we see this early on, well, then we can capture the move. And what happened? We had a nice move, and our software provides the target. So this is the red horizontal arrow providing a target for this move. We also had a trend line break at the same time. So we can still scan for the purple or gray arrow to start on our scanner, look for divergence. We can still do that. We have divergence, wait for the 1, 2, 3 confirmation to take the trade, bonus with the trend line break. So the little simple strategy that I taught you, we can still use after you find these trades on the scanner. And here we have it all lined up, the 3 different time frames and where we actually went. We can also, on an MT4 platform, use the scanner for stock indices and all of the CFDs. Now, for our funded program, you can also use the scanner for stocks, even if you're in the US. So you can trade Forex, stocks, commodities, and cryptos on the MT4 platform, which is a Forex trading platform. And you can select the time frame. So if you're a day trader, I recommend using 3 time frames, no matter what kind of trader you are. So you might want to look at the 1 minute, the 5 minute, the 15 minute. Swing traders, the 1 hour, the 4 hour, the daily. Position traders, the 4 hour, the daily, the weekly. And look at the scanner for the setups, define your trade plan, and take the trade, but only if it works for you. Your personality might resonate with a particular setup that you trade well. So that's the setup that you're going to be looking for. Maybe it doesn't resonate with some of the other setups. So you don't look for those setups. It's really a personal thing. We just teach you how to use it. Now I'm going to take you to Motive Wave. And this is a slightly different scan that I did. I looked for a purple, gray, gray. And these are all of the markets that came up. This was actually 3 weeks ago. And what I did was I took a demo account and I felt that the market in general was going to trade lower. These were all short setups on the hourly time frames. So on the paper trading account, I bought puts on all of these symbols. I just went down and I didn't take all of these on my live account. I I took them all, however, on the paper trading account. And in 2 days, every single symbol made money. But to be fair, we were in a market downtrend, or we were just continuing with the downtrend. And all of these markets popped up. They all popped up. So let me show you. And yeah, all I did was I just took one put on every single put on every single one of these markets, as you can see. Okay. So let me show you what we saw. This was the first trade. So you have the purple, you have the gray, you have the gray. I'm looking at this pattern. This is the hourly. It's very, very sideways. So this is basically where I bought the put. And based on our system, I know that we are expecting a lower purple arrow, and that is the target. And that's where we went. Here's another one. This is where I took the trade. This is where we went. This is where I took the trade. This is where we went. This is where I took the trade. This is where we went. So all of the trades work out like this. That doesn't happen all the time, obviously, but it was just uncanny. These are the setups that I took today. The scanner, I took this scanner today. I scanned the markets on stocks, and these are all of the setups that showed up on the daily chart. I also scanned for the lower time frame, but I am just looking at the daily. Like, there were 100 different setups that came up today. I scanned on 500 symbols, so 100 different setups, but I'm just showing you some of them. So let's take a look. SEDG, this is the setup. We have the purple, gray, gray. This is the setup. To buy, the target will be up here. Here's another one. Zen, purple, gray, gray. The target will be up here. This blue arrow, by the way, shows up. I didn't put that in. This is what the software produces, and this little purple triangle as well is produced. That this shows us that the next move after we have this retracement should be higher. And then purple, gray, gray, same story. Okay, and these are all on the daily chart. So you can have a look at these markets because this is hot off the press today. So we started out by talking about a simple 1, 2, 3 reversal strategy and how we use this strategy with a 4-point trade plan to take the trade. And then I introduced the scanner to show you how we can find these trades and then use a simple 4-point strategy to take the trade and place your stop and set your profit targets. So this is really fabulous. There are lots of markets out there to look at, and sometimes it's very, very confusing as to what to focus on and, you know, which sectors are performing well, which aren't. So you can take this one step further. You can look at different market sectors and see which ones are performing well. And if you get a buy signal and it's in that sector, then that might give you more confidence. And if a sector isn't performing well and you get a sell signal within that sector, that might give you more confidence to sell it. So there are lots of ways to, you know, really figure out what trades to take, because you're not going to take every trade like I almost did on the paper trading account that one day. I got a little feisty that day. Okay, so this is how we started out, and this is a simple strategy where we have a market top or a market bottom, and this, when price takes out the 0.2 moving higher, there is a good chance that we will continue higher. But one little trick of the trade, we are always going to have a 3-wave move. So we might not know if this is the start of a 5-wave move for a trend, or if it is just a 3-wave correction. Either way, you can make money just trading the 3 swing legs. Okay, trading the 3 swing legs. And usually the third leg goes at a minimum of 100% of the first leg, and very often it extends towards the 161.8%, which is actually pretty typical of the third wave. That's a normal projection target, 161.8% of the first swing move. When we have an extended move, like we saw today in the stock indices and in some of the other markets, the wave 3 will go beyond that. It can go to 423% times the wave 1 move. And in fact, we saw that today in the S&P. We had a very strong move down. Going back to our emotional pendulum, trading the market cycles, we want to be selling high and buying low. So we almost want to switch it around like I've done here. And instead of being greedy up here, we want to be fearful up here. We want to be panicked and discouraged and bail up here. And we want our indicators to show us, in our simple 4-step strategy, to show us that this is the high of the market and that we are going to turn around at least for a correction. And then down here, we want to put on our greedy hat, be optimistic, exuberant, and load up after the market has bailed. We want to be contrarian thinking. So the Wavy Tunnel Pro training offers 6 different trade plans. Today I showed you one of them. I actually showed you 2 of them. I showed you this one where the scanner picks up trades at the end of this move down. And then I showed you another one where we have a little bit of a complex sideways correction. Okay? And there are others. So we have 4 trend trades and 2 end of trend trades that we can trade and that we can see on the scanners. Currently, we can get our indicator suite and scanners on MT4, TradeStation, and Motive Wave. Okay, I would love to get it on MetaStock. We'll see. And we have the indicator suite without the scanners, in addition to MT4, TradeStation, and Motive Wave on TradingView and Wealth Charts. So I'd like to talk to you a little bit about joining the Wavy Tunnel Pro and getting funded and being able to master the setups, which are all based on trading psychology and the market map. The Wavy Tunnel Pro 2022, I'm told, is really a master's training in understanding how the markets trade in cycles. Use our proprietary combination of cycle high and low indicators with momentum indicators to warn of market tops and bottoms. Learn how to track short-term and long-term trends with precision. Works with stocks, futures, ETFs, Forex, and cryptocurrencies. It works for day, swing, and position trading. And the reason why it works on all of the markets is because all of these patterns are fractal, meaning no matter what time frame you're looking at, no matter what kind of trader you are, the patterns exist on every single time frame and in every single market. So find precise entry points for option strategies. If you trade options on futures or options on the underlying on stocks, and embrace this suite of professional tools to trade like a pro. So wavytunnelpro.com is the page where you're going to go. It's a 5-day accelerated trading and mentorship program. It's all in the website. If you sign up, you can start right away and then join me for coaching. I'm going to be doing coaching probably in August. I just finished coaching for a week. I'm going to be doing it again in August, which gives you a lot of time to really study the material. I'll meet with you as well for a private session just to make sure you're on the right track, etc. And this is our flagship program, the Wavy Tunnel Pro 2022 5-day accelerated trading and mentorship program. So join me, and this is my personal system that I use, and we've used this for a very long time, over 10 years. Now let's talk about getting funded. And let me see if there are any questions, because I haven't had a chance to look at the questions. Okay, I don't see any questions. I could be wrong.
I have one for you.
Okay.
So Stephen asked quite a bit earlier, what do you mean by raising your stop to break even once you hit your profit target?
Oh, that's a
Does that
great
mean
question.
Okay, cool.
Yeah, so what that means is if you take a position, let's say you go long, you split your position in half. So you're really taking two positions. So you take half of your profits. I showed you the example of 61.8% of the move, but that means that you have half left. If the market continues to move up, that's great. But what if the market moves down and moves below where you entered the position to begin with? You don't want to lose money on that trade. So you want to get out at break even on that second position. I started out by saying that money management is key and trade management is key. So this is called trade management, managing your trade once you're in the trade, managing your position once you're in the trade. Are there any other questions, Jeff?
That was it.
Okay, so let's talk about the funding program then. Step one is that the trader qualifies, and in order to qualify, you have to generate 10% profit. You cannot exceed the daily loss limit of 2%, and the max drawdown is 5%. So if you exceed these limits, then I'm sorry to say, but the account, you have to start all over again. Once you qualify, then you get funded live, and you get to share in 75% of the profits. Stop loss is required. So that means that when you take the trade, you have to put your stop loss in. And you have to flatten your positions for the weekend. So no positions over the weekend. You're allowed one withdrawal per month. And on this account, you can trade Forex, crypto, all CFDs, including stocks from the platform. So we're offering a $25,000 account for funding, and larger account sizes are available upon request. So here's what you get. This education is really a master's trading and trading the market cycles. You are going to get educated on Elliott waves, on Fibonacci, and harmonics, all wrapped up in the Wavy Tunnel Pro system, where the Wavy Tunnel Pro system, we have 6 different trade plans to offer you. We actually have a few more different high probability setups that we teach you. You will have access to the proprietary combination of cycle high and low indicators with momentum indicators, which I showed you. We will be doing live coaching starting in August. And you will have access to a whole bunch of student trade analysis sessions with trade review and analysis. You will get trade plans with exact entry and exit rules that you can practice until you really, decide which trade plans you like and which ones you're going to go for and continue trading with. You'll have lifetime access to all the training material, exclusive Discord channel access, and you're really getting a professional set of tools and education to trade stocks and options, futures, Forex, and crypto with consistency if you stick with it. Bonus, you'll get 1 month access to the scanners, wave counts, trade alerts, and trading rooms 4 times a week. And there are various renewal plans from $59. So the total value is $6,495 plus a $25,000 funded account. But for today, for the next couple of days, I'm not sure, we are going to set up a discount code for you. It's called 200 off, 200 OFF, where you will get a $200 discount. So the first package will be $997 for you, special for this conference. And then if you want higher levels of funding, these are the prices for the higher levels of funding. So $997 is our starter package with the discount code 200 off, 200 then capital OFF. It will be set up today. You'll go to wavytunnelpro.com. get unlimited access to the training videos. If you miss the live coaching, you can come to the next one for free. Even if you don't miss it, you can come to the next session for free. And I would be very, very happy to work with you. If you have any questions, please email me at jody@fxtradersedge.com or support@wavytunnelpro.com. And I am happy to take questions now.
Bobby wants to know if futures trading is allowed.
Futures trading on a Forex trading platform, on the MT4 platform, is called CFDs, contracts for differences. So you're not trading futures per se, you're trading the futures equivalent on the MT4 platform. So the pricing is pretty similar to the futures pricing. And certainly the patterns are exactly the same. But the Forex market and the CFDs, it's an over-the-counter market, and the futures trading is done on a regulated exchange. Does this work with the Mac? Is that?
That's what I was going to ask.
Okay.
Thanks, Lori.
All right. Yes, it does. It does work on a Mac.
All right. That looks like the end of the questions. So it does look, I did put the link in the description there. It's Wavy Tunnel Pro. I for some reason, I'm getting the very bottom of your slide cut off. Wavy Tunnel Pro.
WavyTunnelPro.com. Yes.
And then just 200 off as the promo code for that.
Yes.
All right. Very good. That's all we've got, Jody. Thanks for coming in. Welcome.
Thank you so much.
All right.
Thank you, everybody. Thank you.
All right. Great to have you. Cool. All right. Let's go ahead and kind of move over. Let me go ahead and make myself the presenter. We'll turn on this. Show screen. Oh, I was looking at some MetaStock charts. Big thank you to Jody for that. We will, this time we're going to say thank you to Stocks and Commodities Magazine for sponsoring the event today. They've been great supporters of the event since we started doing them. And if you take advantage of any of the MetaStock offers today, you're going to get at least 5 free months. So we appreciate their support. Of course, with MetaStock, what we're going to do today is if you buy a subscription, whether that's our end-of-day subscription or our real-time subscription, we're going to basically give you a second and a third month for free. It's been rated #1 in this price category for 29 years in a row. You can take advantage of that at metastock.com/conf promo, metastock.com/sales chat, or you can give us a call at 800-882-3040. So with that being said, our next guest here today is Ken Calhoun. Ken is a former statistician. He did that as a corporate statistician, as a consultant. We've been working with Ken for a number of years. He brings a wealth of professional real money trading experience to the markets. He comes in, he's very entertaining. We love having him. So let me go ahead and bring him in here and get him started. How are you doing today, Ken? Okay, I can see you. I can see your screen. Everything. Those are some beautiful charts.
Yeah,
although, okay, now I can.
I see you in a big window here, but I can't see my own charts here. How do I minimize?
Yeah, sometimes GoToWebinar does that. I'm going to try off my webcam anyway, which will probably bring it back to you.
Outstanding. Hey, all right.
Sometimes it does that. You just have to move it out of the way. Ken, it's all yours. Go for it.
All right, well, hello, active traders. I'm Ken Calhoun, and I have 0 PowerPoint slides for you because guess what? I'm a real freaking trader. Just don't get me started. Here's P&L proof. I made over $1,200 today, mostly trading UVXY because I know how to trade. These are real money trades in my Fidelity account. Boom, 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 shakalaka. This is a typical day for me. I am a maniac. And here is tax return proof. Now, before we get started, this is just the Ken establishes credibility with the audience, hopefully part of today's presentation. How many of you think it would be good to learn from educators who actually have tax return proof they actually trade and trade a freaking whole lot? I did $41 million worth of order flow last year, and there's my Fidelity 1099 from 2021 as proof, right, on the front of my Trade Mastery site. But how many of you, just a question, think it would be a good idea to learn from people that actually prove they trade versus show a lot of PowerPoint slides and talk about wiggly lines? And have, proof that they actually are trading current markets, right? Probably shouldn't show my account number there, but anyway, I'm a busy guy. So with that, let's take a look at our handy dandy MetaStock charts. One of the things that I want you guys to start thinking about is, with today's big epic market drop, what do you think I was trading? I was trading me some UVXY, right? Because it goes up when the market goes down. And one of the things we want to look for is breakout patterns and also pivots. Now, we have a lot of charts that have been beaten down, and there's a lot of opportunities to look for. Let me get the questions thing up here so I can see. By the way, ask lots of questions. I'm a real money trader with proof. Okay, so again, my refrain is that I think it's best to learn from authentic people who actually do what they say. It's like that line from Full Metal Jacket. Some people talk the talk, but do they also walk the walk? Anyway, one of the things that I want to teach you today is winning gaps and breakouts, how to do that, and using our wonderful MetaStock charts here, you can see some really clean patterns. So we're going to start looking at these. One thing that I want you to start looking at is, hopefully I'll get this right. Look how clean that is. That's a wonderful thing. One of the most important concepts that I want you to start thinking about as a professional trader is range, okay? Range is everything. Yeah, UVXY and SQs. Hey, Mira, good to see you. Yeah, I did over $1,200 and almost all UVXY today. Boom. And I also have a bunch of SOXL orders in the hopper in case the market bounces at the end of the day during our presentation. I closed my Fidelity workstation. I did a lot of trades. Anyway, the first thing that I want you to start thinking about to potentially make winning trades is the bigger the range, the cleaner the chart, the better your odds of making successful trades, right? Now, what do I like about the AMC chart? Well, it was our biggest winning breakout this morning in my live trading room. Anyway, this thing came from 30 all the way down to 10. Boom. That's a big range, 30 to 10 on high volume. And if you take a look at beautiful charts, these are so clean, crystal clear. One thing that you look for is any kind of a pivot. Now, we don't have a bullish hammer here, nor do we have a bullish engulfing, but we do have a price action bounce off the whole number 10. One thing that I want you to also think about, and this is really good to look at the directional play, is often you'll find support or resistance at multiples of $10 a share. So 10, 20, 30, 40, and so forth. So what that means to you as a trader is often it's a good idea if something sells down to a level like 10, and then you buy, say, 1050, put hard stop at 950. That's a good setup, and that worked out great for AMC. So big ranges, one concept, just kind of in the back of your mind, keep in mind, and also pivots off of or bounces off of the 10, 20, 30, 40, 50. And also on the flip side, if you're long, let's say you're long up here, where would our exit target be? Well, it'd be right. I would never buy nines is another concept. So, if you start with your AMC and it keeps going up here, at some point you would trail a stop and look to get out of the trade. Or your exit target would be up at the multiple of 10 up at 20. So that's a $10 range technique for swing trades. Okay. Now, what are some charts? One of my favorites is Disney, right? When you wish upon a star, da, 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 this thing got beaten down to heck. And it may be time for a little bounce. Because, oh no, Mickey Mouse got cut in half. I hate when that happens. Wow, bad kitty. Psh. Anyway, this thing dropped from 200, again, a nice round number, all the way down to 100. I think they might have overdone it just a little bit. You think? So, for looking for a, when you're looking for a pattern for a pivot, first thing, again, this, by the way, this is a tip that I got from a market maker. It came to one of my Las Vegas seminars years ago. The right side of the chart, the numbers on the chart, is a lot more important than any of the stuff on the left. That's completely counterintuitive, but it's accurate and it's honest. It's true. The range is important because you could have the same looking chart visually, but if the numbers on the right were, say, 105 to 106, obviously we would not want to trade that because the risk reward and the range is no good. The bigger the range, the better your odds of making successful trades. Okay, so that's one thing. This range is the first thing that I look at. Then I look at the volume to make sure we got at least 15,000 shares a minute on, or a day on average. 1 million shares a day for, minimum volume requirements. For swing trades, I like stocks that trade and ETFs that trade at least 1 million a day. And for day trading, I like charts that have at least 15,000 shares per minute. From Andrew, I trade stock. Mostly I trade ETFs. Like I traded UVXY all day today. Very few stocks. So I'm mostly ETFs. Let's see, a question from Jim on, I'm a futures trader. What I advise a futures trader like me? The number one thing I learned in trading the E-minis, and I'm good at this stuff, is only trade out days. Only trade the ES when, like, hopefully you're shorting the heck out of the ES today. I sincerely hope you're shorting, making bank with that. Only trade when something is below the previous day's low or above the previous day's high. That's one of the foundation, most important things you'll learn from me in life. And again, I'm a guy who just proved I did 41 million worth of trades last year. That's my Fidelity actual 1099 on the front of my website, where the SEC can certainly see it and are welcome to look at it because they could check and it's true. So I have nothing to hide. So I'm very honest. Anyway, the point is only trade stocks, ETFs, futures, or Forex for that matter, FX pairs, only trade out days, right? I think one of the market wizards had mentioned that. Let's see, Ron's asking, when did I get in today? Starting pre-market. I bought several hundred shares of UVXY pre-market. Let's see, Jim's asking, do I only wait for stock to bottom and then go only long? No, I mostly like small gaps that move to the upside, like UVXY today. So I like things that are going up. When I look for pivots, they have to be especially strong in terms of the range and the criteria we look at. So for example, I'm keen on buying Disney. We have a hammer here. Now again, hammer, this is a bullish reversal signal. And again, for more on candlesticks, learn from my very long time colleague, the wonderful Steve Nissen, who is the world's top expert on candlesticks. I've worked with Steve for 20 years, and I've made a lot of winning trades, so I learned from Steve. Deeply, forever, lifetime indebted to him. He's one of the good guys in the business, like Jeff Gibby, one of the great guys in the business. There's a few really good people out there worth working with. And anyway, the point is, it doesn't matter if a hammer is green or red, okay? But it is a hammer. It had a lower tail, and we started to move up. So that's a bullish reversal sign. And one thing that you look at for gap reversals, Walt Disney, when you wish upon a star, little gap reversal, that's a good, strong signal for pivots. So in this downtrending market, we're looking for pivot plays, and we're looking for breakouts and things like our inverses, right? SQQQ, I was trading like a maniac today, but mostly UVXY. I'm really excited because I made a lot of money, over 1,200 net profit today, which I like. Anything over 1,000, I'm a happy camper. I can yell down to my wife, I made over 1,000 today. She says, Omedeto Ken-san. She's from Japan. I don't understand her most of the time, but it's okay. Anyway, the point is, when you're looking for a gap, this is a nice profile where you've got a hammer or a bearish or bullish engulfing. If you have a hammer or a bullish engulfing and a small gap to the upside, that's usually a good signal for a long above the high of that gap day, okay? Bum, 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 bum. One thing I like doing is what's called pair trading. And that's where I trade. You can do this for day or swings, but you can look at the long versus, and this is for those of you experienced with the inverse and the leveraged ETFs, which are exchange traded products that are for sophisticated or experienced traders only mostly. The point is, when one goes up, the other goes down. So if we zoom in on this, all I want to do is just a zoom, baby. Boom. When this goes up, the UVXY is going down. Now, the opposite of UVXY is SVXY, but this one has much, much better range and volume. So, and the chart pattern is near identical opposite of UVXY. Very curiously, it's a semiconductor long. Anyway, when this goes down, UVXY is going up and vice versa. So you can either swing trade. It's kind of like a arbitrage play. You can swing trade or intraday trade the other. Let's see, trader is asking, when did I get in today? For what reason? Let's see. I was trading. I was buying pre-market. I was buying me some UVXY back at 14 in the 1480s, okay? And currently it ran up over 17. So I made a lot of money trading just hundreds, not thousands of shares at a time. I think it's very important to do what my colleague, the extremely intelligent Tom Sosnoff said, which is trade small, trade often. He's exactly right. That's why all these little itty bitty, some are odd lots, usually 150, 50, 200 shares, up to 400 shares, but typically I was doing mostly 300 shares today. Anyway, that's one of the patterns to look for. So anyway, the point is on this one, if you say, memorize what this looks like just briefly. This is the SOXL, and then if you compare that with UVXY, it's kind of an opposite pattern. This one's a good uptrend. Anyway, one of the things that you're looking for when it comes to gaps and breakouts and looking for ranges that are tradable, some instruments like the volatility ETNs, I used to trade TVIX all the time. That was my favorite. I bought 56 and I sold 940. That was my biggest winning point range trade in my life. It was only 3 shares, but I had a huge win in that. The point is, some instruments like the volatility ETFs, like UVXY, you tend to you buy low, sell high. So you buy when it looks absolutely terrible. I mentioned to my traders to go long here at 11. It was most recently it was 1170. That was my long call for my live room members, and it ran all the way to 18. And then we had a shooting star up here. So look how clear that shooting star is. Now this is a really good example of a candlestick pattern for a round trip. All you need is your brain and your MetaStock charts to guide you. Does everyone see the buy signal? This is a bullish engulfment. Large green body wrapped around the doji here. That's a buy signal above the high, the candle high. So that's a long signal here, right? Right above the 1540 or so. Now up here we had a sell signal because we had a shooting star. So you sell the loss of support right there. It's the thing about the MetaStock charts is they're the cleanest in the business, and they have the most depth and detail and flexibility. And one of these days, Jeff, I got to develop an add-in for, I can't do it, but maybe you can hook me up with somebody who can JV with me to develop like a Calhoun breakout add-in for MetaStock. So I'm sure it'd do really well. I know how to trade. Anyway, this is the kind of thing you're looking for, is a round trip, like ties a bow on it, kind of say, you're given the trade from start to finish. You got a bullish engulfment, says to go here long. No fuss, no muss, no questions until dun 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 dun. It's a shooting star. We sell right there, right? So you buy here, sell there. Bullish engulfment, shooting star. And I just saw that for the first time this minute. So it's when you know how to trade, all this stuff becomes very second nature, right? And on some instruments, my point is on some instruments, how to say, chart pattern 101 stuff is irrelevant to trading for money. It's all about the risk management. Trade like an accountant or like a statistician like me. You trade with the money. The money flow is the more important thing. Chart patterns are great, but chart patterns fail the majority of the time if that's all you got. You can't use your chart patterns and make it as a trader. Now, who can tell me why that is? The most important part of your trade is your exit. It's not your entry. Your exit is much more important than your entry. And you could have bought anywhere in here. You could have bought here, 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 here. But as long as you knew where to sell up here after this shooting star high, that's the important data set. It's not the entry. The entry you could have bought anywhere in here. Didn't matter. You don't need squiggly lines. Hey, it's going up, you buy it. But it's a shooting star or other hit horizontal resistance or whatever, you sell into that. So the exits are much more important than the entries. The elephant in the room, the problem is the trading education industry is largely a bunch of shysters who don't really trade. All they do is do PowerPoints and webinars and talk about trading. Those of us, nobody has the right to show you how to trade unless they have proof that they can actually make money trading on a given day, right? Does anyone agree with me on that, or am I just kind of beating a dead horse here? But maybe I'm beating a little dead horse, but I think authenticity counts, and being able to prove that the person can really trade with live real money account today is kind of I would not choose to learn from anybody who can't prove with tax return proof and current, live, I'm logged into my Fidelity account here, real money proofs to actually trade. So my point is, most of it's kind of a pet peeve. The trading community out there has largely been misled by people, and all they got is chart patterns because they don't really trade for money. They run webinars and they do PowerPoints for a living, and they're internet marketers. Those of us who trade for money, it's all about your exits and position sizing. Now, let me give you another quick tip. This is a very valuable one, and you may have picked it up for those of you who are experienced traders and looking at my order flow today. And that's that every trade should be seen as a decision, every trade you make should not be seen as a single trade. This is another foundational important thing that I learned over the last 22 years of full-time trading. Your life as a trader, every trade you make should be a sequence of 2 or 3 trades. Never, ever put on a trade. That's what I did and screwed up for years and blew up accounts too. I've got the blown accounts to prove it. I've made every mistake and then some, but I learned. And hey, it's thundering out there. Reminds me of that song, Riders on the Storm by Jim Morrison and the Doors. Riders on the Storm. Anyway, the point is, as a trader, every single thing that you do should be seen in context of a sequence of a minimum 3 trades, 2 or 3 trades, 2 at the very least, but it should not be this squiggly. Here's how to lose money. I read a book or I bought some course and they said, look for this special squiggly line crossover signal because that's how you make money as a trader. You look for the squiggly. No, that's bullshit. BS. We don't need no stinking lines. All you need is price action and a brain and figuring out how to manage the math of the trade. All right. It's not about squiggly lines. It's about your P&L. It's all about the money. And to make money as a trader, the way that I do that, and my favorite way to swing and day trade is to trade really, really small on the front end and then scale in to the ones that work out. And all the ones that F up and cost me a small stop, itty bitty. My average stop loss cost is under $50 per trade. Okay. And I keep really, really tight stops. And I get shaken out all the time. But I made over $1,200 today because I know how to trade. The thing is, learn from me. I know what I'm talking about. Put in a sequence of trades. So if you're swing trading, I advocate every $2 or so. So let's say you're trading NEO, this chart. Let's say about 20, 22, 24, 26, you're happy camper. You start to get stopped out, buying up in the 40s. So you said, okay, deck with it. I'll sell all my shares, bank a profit near 48.50. Good, your work is done. Do not ever, as a trader, you have my word on this, it's very important. Do not make the big trading decision. Bum, 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 bum. Thanks for playing. It's much more put on a sequence of trades, okay? So everything that you're looking at, it's like I'm considering this thing for a bounce, okay? Bounce. Wow, it's a lot of rain. I just installed this really nifty Medea mini split air conditioner with a U-shape. It's really cool. In the casement window here, I did that all myself. I'll see if the window that I put in there holds because we have our first big rain coming up here in Colorado. Anyway, let's say you're considering this. Now this has, the first thing you do in looking at a chart is evaluate, is it worth trading? Hey Joe, what services do I sell? Mostly my live trading room. But you guys can join me every Saturday for free for as long as you want. I've been running them for over 6,000 people are registered. I have free Saturday events. I even play saxophone a little bit. Don't get them started. Have tenor, will play. Every Saturday I've got my live event and I play sax. Anyway, enough of the horn. Just for kicks and giggles. Anyway, the point is, I usually play better than that. The point is, scaling and having a sequence of trades is vitally important. So for swing trades, I like to add every $2. So let's say you're going to buy, where are we at here? 16. Let's say we buy the 18. That's fine. Then I'll scale in. Let's say I just buy 100 shares at 18. That's fine. I'll buy another 100 at right over 20. Then I usually martingale up or sequentially trade. So I might buy 100 at 18, another 100 at 20, another 200 at 22, another 200 at 24. And then that one gets stopped out because it pulls back to 23. Okay, then sell it all and make the profit. Okay, that's how you trade correctly. And for day trading, I'll incrementally trade every 10, 15, 20 cents on something as it's running. Right, Michael? And what I found is trailing stops. No, I'm Kenny C, but they used to call me Kenny C. I used to play in clubs all over LA back when I put myself through UCLA through college, and partly by playing in clubs all over California. Back when I was a young man. I'm almost 60 years old now. How did that happen? I'm old. Well, anyway, I don't feel old. Making money as a trader and working with good professionals that are helpful, like Gibby. Jeff Gibby's a great guy. And working on world-class platforms like the MetaStock charts is a really good way to make your life a little more interesting. It keeps us active. Anyway, the point is, and these are two really important, the two most important things I'll teach you today. One is don't trade anything that's inside the previous day's range. That's vitally important. I've done tens of thousands of live real money trades. I've had both winning and losing years. I know the difference. Don't trade anything that's inside the prior day's high-low. Just trust me. Well, actually, don't trust me. I like when we used to have real presidents like Reagan. People that wouldn't blow up our oil industry. But don't get me started. Hey, let's get green. Yeah, green this, buddy. Trust but verify. So my point is, go back over your last 100 stop loss, or go back over your last 10 stop losses. I can't guarantee, but I'll say, or last 20 or 30 stop losses. The vast majority of your stops will be from trades that were initiated when the instrument was trading inside the previous day's high-low range. Prove it to yourself. Listen to me. Say, hey, is this guy full of baloney? Or does he know his stuff? I think I know my stuff. Anyway, the point, but you put me to the test. Test out what anyone teaches you for free and see if it works. Only if the free stuff works, then should you consider paying any money for it. How many of you would agree with that? Whenever I do my money show events, all the hands raise up and people are like, amen, and boom, boom, they clap and stuff. How many of you would agree? You should never buy anything from an educator unless their free content proves itself over some reasonable length of time, okay? So I think that's fair and true. It's like going to Costco and getting a free sample before you buy the box or whatever. So make sure it tastes good. Make sure that whatever you're being taught is taught by somebody that proves they trade, knows their stuff, is intelligent, and has proof that they actually really trade. That acid test will wipe out most of the educators because most of them are just bull honky PowerPoint talking, look at this cross line and this squiggly line. Anyway, so the point is, don't trade stuff inside the previous day's range. Prove that validity of that concept by going over your last 20 stop losses. And sure enough, I won't guarantee, but I'll say probably at least 12 to 14, if not the majority of these stop losses were caused by things that were entered when the price was inside the previous day's high-low range. So only trade outrange things. That's number one. And number two is always start small and snowball, or incrementally trade in pieces and chunks instead of making a big trade. What is the name of this funny person? I'm Ken Calhoun, and my free event is every Saturday at noon. And you can get the Zoom webinar link for free on the front of TradeMastery.com. Bum, 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 bum. What else is evident on this chart instead of in terms of signals? Let's see, signal, uncertainty, yeah, shooting star, bearish engulfing, doji. Let's see what else we have. How about the category of stuff that, here's an interesting one, AGRI. It was a pretty good runner. Now, for those of you who trade CASs, for those of you who trade CASs, that means cheap ass stocks. A little levity there, a little here. For those of you who trade cheap under $2 piece of junk stocks like this, shame on you. Only, I won't say morons, but you should not be trading stuff under $10. Only morons and amateurs trade stuff under $10. Stuff under $10. The people who advocate, well, there's lots of leverage, and there is no consistency. It's like dating a woman at a nightclub who looks really attractive, but it turns out she's, you know, one step away from homelessness. She's a thief. She has drug and alcohol problems. Been there, done that, got the t-shirt many times. Anyway, stocks under $10 are like nightclub hotties. They may look appealing, but they have character flaws, skeletons in the closet, and you want to just say no. So cheap stocks are inconsistent. That's the problem. That's the fatal flaw. That's the fool's gold diamond. It's like the hottie in a nightclub. Oh, she looks so beautiful. And then you wake up and she took your wallet and she's gone. Just say no. So anyway, because they're haphazard, you get much more consistency. Again, that fits in with my theme of you want to incrementally, conservatively, more, I won't use the word safely, but I will say more conservatively, which I'm extremely conservative. You want to enter carefully, intelligently in things that have some length of run and aren't pop and drop stocks. Stocks under $10 are generally pop and drop one-hit wonders. Now listen carefully. There is no shame in trading 10 shares of something at a time. I'd much rather you buy 10 shares of, say, Disney, and say for a swing trade, and it runs 30 points for you, whatever, you make a few $100, rather than, you know, 1,000 shares or whatever, some really cheap stock that pops and drops and blows up your account and puts a dent in your account. So just say no to cheap stocks and cheap women. I'm on fire here. Fire. Do you have Netflix in the mix here? Not yet. Netflix. Bum, bum, ba, dum, bum. Netflix.o. Tick frickin' tock. Now, you may think this is oversold. That's what I thought about Blockbuster at $2 a share. I lost money. I bought Blockbuster in the single digits. I bought Borders in the single digits. I bought Circuit City in the single digits because I thought surely somebody would come to the rescue. They didn't, and I learned then the magical terminology of Q, mean not like the wonderful character by Delancey on Next Generation, and the new Picard series is pretty good. And not Q, the cool Q, it's Q, no shareholder value. And so just because it looks cheap doesn't mean it's a bargain. Lesson that learned the hard way. So does Netflix dropping from 700 to 190 make it a bargain? Nah, it's starting to get interesting. But if you're going to look for pivots and things that you think are oversold, at the, how to say, I always learned very carefully that usually it keeps going down. Okay, so if you do insist on buying this, I bought a little bit yesterday and then I sold it back today because I didn't like the looks of the market. So and this was pulling back a little bit from my entry, so I sold it for a small stop this morning. The point is, you start really small. So there's nothing wrong with buying like I did. It was like 10 or 20 shares, something really teeny tiny size. That way, if you do take a stop, it doesn't cost much. Now, what do you look at for bullish confirmation for something that may be about to run? Well, one of the things that I always like to look for is the ratio of green to red candles. Now, is this a story that's mostly red or mostly green? Look at it like the old school cars with the air fuel carburetor. What's the ratio, the fuel to air mix? I used to work for Ford Motor Company, wonderful company. Anyway, the point is, this is mostly red. So it doesn't make sense to buy any size unless it gets back over, say, 200. Okay, so not a trade recommendation, but Netflix, if I buy, say, 202, I'll put a hard stop at, say, 180, 190, something relatively close to it on this chart. So if you're bottom fishing, a better pattern to look for is something that has a history of recent green, right? Let's see. From the land of beaten down stocks. Now, PayPal got nailed, right? Going from 300 a share down to 70. Now, I like this one. I think PayPal and Shopify have a chance. Right, Sean? Hey, Rich. Anyway, so the point is, this thing went from 300 down to 70, 80. Is it worth a buy? Well, one thing you want to look for is, what I like to look for is a sequence of at least several green candles. And even then, that may not save you, right? Here's a good example of the kind of sequence I like, but this one didn't pay off, right? It started to go up, but then it went sideways, started to go down. You'd sell, into this drop because it failed to hold the region within which you get in at. So that's an example of one that didn't work. Oftentimes, though, when you see a sequence of green, it does keep going up. So one thing that I look for is this is dominated by red, so we're looking to see if it bounces. So this thing from 130 to 75, what I'd like to see in this for recovery play is at least say 4 or 5 out of 6 green candles in a row. Something very similar to this pattern. Again, I apologize if I offended anyone with the "it's not good to date women from nightclubs" example, but it's the truth. I mean, I've got a lot of experience with that. So I'm always about the truth, always about lessons learned, and hopefully I can pass along lessons learned the hard way in trading to help you guys save yourself from getting stopped out so much or costing much when you get stopped out. So this is a pretty good pattern for a recovery breakout, but as luck would have it, it didn't hold. It ran up, and this would have been fine to buy into this sequence, but ultimately it started to drop. So you'd be maybe get in on the way up and then scale out on the way back. Sometimes they'll run, sometimes they go flat, sometimes they go back down. Steven's asking, how long does your free Zoom breakout last on Saturday? What time? The stock trading portion is from 12 to 12:30, and the jazz is half an hour before that, from 11:30 to 12. So this is a good example of a big, wide, clean chart. It's going straight down, not straight down, but heavily dropped. Now, this is interesting to me for a pivot because of the magnitude of the drop. Okay, this is PayPal. It went from 320 down to 100, under 100. So it got cut in third in less than a year. So does that mean that it's going to stop going down? Of course not. It could go down to $10 a share. Where's support on this chart? That'd be 0, right? So there is no technical support on this chart. But if there is a sequence of, say, 3, 4, 5 green candles, it may be good for a pivot long. Let's see another good example. This is our TQs, and obviously it's the opposite of the SQs. SQs have gone up nicely. Now here's a good example of a sequence that runs up How do you know when to get out of something? Well, one thing that I look for, one pattern, is if you see 3 red days in a row, just like 3 green days in a row, buying above, that's another rider down or a quick note. If you have 3 greens in a row, you may want to go long above that. If you have 3 red days in a row, you want to go short or trail a stop or get out of it if you see 3 red days. So that's one indication that you may have a reversal of trend in addition to the classic loss of support or resistance, or you're shooting stars or bearish engulfing. So we have a sequence of green candles here on the way up. Oh, thanks. I'm saying, Ken, it's the first time I listened to you drop some serious truth bombs. I'll look for more of your stuff on the net. Hey, sure thing, man. Hey, thanks, Sean. Saying me too. Let me know if any questions too. I'm here for you guys. I'm here for another 20 minutes. Wonder how the market's doing. Well, anyway, what a day down in the market. So now one thing you can start getting at for good trade setups is, for example, here's an example in SQs. It's gone up nicely, starting to pull back. I'm sure it's getting back up. One thing to look for is a pattern where you have a small followed by a large whole body green candle. And one thing to look for, I think this can really help, is that here's the example of pattern. Here's another rider downer. And please take notes. I'm very honest. I've been doing this for 22 years. I'm a UCLA graduate. I used to be a corporate trainer and statistician and quality management consultant for big companies. And I prove I really trade with the 1099 tax return proof. Anyway, and I showed you my Fidelity account today, which I wish I could be trading right this second, but that's okay. I'm here for you guys. I did well today, so I'm happy. Anyway, small followed by a large green candle in an uptrend. And it needs to look like this. Not a flat doji candle, not a big honking candle, something moderate like this. We have a small candle followed by a green candle that is twice the height or so of the 2 or 3 times the whole body height. That's a good signal for breakout. Now you don't want small followed by an extreme candle. For example, this is not what to look for. Trading effectively is very much about being very specific about your pattern recognition skills. So here's an example of, and if I were to do and hopefully Jeff has something, maybe you can connect the dots. So whoever the top designer is for breakout, for the add-ons for MetaStock, that'd be something I'd like to do. The Boolean operators that I would have the programmer code would have this configuration in it where it needs to have a, the second candle in the sequence needs to have roughly 2 and no more than 3 times the height of the first candle. And the first candle has to have a range of at least, say, 70, 80 cents. So here's a good example of a long signal to use. This is just something I developed myself based on my own experience. Now, this is a bullish engulfing, by the way, too. Red and green wrapped around, so it's a bullish engulfing. But small followed by large, like this, looks good. Here you have a sequence, small, medium, large, like venti and all those coffee sizes. Here's small followed by 2 large, right? So that's not good because that's overextended, and sure enough, it chopped it up. Small followed by medium, large. And again, just write that down. Or better yet, screen cap that, right? That's a good pattern. So it's not, so to be really crystal clear, because for some reason people don't understand, or they don't listen, or they don't have the specificity, to get it right. We don't have a candle like this. The first candle does not look like this. It does not look like that. It can look like this, or this, or this, or this, or this for the first candle. The second candle should look like this, or this. Should not look like a big candle, nor should it look like a doji. Okay, so that's a very specific pattern. The other specific tip about that pattern is that it should not have any significant tails or shadows above or below either candle. And that's a very, very good anchor. It's what I call an anchor pair pattern. So I hope that helps. And then, Tim, I wouldn't worry about whether or not the candles are filled or not. Let's see, question. On trading outside the previous day's range, is it the close outside the range? I know you just need to, yeah, you have to, let's see. For swing trading, it's best to enter at the end of the day where professional traders trade. For day trading, it's trading open. Swing trading, you can initiate the trade on the open, but only hold on to it for a swing if the end of the second of the current day is above the previous day's high. So yeah, it's a smart question. So what the trader is asking is, how does the close factor in, basically? And that's correct. You know, if something trades within like this, well, let's take a look at, well, if it trades within a range here and it closes above the previous day's close, so the close has to be above the previous day's close to merit putting on or keeping the shares or adding to the shares for a swing trade. So yes, the close needs to be a close above the prior day's close. Well, thanks, Martin. I enjoy this one. Appreciate it. Let's see. Steve's asking how much attention I pay to the volume at the bottom in conjunction. Not as much as I used to. I used to think volume was really critical. It usually isn't. What I use is if the volume bars are increasing, then I will put on more share size. But it's all about price action. So here you can see as price is going up, volume bars are going up, which is very common. But that does not necessarily make for a good trade setup. Okay. It's a good pattern though, and that's a good kind of nuance to remember is if preferentially you've got the second candle in the pair has larger volume than the first candle. Now, regardless of what volume does, I'm all about price action, so I'll still take the trade, but I'll trade more volume. I'll trade more shares if the day, the second day has larger volume. Traders vote with volume, so that's kind of it gates my, or helps me determine share size. So if the volume were flat, I do a small trade. If the volume were declining, I do a really small trade. If the volume's increasing like this, I do the larger trade. So yeah, it's a good point. Hey, y'all have been kind. I appreciate it. What else can I share? You're looking for pivots again. This is a good example of 3 out of 4 of the most recent days were green, right? So that's a good signal for a pivot. If you have something where it's starting to bounce, like let's say you're following it from up here and you didn't see all this. Let's go old school. Let's say that's all you saw and you're wondering, hey, maybe it's going to bounce. No, Sparky, because the most recent 5 days, it's half and half. You got, or most recent 6 days, you got 3 reds and 3 greens. So that's not a buy because of that. Does that make sense? You look at, again, the ratio of green to red. This is not a ratio of lots of happy green candles. This is mixed market. And if it's a mixed market, half green, half red, that means indecisiveness and uncertainty. And oftentimes you get a watch out below. So this, though, looks better. You got 3 greens out of 4. And if the next day or two has at least 1 or 2 greens, that'd probably be a good signal to go long. Okay. Now, again, when you do go long, one of the things that I advocate is using a sequence. Oh, by the way, here's another point. Let's recent pair here. One of the most, see, I do a lot of trades. This is today's trades. I did over 70 trades today. And that's not a heavy day for me. A heavy day for me is 115, 120 trades. A light day for me is like this, 40, 50, 60. Thank goodness for no commissions. I paid 33 grand in commissions a couple of years back. I love the no commissions. Anyway, the point is, it's always smart to set up a sequence, one triggers the other order pair. So all of your trades, whether they're day or swing trades, should be set up as OTO orders, so that when you put on the trade, you are, at the time you put on, say, a buy stop order somewhere above where the market, where the thing's currently trading, you also put on the associated hard or trailing stop. And I mix them up. I do both. But you also put on your stop loss simultaneously, so that once the trade, the entry, your long trade gets filled, it automatically activates a trailing or hard stop. And it's a wonderful way to trade because it lets you do this on autopilot. That's why I made so much money today. I'm good at this, but you want to set up OTO orders. So, you know, a pair might look like, where's a, okay, here's a good example. In order to buy 300 of UVXY at 1767 and a hard stop at, say, the 1746, right? And I cancel that. But the point is, put together your orders with one triggers the other orders. Or so, for example, you buy 200 with a stop at 2122, and simultaneously it has a hard stop set at 2060. Trail stop of 15 cents. So I bought it at 2122 was, or that's the initial order I'd put in. I think I changed it. But anyway, 2122 with a 15-cent trailing stop. So it automatically manages your entry and exit for you. Very, very strategically valuable and important tip on trading. See, I'm a real trader, unlike 99% of the educators who ask for tax return proof. And that, really seriously, the FTC and the SEC should seriously demand and require that anyone who's a trading educator at least be a real trader. They don't have to be a bajillionaire real trader, but at least a real trader with tax return proof that they do, you know, at least a few thousand trades a year, have some level of comprehensive experience so that they're qualified. I think that's important because right now, you know, a laid off fast food worker can become the next Forex expert. Let's go look at what other people are doing and make PowerPoint slides and talk about it. And that's bad for the trading community because it's a bunch of hogwash. I think authenticity is important. Anyway, money counts. What else? A few minutes left. You guys let me know any other questions. What was another one? Shopify, right? S-H-O-P, beaten down. Ordinary shares. All right, be like that. S-H-O-P. Where's the shop.o?
.k is the one you want.
Oh, thanks, man.
Yeah.
A knowledgeable guy. I like working with professionals and other stuff. It makes life so much easier. So thanks, as always. Anyway, shop. Now, in case you missed it, name that candle. I know it's getting late, guys. We're going to wrap up in just a few minutes here, but name that candlestick. It looks like a box with a stick on top. I like one of those ice creams with a popsicle on top, or the wife gets me, what are those? Some kind of Dove bars or something. Anyway, what's that called? It's called a shooting star. Hey, Genebra is asking to trade options. Nope. Steve's asking, what's my website address again? Last I checked, it was Day Trading University, but now it's Trade Mastery. TradeMastery.com. So you got all these swing traders asking me, do you do swing trades too? So there it is in chat, trademastery.com. Thanks, man. Anyway, that would be a shooting star, right? A box with a stick on top is a shooting star. Now, that gave you a last-ditch chance to sell your shares on a loss of the bottom of that candle, right? Before it hit the fan. And it dropped from 1,700 down to 400. Now, remember, there's the gambler's fallacy kind of thing of thinking, well, it was expensive at 1,700, but now it's only half as much at 900 or 800, 850, right? Anyway, so surely 850, that bounce, surely that's a good deal. Oops, we've gone down so much further. Maybe it was right here. Oops, no. You have to look for the very specific patterns. So, for example, this is a good example of the type of recovery play I like, but it never did get above the candle high. So this is a small followed by a larger whole row body candle. It's a little larger candle than I'd like, but yet it never did break the high of that. So if it had gone up here, that would have been a buy, but it never did, so we don't buy. Now here we have what? I just saw this for the first time, a bullish engulfing. That's what that is down there. The green box with the red next to it to the left, that's called a bullish engulfing. So that is a long signal up above the high of that candle right here, which I love these MetaStock charts. See, look, it has your high 385. So the answer to this is, go long over 385. So clean, these charts. It's wonderful. You don't need an eye exam to use the MetaStock charts. They're so clear. That's one thing I like about them is they really pop. They're really clear. And what I like about them, there's other places that have clear charts, but the thing about MetaStock is it's got a whole huge back end of all kinds of technical studies and information and depth. MetaStock has the most comprehensive, by far the most comprehensive charting platform out there. They've got so many bells and whistles and things you can use, and it's really intelligently designed. So that facilitates our work as traders. But you got to have the knowledge to use the tool. It's like having MetaStock charts are like having a Maserati or a Porsche. There is no substitute. But you got to learn how to drive, Sparky. You can't be a bad driver with the Porsche and still expect to make money. You got to have good training. So look to Jeff and team for that. Anyway, tools are great, but knowledge of how to use the tools is a critical success factor. So anyway, we have a bullish engulfing. We have a round number 300. I like round numbers. I'm a huge fan. For example, when I day trade, I'll put together a sequence of trades. Let's say I'm trading something between 21 and therefore I'd have 22 as an exit target. So I might buy 21.15, 21.25, 21.40, 21.60, 21.80, and then I'll sell it all or tighten up my trailing stop if it gets to the 22. So trading within a whole number range is good. Similarly, with a chart like this, if you're looking for swing trading, big range charts, look at the multiples on this chart of 100. So the 300, the 400, just like 30, 40, 50, 300, 400, 500. All right, we've got just a few minutes. What else?
Okay, I've got a question from YouTube.
Oh yeah, sure thing, man.
Let's see. Freddie Zply says, "Hey Ken, looks like everything you do now is candle pattern recognition. Did you start out trading this way, and how long did it take you to make that switch?"
No, everything I do is price action trading, of which candlesticks is an important piece of it. I've worked with Steve Nissen for 20 years and highly recommend him at candlecharts.com. I learned everything, and I only know 5% of what Steve knows. He's the expert, but I learned well from the master, and he's the master candlestick guy. So yeah, I use candlesticks all the time because they're extremely powerful and useful. So but the main thing I use is my brain. The main thing I use is the math. The math is a lot more important than anything. So I don't think none of my trades today were based on candlestick patterns, even though I made over $1,200 today. Boom, trading mostly UVXY. It's all about the math and the trailing stops and the one trigger of the other order. So it's all about the math and the trade management.
Awesome. That's our YouTube questions.
Okay. Let's see. Amit's asking how many different stocks I trade per day. Today, for example, like 90% of my trades were just UVXY because the thing skyrocketed. I trade up to maybe 4 or 5 instruments daily. It's seldom more than 5, but I may do dozens and dozens of trades like I did with UVXY in a single day. Let's see, Steven's asking, how do you get free or lower trading commissions at Fidelity? If you're a United States resident, you can get free commissions at fidelity.com for everybody. Unfortunately, my friends up in Canada, my traders in Canada, there is no free commissions in Canada. Canadians are such nice people, eh? But no free commissions for you. See, do I use any fundamental analysis? I don't know what that is. I'm a price action money trader. I just trade for money. I have no idea what the PE ratio is. What's the forward earnings look like? Beats me. If it goes high, I buy it. If it goes down, I sell it. If it goes higher like UVXY today, I nail it and I trade it quite a few dozen times. Let's see. Question from Kent about being an active trader. Why use Fidelity and get less slippage? I don't get any slippage with Fidelity. They fill within a penny every single time. So I used to use IB, which I love. Interactive Brokers and the Traders Workstation is a better, or it's a more comprehensive trading platform. But the Fidelity is wonderful. I highly recommend it because it's free and no slippage. So I don't get slippage with Fidelity. Let's see. From Tim's asking, do I ever trade Heike Ashen candles? I have no idea what that is. So no. Let's see. Oh yeah, by the way, I don't have any sales pitch. Hopefully I earned you guys' trust a little bit. Or at least your curiosity, like, who is this madman? Oh yeah, you can check me out on Tenor Sachs at tradingjazz.com. Well, anyway. And I've been all over the place. You can click on the About Me to see that. The main thing I give away is free. So, because I want you to get to know me and earn your trust over months and months before asking. So I'm not one of these marketers who are saying, for the limited price of today only, you can save 30% off our ridiculously priced $800,000 hoo-ha thing. And they don't even trade. I can't prove they trade. I'm not that person. I'm more a learn with me for free. And if I can earn your trust over a few months, then, maybe try the $7 trial for the live room. Okay, my live room, you can try for just $7 for a trial. But the main thing is, don't do that. Just get to know me. Just I'm here. I've been here 20 years, so I'm not going anywhere. You can get the free Saturday webinars. That's the best way to get to know me. And you can get a free day trading course too if you want. You can join the website for free. So let me earn your trust with what's free, and then decide if it's for you. And I'm not for everybody, just the smart people. But I should say I'm not for everybody. Just the people who actually want to do this. So I think we're about out of time, eh? I guess that's it. We are out of time. So thanks so much, Jeff Gibby, a wonderful guy. If I had a trading company, you'd be like the top of the recruit list to try and hire away from MetaStock. You're a great guy to work with. Thanks all the traders. I appreciate it. Stephen, does your wife think you're funny too? No, she thinks I'm funny looking. Jazz, what site? Tradingjazz.com. And my website is trademastery.com. Thanks, Jeff. Have a wonderful day. And thanks for being such a good advocate for MetaStock and showing these folks how to use a world-class platform. Highly recommend MetaStock. It's the best charting platform out there. So take care, everybody.
All right. Thanks, Ken. Let's go ahead and kind of transition over.
And I'm out. Take care, guys.
Thanks, Ken.
Thanks.
All right. Awesome. Okay, let's go ahead and switch over real quick. Hope everybody's doing well. Kelly, I'd actually, if you can hear me, I think it's time to give away a free prize. All right, so let's do a random number, anywhere between 1 and 8,908. Okay. And that is James D. with an email of header dot something something something. Okay. Thank you very much, Kelly. Shall I tell them what they've won? All right. Congratulations, James. You're the winner of our next prize. It's going to be 1 month of MetaStock. You might have heard of it before. It's been rated #1 in its price category 29 years in a row. It also includes a free month of our real-time data service, which is supported by over 2,000 reporters in 200 different news bureaus. It's also going to include our award-winning MetaStock program with everything we've been talking about with scanning functionalities and all that kind of stuff today. And in addition to that, we're going to include 1 month of the Rahul Mohinder add-on created by RMO. So congratulations on winning the prize. I will reach out to you as I get a little bit of time to actually kind of get the information I need from you for that prize, but congratulations. I do want to say thank you real quick for Stocks and Commodities for sponsoring all of the great sessions we've had over the last couple of days. They've done a great job in supporting us over the last decade or so and getting the word out. So they've got about 17,000 different articles in their archive. They've got about 1.3 million subscribers. You can see the exact number there. And they've been making articles and magazines since 1982. So if you do any of the MetaStock subscriptions today, they're going to give you a free 5-month subscription. And if you spend $300 or more, you're going to get a complimentary 2-year subscription. I also want to say thank you real quick to CMT, the CMT Association. I really appreciate their support of the events over the last several days. I hope you're enjoying everything. CMT Association is a great organization. Tyler came in and he did a little bit of a conversation about how much having a CMT accreditation can help you with a career in technical analysis or with funds under management and all that kind of stuff. So we're very, very happy to be associated with the CMT Association. You can find out more about them at the cmtassociation.org. So there you go. Of course, we're MetaStock. We're offering a special today where if you subscribe for a month, you'll get the second and the third month for free. We've been talking about like MetaStock and how it can help you do scanning for markets, testing of trading ideas, forecasting, real-time alerts and commentaries. Pricing on MetaStock just starts at $59 per month. You can get a 3-month trial for that price. Find out more at metastock.com/conf-promo. metastock.com/sales chat, or give us a call at 800-882-3040. So a couple comments. Great session, Jeff, and thanks for all of the great things. Freddie says thanks for the education and the entertainment. So let's go ahead and we have another guest today. Perry Kaufman is well known for his systems designs. He's actually created a bunch of systems for MetaStock that I'll talk a little bit about later, and including one that kind of corresponds with today's session and I'm going to let him, certainly not going to spoil that, but Perry is very, very well known in the industry, a very good systems designer. And one of the things that we've done is, like, for everything that he's talking about today, he provided some code for, and I'm going to include a link that you can actually download a MetaStock system test, a scan, and an expert advisor for totally free of charge. So of course that requires MetaStock for you to use, but Perry was gracious enough to allow us to create that for you. I've got that link here. I'm going to post it in both the chats, and you're welcome to get it as long as you've got MetaStock that will install for you. So let's go ahead and kind of transition over to you, Perry. Perry, how are you doing today? All right.
Can you hear me?
There you go. Okay, cool.
This
Yeah,
is
you're coming through, Perry.
high technology here.
Yeah. So I did share the screen. It should ask you if you want to share your screen, and I'll make sure that's coming through as well.
Okay, let me start my presentation over here, slideshow from the beginning. Okay, now share screen. Let me just, show screen. Let's see, is that the right one?
I can see MetaStock 2022.
My God,
So
it must
that's
be correct.
Yep. All right. Perry, I'll get out of the way. It's all yours. Thank you for coming and doing this with us.
I'm sorry, was that comment going
I
to
said
me?
thanks for coming, and it's all yours.
Well, thank you. I'm pleased to be here. So you want me to start this?
Yeah. Yeah. Let's go.
Okay, if everybody can see that. Well,
We
thank
can.
you all for coming. I don't know, can you see me? Do you want me to put do I get a picture up here?
You are welcome to put your camera up. I can send a request if you want to. It's totally up to you.
No one can see you. Share my camera. I think, okay. Well, I share my webcam.
That seemed to have worked.
Okay,
Well,
except
sort
that
of. I don't see it coming through yet.
oh, yes, I can't see me yet, but
I just see a blank box where your picture should be.
yes. Let me just see. Change webcam. Hide, always preferences. Webcam. I must be on a different one. Let's see. Ah,
There you go.
there we are.
I can see you. Yeah, that's it.
Yes, as you notice, I'm wearing a sweater the temperature in Chicago has dropped from 90 degrees to 50 degrees, kind of like the market. It seems to be correlated. I might start trading on the weather. So anyway, let's get this going. It turns out that I'm going to speak about volatility, and I think that volatility is second only to the price trend. And I think after today, after a number of days, you'll see that volatility is the most important way to reduce risk. And there are a lot of ways to use it. I'm just going to give you a simple way to reduce your risk. And it applies to essentially all stocks. It's going to be simple. It's going to be a big improvement. And I think you'll like it. And I use this. So let's move this along. First, a disclaimer. I'll just summarize this for you. It says that you shouldn't believe anything I say, that you have to test everything yourself. And it is a good policy. I don't like disclaimers, but we all use good examples. And so you really want to take the code later or use a spreadsheet and check it out for yourself, because every market's a little different. And while I believe this method applies to almost everything, it doesn't work for all markets. So check it out yourself, get comfortable with it, and then use it. So this is what I'm going to talk about today. First, risk in general. How do we measure it? How do we use it? And this whole presentation started because I started to look at these low volatility ETFs that are available, because I said to myself, of course, if I can get a good return with low volatility, then why not? So I did my own inspection of it, and then decided that I could probably do something simpler and better. And that's what we're going to try to do. So, oops, let's see. Oh, I didn't want to do this. Just so you are comfortable with the idea of risk, you should understand yourself in this. Some people are risk seekers and others are risk averse. I'm probably somewhere in between. I imagine most everybody somewhere in between. But you ask yourself, how would you bet on something with 50-50 odds? Probably not. 60-40, 70-30, 80-20. You should understand that for most trading in the markets and most systematic trading, and I'm an algorithmic trader, and just for full disclosure, I trade every day. I've traded for the last 50 years. I provide systematic strategies, fully algorithmic strategies, to various funds around the world, and I partner with them. So I'm involved in markets, and when markets don't do well, I go back and inspect the strategies themselves and try to find out what it is that's systematic about the problem that I can fix. And what I'm going to show you today is one of the most important and simplest of those fixes. So remember that if you're a trend follower, and I am greatly a trend follower, only 30 to 35% of all our trades are going to be correct. But the losses are small. And people seem to like that profile. It also means that when you have a profit, those profits tend to be much bigger. Mean reversion programs are usually very profitable. 80 to 90% of the trades are successful, but they have large losses. And if you really put it all together and you add the number of trend following signals that have losses in a row, and you add the number and you collect that value, you'll find that the risk of trend following and the risk of mean reversion, the risk of almost any system, is going to be the same. So let's look at risk a bit more. To me, this is an important concept. You can move the losses around. You can have a lot of small losses like trend following and big profits, or a lot of small profits and a few large losses, but you can't eliminate the losses. And in the end, they all come out the same. So I would generally separate your concept of a profitable system and risk control. You're going to find that if you're trading a trend system, almost any trend method will give you the same result. A breakout system, a moving average, linear regression. But they all have different risk profiles. And we're going to deal with those risk profiles now. So the problem with volatility, from my point of view, and this comes from, I believe, a lot of experience, is that above a certain volatility level, the risk is greater than the reward. Sometimes the risk is much greater. So we're going to find that level in this presentation, and we're going to avoid trading above that level. That's going to be our simple fix. So let's look at a couple of methods first, how we measure volatility. Okay, now I assume many of you have experience with trading and trading systems, so I'm not going to belabor this. But average true range is the way we usually measure volatility for short-term trading. It gives you a very good measurement because it includes the trading ranges of each day. And I've just shown you at the bottom here how you would calculate the average true range. Well, a mistake. What I did was show you the true range of the day, and then you would have to average a number of days to get the average true range. I use 20 days for almost everything in terms of volatility. 20 days is what's used in the VIX calculation for implied volatility. It's probably the fewest number of days that is statistically significant. And it allows you to move forward and get this variation in volatility, a variation in a number of things that keeps you in tune with the market. And so I'm going to apply 20 days for almost everything. Now, the other method of measuring volatility is called annualized volatility. It's what used by the financial people. And we're going to use it for identifying the volatility of stocks. And the way you do it, it's just this 2 lines of description. We calculate the returns of price, which is the price today divided by the price yesterday minus 1. And then we calculate the standard deviation of those returns over the last 20 days times the square root of 252. That turns the daily volatility into annualized volatility. If you wanted, if you were using weekly data, you would divide the close of today's of a Friday by the close of the previous Friday and multiply by the square root of 52, the number of weeks in the year. Again, I use 20 days. Now, 20 days means that the volatility can go over 100%, because what you're doing is you're looking at the volatility over the last 20 days and you're expanding it to make believe it's a year's worth of volatility. And so it can be distorted, but it doesn't really matter. As long as you constantly use 20 days and you figure out where your thresholds are based on those 20 days, it will always be correct. So here's a picture of the S&P. I'm sure you're very familiar. with it. And here's the way we cut. Here's a little spreadsheet item that shows you how you calculate it. And I did it on the right. You'll see the yellow highlighted is for 5 days. I did 5 days because I could fit it onto this little example. And so I show you that the cell I7, which is highlighted in light blue on the right, is the average. And notice I use offset. Offset is very convenient. It allows you to change that number 5 to 6 or 10 or 20, and all the calculations will be automatically changed. So these 3 cells show you how to do the calculation. And by the way, at the end, I'll give you my email address. You don't need to try to copy any of this down. If you want, just send me an email. I'll send you a copy of the presentation. So this is really going to be a spreadsheet that shows you how to calculate the average true range in column I based on the return the average true range is based on column H, which is the true range, and the annualized volatility in column J is based on the returns in column G. And then we do, I'll show you what that is, the last column I haven't gotten to yet. So this is what it looks like. If I do the 5-day average true range, it shows up on the left. And if I do the 5-day annualized volatility, it's on the right. And they don't look the same. And they don't look the same because the average true range deals in the prices, and the annualized volatility is the percentage return. So when you deal with prices, as the price gets higher, the trading range gets bigger. And so you see this precession on the left where the average true range gets bigger in the current data, while the annualized volatility does not. Now that's easily corrected. We can turn the average true range into something very similar simply by dividing the average true range by the current price. And that turns it to a percentage. And now you'll see that these 2 charts are very similar, not identical, mostly not identical because the scale of the average true range is a little different on the left than on the right. And you could use either one to represent volatility. I use annualized volatility because I always have. But there's no reason why you couldn't do either one, whichever you like the most. So that's it for volatility measures. You may have already known all of this, but I just thought I'd go through it because we're talking about volatility. Now, this all started, as I mentioned, because I wanted to look at low volatility funds. And I wanted to actually trade or invest in a low volatility fund that had decent returns. And as I say here, we would all like to have less risk and more return. So I looked up on the internet some of the low volatility funds by the major companies, and I found these 5. All right, and I won't bother naming them. You can see them here. They all say minimum volatility factor, low volatility. They all imply that they're low volatility. However, we will see differently. Here's a chart of these funds, and I've included the S&P, but the S&P is on a scale to the right because the ETF prices are all much lower. And so you see the telltale sign. In the end of 1990, you see where the S&P in blue took this large drop. And interestingly, you see that the low volatility fund in orange at the top, ACWV, also took a large drop. It makes you suspicious that low volatility funds may not be as low volatility as we expect. Excuse me, I need a drink. So let's look at the volatility of these low volatility funds. Now, before 2019, they may in fact have been low volatility, although I still see some numbers going up above 35%. And I think in an earlier presentation today on volatility, and in general, when volatility gets above 0.3, it's no longer really low. But here's the big problem. The big problem is that although these funds started before 2019 and may have appeared low volatility, we then get this gigantic spike at the end of 2019 that shows high volatility. Now, this is a case of, as you've heard the old phrase, so Mrs. Lincoln, other than that, how did you like the play? So, this is a case where this one volatility spike defies the premise that it's low volatility. You could get wiped out if you're in the wrong place when this spike occurs. And so it points out something very important. Even if you're trading stocks that have no history of having large volatility or a volatility spike, you still need to protect yourself because it could happen at any time. And if you have that volatility protection and it doesn't happen, fine. It doesn't matter, but it will matter if something happens. Look at Walmart today, look at Target, look at these stocks that we normally rely on to be dependable, that go down 25% in one day. It's just completely unexpected. And if you're not prepared for that type of move, you could suffer that loss. So let's look at this more carefully. I did a little analysis here of these low volatility ETFs. And on the left, you see the return of SPY, the ETF spider, is 15%. And this is, I think I did this all from 2010, which was a pretty good period. And you see the volatility was 16%. Maximum drawdown was 33%, which probably occurred in 2019, which gives us a ratio of return to maximum drawdown of 0.45. Now let's look at the other ones. The returns of these other low volatility stocks are much lower. And the returns of the one at the bottom, EEMV, is almost non-existent. But the volatility of all these low volatility ETFs is only slightly smaller than the volatility of SPY during this period. And the drawdowns are the same. That's not such a good deal. You can see by the ratios are all lower. So I have to say that I couldn't consider these viable low volatility ETFs if the maximum drawdowns are all the same and the returns are low. So that leaves us to do it ourselves. So I believe that it's easy to do better than these low volatility ETFs with one simple rule. And the rule is we're going to exit our position when the volatility gets extreme. And we're going to re-enter when the volatility comes back down and is not extreme. And the only thing we have to figure out, what is that level that is extreme? Now, when it comes to volatility, markets have different personalities. You can certainly say that Tesla has much higher volatility, and NVIDIA have much higher volatility than Boeing, or it's actually hard to pick one now because a lot of these stocks have shown that they have volatility from time to time. If you have an ETF that has, and I use here such as energy, but any ETF has a bunch of different stocks. And because that means they're diversified, their volatility will be lower. And so I've noticed that Tesla volatility can get to be over 100%, but the volatility of an ETF is unlikely to get above 50%. And that's because of the diversification. Now, if you have a diversified portfolio like I have a trend following portfolio that has quite a few stocks in it, and it won't get above 32%, or let me not say that, it can get above 32%, but 32% is my threshold. Above 30%, above 32% is high volatility. So while all of these have a slightly different profile, and you may want to look at them differently, I have found as a default that a volatility threshold between 0.3 and 0.35 works pretty well on a broad selection of stocks. And because when I trade, I sort through 400 or 500 different stocks, I can't be assigning different volatility thresholds to each stock. So I just use 31, or in this case, 30. 31, 32, 33 will all give you about the same result. I use that and I apply it to all the stocks, and I look to see which stocks are doing the best. And it's the way of generalizing a volatility filter. You may, if you trade a small number of stocks, you may decide that you want to look at the volatility of each stock individually. You can do that. I find there's nothing wrong with that. But as a default, using something between 0.3 and 0.35 works pretty well. And I'll show you that with some examples. So here I say I ran a test to try to find whether I could find stocks, individual stocks, that had better performance than the ETFs. And this is without a filter. I ran through my favorite 450 liquid stocks over the past 10 years. And this is the way I rank them. J&J was at the top. It had a 12% return and the annualized volatility of 16%. Not too bad. And I have here maximum volatility, minimum volatility, and maximum drawdown. So you probably want to look at the annual rate of return, total volatility, and maximum drawdown. And you see these all have, well, some of them have much lower drawdowns than the ETFs. Coca-Cola, KO, had a pretty big drawdown of 36%. Duke, I assume is Duke Energy, had a pretty big drawdown, but some of them aren't too bad. Verizon had a 10% return with a 20% drawdown, not so bad. So J&J was at the top, but that's the best I could do. It still wasn't very satisfactory. So just trying to pick these stocks and trading them without a filter or trying to correct for volatility doesn't seem to be really what I want. And so let's look at some of these better stocks. I picked Aflac because it had low volatility, even though its returns were low. And what do you see? You see a picture very similar to those ETFs. We get low volatility most of the time, and then wham, we get this big volatility spike. And And again, that's not acceptable. But you see on the percentages on the left that for the most part, the volatility stays under 30%. It does spike up here and there. But like the ETFs, it looks very similar. So let's go further. And now let's compare the XLE, which is the energy ETF, with the financial ETF, XLF. And this goes back to 1999. And you see in 2008, we had this spike. And then in 2019, we had another spike. But it's interesting because you think that the XLF, the financials, would be less volatile than energy. And it is, but not enough to make a real difference. In general, it has lower volatility, that the energy ETF spikes up a bit more and more often and a bit higher. But, you know, it's good to look at these things so you can see that volatility is all over the place. And it doesn't really matter what you're trading, you are going to see volatility unless you protect yourself. Oh, I had some comments here. Anyway, it's just this one comment that that there seems to be a separation somewhere between 30 and 40% that separates high and low volatility. So now, let's apply our volatility rule. And I said this was going to be a really simple rule. We're going to use a volatility threshold of 30%. And that means that annualized volatility of 0.3 using the last 20 days. Okay, pretty simple. One simple measurement. And then we look to see what the volatility, and the 20 days keeps rolling. We exit if the volatility goes above 30%, and we re-enter if it falls below 30%. Now, you might think that that's going to give us a lot of whips. We're going to get in and out and in and out. It doesn't really happen. But later I'll show you that we can get out when it goes above 30, and we can set a lower band to get in, like 28%, to get back in. And that might satisfy some of you in terms of a little band of protection. So we're going to compare the buy and hold results on the left for these 4 stocks that I pick. And again, remember, you may think that I'm cherry picking these stocks. I'm not. But you owe it to yourself to try this out on your stocks. And I'm sure you'll be quite pleased with the results. So on the buy and hold, you see that Aflac had a return of 5.5% and a drawdown of 72%. Pretty big. If we apply this volatility ratio of 0.3, we increase the returns from up to 8%, and we reduce the drawdown by about 60%. That's quite an improvement. So just look at the column of maximum drawdown under the buy and hold: 72%, 91, 42, 54, 57. And then look at the drawdowns in the center, where it shows the maximum drawdown of the filtered. They're all in the 30s. To me, that's a remarkable improvement. But how does it affect the returns? You know, we showed that when you reduce the maximum drawdown in the ETFs, the returns suffered. But in this case, Honeywell returns doubled. P&G was the one that went down. Actually, it didn't help Lowe's either, but you had on Lowe's, you had almost the same return and say a 40% reduction in the drawdown. And Pepsi-Cola, it increased the return and reduced the drawdown by about 40%. On the right, I show you what I call the payout ratios, which is the annualized return divided by the maximum drawdown. So you can see actually how these interacted. So for AFLAC, the ratio went from 0.07 to 0.25. In fact, if you look down the list, the only one that hardly changed was P&G. But still, I think it points out that a simple rule which says get out when the volatility goes above 30%, 0.30, you are avoiding not only this extreme risk, but you're not impacting your returns as much as you would think. So I did a test here to exit. I don't show that it. I have an error. I'm sorry about that. The re-entry on the right should say 0.28. But I'm not going to go through these numbers. The point of this chart, this table, is that we exit at 30% and we re-enter at 28%. The returns are marginally better. So you can do that, but it's really not important. And you can play with it. And Jeff's MetaStock code that he'll give you allow you to pick an exit level, an exit threshold, and a re-entry threshold. So you can figure it out for yourself, and I encourage you to do that. So let's just start to take a look at some of these returns. Here's AFLAC, and on the left is in blue would be the buy and hold returns, and in orange you see the filtered returns. It didn't really do much. If you could see in 2011, there's a horizontal bar. And actually at the very beginning of the chart, there's a horizontal bar. And then in 2019 into 2020, there's another horizontal bar. If you look at the right, it shows you the volatility, and there are 3 periods, and you see that the orange line drops down to 0, indicating there's no volatility because we're out of the market. And so we're out of the market on those 2 volatility spikes earlier in this period, and we're out of the market in the big spike and the little spike that follows it afterwards. I think that's pretty good. And this is what it looks like in terms of the drawdowns. You'll see on the far left, you see the little horizontal bar in blue, and again, the horizontal bar in blue in 2011, and then in 2019. Now, it doesn't control every drawdown, but it certainly appears to control the biggest drawdowns. And personally, I think for such a simple rule, it does a lot of improvement. So let's look at lows. I think that's the way you spell lows here. And here's a case again. On the far left, you see that we had a horizontal piece. It was a bit late getting out. On the other hand, it did much better in 2019, avoiding that, well, the full brunt of the drawdown. And I just wanted to point this out It doesn't always eliminate everything, but I am confident that it will eliminate a great deal of the drawdown. And remember, we're going to use this single value of 0.3 or 0.31 or 0.32, and we're going to apply it to all the stocks. So it won't work perfectly on all the stocks, but you should get a noticeable improvement on, I would say, 90% of the stocks. So let's just review these rules. And again, I remind you the stocks can differ in their volatility, and you can test them individually. So I have found that a filter between 30 and 35% works generally overall. You might want to make that filter larger for Tesla because it could filter out a lot of trades. Stocks that appear less volatile now, that don't have a history of volatility, should also have a filter because we never know when that volatility will appear. So, and again, I want to remind you that different index markets are diversified, so they tend to be less volatile. There will be different personalities in different markets, so you're going to have to check it out for yourself. Here's another example with Apple. Here's a case where we used Apple. I say I used 0.33. I can't say that I shouldn't have used 0.31 or something, but I did a lot of testing and I tested various things, and I'm just happened to have this one with 0.33. You'll see that it actually improved the results on the left of trading Apple by using this filter. And you see on the right, it reduced the volatility, reduced the drawdowns most of the time, but this one in 2015, 2016, it did not reduce. It doesn't work all the time, but it sure does look good over time in reducing the overall risk. And here's NVIDIA. Well, it didn't really do much to help NVIDIA in those early parts of the bull market, but it did help in the last 4 or 5 years. Again, I'm showing you these to show you that it's realistic, that you can't expect it to be perfect for everything, especially if we're trying to apply the results to a broad set of markets. And now I thought it would be cute to show you AMC using 31. On the left, you'll see that it makes no money. I guess it makes just a fraction. On the right, you'll see it does it because the volatility eliminated almost all trading since 2017. And I think that turns out to be good. So, I like this filter. I do use this filter myself. It is one of a number of risk controls that I have, but it is up there in importance. Now, Jeffrey was nice enough to provide code for me, and he will make this available to you. But for those of you that do code in MetaStock, it's really pretty simple. You'll see that under the buy logic here, DR is the daily returns. Let's see. AV, the next line down, is the annualized volatility. You see it's the standard deviation, the 20 of the number of days back, and the square root of 252 is the same as we used before to change daily to annualized. And then EX is the test for the volatility filter over 0.3. And BC is the test for the re-entry under 0.28. And then we plot BC. And for the, that's the buy logic. And then we have exit logic, which is almost identical. Pretty simple. And you should be able to do this yourself. Let me just show you what it looks like on a MetaStock chart. The top two red lines, the top red line is the exit at 0.3. The bottom red line is the re-entry at 0.28. I've put gray, blue highlighted boxes around the periods where the volatility goes above the red line. And that helps you see the periods in the market that we are in and the periods of market that we're out. So you'll see on the right, the two bigger boxes. We're out of the market when it takes a pretty nice decline. We get in for a few days when it rallies, and then we're out again when it's very volatile. We're back in at the end. We do have a drawdown there and then a recovery. But this will allow you to see what you're filtering out and what you're not. So this was for Exxon. This is for the U.S. Oil Fund, USO. And you'll see again on the left, it goes out above the red bar, so we're out. It stays in for the entire period, which is a nice little period of up run, and then it's out for a long period. So, you know, you may be disappointed that you're not in the market much, but if you apply this to a large number of stocks, you'll find the stocks that are in the market and ignore the stocks that are out of the market. Or if you have defined your portfolio, there's no reason why you have to trade every day. When the market's too volatile, you are really exposing yourself to a lot of risk, and the reward is not very, very satisfying. Another example, here's Tesla. We all like Tesla. And here we have the same volatility of 30% and re-entry at 12. Remember, I said that the Tesla volatility threshold could be set much higher because it's very volatile. But here's a case just using the same threshold as everything else. And it is out in the first period. It does miss a little uptrend. In the second period, it does miss a little uptrend, although there is some volatility there. But then you're in the market for this really nice move. And at the end, you're out for this extremely volatile last move. Personally, you do have to give up some return sometime in order to protect yourself from the risk. But the overall result, I think, is very rewarding. So let me make a few final comments here to summarize this. This volatility filter works for most stocks, but not all. Now, I didn't find any that I was disappointed with when I was testing, but certainly some work better than others. And I believe if you were to adjust the volatility filter, you would find that there is a level for every single stock at which the risk is greater than the reward. So you may not trade the way I do, where I filter through hundreds of stocks, and so I can't assign specific levels to each stock. So I'll use 31, 32 and apply it to everything. And again, you'll have to, in some cases, you will give up, like Tesla, some returns to avoid large risk, but I think that's the better choice. This may not be a one-size-fits-all solution, but it does have but it will work, I believe, for all stocks at some level. Now, I said not all stocks need a volatility filter, but it's really not true. remember I said that the stocks that have been low volatility may not be low volatility in the future. And so even if it has never, the high volatility level of 0.30 has never been triggered, you should have it in anyway. Because if that market jumps, you want to get out. So if I don't want to specifically adjust a stock to a volatility level, I use a level like 0.31. And I really encourage you to try this out yourself. It is so simple. And yet you saw from these results that it could be, making a tremendous improvement in perhaps improving returns, but certainly reducing your drawdowns. And that is the presentation. If any of you want a copy of this, please just send an email to kaufmansignals@gmail.com. And I just want to, a little bit of promotion here in case you don't know my books. The one on the left, Trading Systems and Methods, is considered the Bible. It's 1,100 pages. It has everything in it. It's more of a reference manual, but it does start you off easily and work through to the more complex. The one in the middle is probably Kaufman Constructs, the one most appropriate for the people that are listening now. It takes you steps through how to construct a trading system from the very beginning to portfolio construction and volatility control of individual trades all the way through to portfolios. And the last one, Learn to Trade, is for beginners, not stupid beginners, beginners through intermediate that want to have some sort of a rule-based system. And it will hopefully teach you that. I've gotten very good feedback on all of them. They're all on Amazon. And you can look at our website. We do have subscriptions to our trading systems. We have a number of different trading systems for both stocks and futures. And each month we post our performance, and you can check that out. And that is the presentation. Thank you all for being patient with me. And
Good job,
Jeffrey, are you there?
Yes, I am. Can you hear me?
I can hear you.
All right. Yeah, I thought you did a great job. I have a question and a comment. If you can take a question and a comment.
I can do both. Do you want me to take this screen off?
No, you're fine. Let's leave it up so that people can type it out and take pictures. So Bill wants to know, there's upside volatility and downside volatility. Have you thought about using up volatility and only filtering out down volatility trades?
That's a really good question. I was going to include that in this presentation, decided it was going to be too complicated. There are a lot of people that measure what we call semivariance. Semivariance is measuring only downside volatility because they believe, in fact, that's what they want to look at. They want to see what happened when there were sell-offs. But in fact, I think it's really the wrong way to do it. It turns out, in all my experience, that when markets are volatile to the upside, they can turn around and be just as volatile to the downside. And today is a very good example in the market of that. Volatility is volatility. And you can't just start separating out little bits of it. So I strongly believe that you use a volatility measure of both up and down together to give you the correct measurement of volatility. I don't know, did I go off on a tangent?
Great.
Or was that?
No, I thought, well, I'm the tangent king, so I thought you did great. So I lied, there's a couple comments. Michael
Sure.
says, love you and your books. Thank you very much for sharing.
Oh, my pleasure.
MC says, where can you go for free and get this level of knowledge from a stock market giant? Way to go, MetaStock. Thank you, Perry. So thank you, Perry.
Oh, again, my pleasure.
Let's see. Martin says, thank you. Great presentation. Jeff, who has a very good first name, says, great presentation. Quick question on max drawdown. Are you using a particular look back period?
You know, the max drawdown is always calculated by keeping track of the peak equity or the peak profits throughout the entire period you're looking, and subtracting that from the current profit level, so you get a negative value. And that's the way it works for if you're using net asset value, which is normally the way you do it for stocks. You can't do that for futures, but if we limit this just to stocks, we keep track of the performance returns in percentage. And then we keep track of the peak value of our equity in percent. So you've made 200% peak profits, but you've had a drawdown, so your profit level is now 180%. So you divide 180 by 200 minus 1, and you get whatever it is, a 10% drawdown. So that's the way you do it for all of these drawdowns. You can keep track daily of the individual drawdowns the way I did. I didn't show the maximum drawdown on those charts. I showed the daily drawdowns, which I find more interesting to look at. The maximum drawdown is just a single number, but you want to see the various drawdowns that occurred through history. And so you always take your peak performance and your current value of your account, and you divide the current value by the peak performance each day, and then plot it, and you'll get those nice charts that I had.
Awesome. That's it. Thank you, Perry. I appreciate you coming in and spending some time with us. That's really good.
My pleasure. I had nothing else to do. So.
All right. Thanks for coming.
Okay. Are we done?
That's it. Yeah. I'm going to kind of wrap up. Appreciate your closing up another great day in the conference. Thank you, Perry.
Thank you.
All right. And then I'm going to kind of repeat how to get this. Let me just turn the presentation over to me. Perry did actually show the system that he helped me design. I had a little help from William to get that code, and it was not really that complicated, but we just put it together. The system that we designed actually he showed the template, has the indicator on top that shows the annualized volatility and the entry and exit levels. Those were the two red levels. You can download that. In addition to that, it included an exploration, so you can actually run scans on it to see what has entries, and a system test, so you can test it and see how well it works. And it did test very, very well. So Julia says, awesome presentation. Yeah, Perry did a really good job, brought us home today. So here's the URL for that. I typed it in the chat earlier. I think it's still on my clipboard, so I can probably paste it right here. And I'll have actually, if Kelly's got it already there. So it's free. It does require 18 because I built it in 18, so it does require 18 to use. If you haven't upgraded to 18 yet, you should. I love 18. It's got snappy new charts, very pretty, easy to use. I think it's one of the strongest upgrades we've had in a decade or so. I love it. So, but aside from that, as long as you've got a subscription to MetaStock with 18, you should be able to just use it free of charge as a gift from Perry. So, Perry, thank you for that. Thanks for helping us with that. And there you go. Just get that for free. We do also have a system called Perry Kaufman's Rapid Strike that's available. If you like that, you'll love the Rapid Strike. It has quite a few different methods, including the fast strike, mean reversion, the short cycle, and the high momentum strategy. So with those ones, they are complete products. It's going to include explorations for finding high momentum, short cycle ETFs, futures, and a mean reversion system. Very, very cool systems. They include, of course, system tests that you can run. Expert advisors. Normally, this is a one-time cost of $499. Here at the conference, as a bonus for getting it, you'll get $399. Of course, we're going to back that up with our 30-day money-back guarantee. You'll also get a trial to MetaStock if you need it. You can sign up for that at 800-882-3040 or metastock.com/saleschat or metastock.com/comp promo. So Michael says, another great day, Jeff. Thank you very much. I think it's going well. I appreciate everybody for coming, staying here. Let's go ahead and go through the schedule for tomorrow real quick. We'll thank our sponsors, and then we will see you tomorrow. So right here, we just finished up with Perry Kaufman. Good job, Perry. Tomorrow we have another exciting, great lineup with full day, another 8 hours. Rahul Mohinder is going to kick us off, one of my favorite presenters. He's going to do a great job. Alex Cole is going to come in with Tyler Wood. They're going to talk. Melissa Armo has been very good. She's has a really cool gap method that she's going to be talking about in MetaStock. We're going to have Dan Passarelli. Well, there's me. I'll be talking about some of my favorite things in MetaStock. We'll have Fausto Pugliese. Tony Hansen. We're going to have Tony Hansen in MetaStock, in the MetaStock conference for the first time. And then John Thomas. John, I remember John has just some interesting takes on the market. It's going to be a great day tomorrow. So I hope you can make it. If you're watching this on YouTube and you want to kind of qualify for all of the prizes and the stuff that we're giving away, go to metastock.com/traders-conference, or just click on the link that Kelly is going to put in the chat right here. So another great day tomorrow, another full day tomorrow. We look forward to seeing you there. So lastly, I'd like to thank Stocks and Commodities and CMT for sponsoring the event. And if nothing else, I'd encourage you to try out MetaStock, which has been rated #1 29 years in a row. And we've been talking about it all day, but scanning is my favorite. Testing is great. There's a reason it's been rated #1 29 years straight. Cost $800-882-3040. Metastock.com/conf promo or metastock.com/saleschat. And we'll be happy to help you set up an extended trial for that. So thank you guys. Appreciate it. Looking for any last comments. I don't see them. We'll see you tomorrow.